Ladies and gentlemen, welcome to the Midday Market Monitor. It's not every day whenever you have such a green day in the portfolio. For me, many people know Nvidia is by far my largest position, roughly over 50% of my portfolio. That stock is up 4.4%. So I was taking a look at my overall account, and we are nearing all-time highs because it's not just Nvidia that's moving. We also have Shopify being my second largest position. That company is doing very well right now. Shopify is up 18.8%. It's been sort of going up and down, but man, I got to clear my throat. But overall, unbelievable day. These don't come around all the time. Palantir also doing extremely well. Some of the neo clouds are bouncing around, but overall, big return from where we saw whenever Leopold ended up selling out. So those are looking really good. You can kind of look to the Nebiuses of the world, which, is flat today, but over the last 5 days has had quite a recovery, up 50% in the last 5 days. So the portfolios are in a major bull run right now. Steven, I got sent a video of you saying that I'm first in the draft as well. So yeah. Now, that's what I want to talk about. I've got some guests joining me today, 2 separate interviews. One's going to be mainly about the sort of Palantirs and the Zetas of the world. Then the other one is going to be more on the AMD and SpaceX side. Now, in terms of the actual draft, wow, I am actually pulling away. It's still very early days, but I do like my portfolio construction. That part has remained a big consistent in the portfolio. So Microsoft, Palantir, Rubrik, the only thing that kind of stands out from my portfolio that isn't really performing well and kind of doesn't fit the trend was QXO. And it's kind of funny. Any of the steals that have happened in this portfolio building or the stock draft game, most of the portfolio steals, CoreWeave, QXO, Rocket Lab, any of those types of names really didn't perform well. SoFi's doing all right, and Palantir obviously is doing very well. But yeah, Zeta did crush. Honestly, Zeta did crush. We'll talk about it. Up 4 now. What is moving right now? What's moving the portfolio? Okay. Is it like Vertiv and these sort of things? Yeah, Vertiv's up 4%. A lot of the time, much of the gains can just come from not having losers. I don't even think I have the biggest winners in the draft, but I don't have many losers. Yeah, Steve has a name up 43%. Oh my gosh, Zeta up 43%. What a snag. But he has CoreWeave and MP Materials and Oracle that are holding down him from being first place, or else absolutely he would be, right? You need those big winners. But I just have very few large losers, nothing in the 20% losses. So that's looking okay. QXO is honestly the one that I'm worried about the most. I'm not worried about ASML Hood and Vertiv. So honestly, I love this. I don't even know. I'm curious if everyone is going to utilize their 2 position changes come September, whenever we do our first portfolio change. I might not change anything. Maybe QXO, if I can get a good trade from Steve and swap out for CoreWeave or something like this that I would really like in the portfolio. But aside from that, I mean, I'm not looking to just cut my losers. I don't want to get rid of Robinhood or ASML or Coinbase or any of these names, because the back half of the year could really gain on crypto movement as well. It's not something I want to write off. Now, we are going to be live for a very long time today. We have Sandisk earnings tonight. We have many earnings tonight, and in fact, some of them that are in the draft, like Mercado Libre, which I have in my draft. So this is going to be, very important for us. But we also have other things that are in my own portfolio, not just the draft. So we have Chime tonight. Okay, we have Mercado Libre, which is also in my real portfolio. But we also have things that are important to my portfolio, like Sandisk, AppLovin, Western Digital. These sort of company, even Dave and Block definitely have things to say that might be important for companies like SoFi. They're not necessarily nearly as related as a Sandisk would be to other memory names. But Sandisk is the call that we're going to be listening to. I'm going to be live today from essentially 1 all the way to 6:30. So if you don't want to stick with me for the next 5.5 hours, leave, come back, make sure you're subscribed, hit the notification bell, whatever you got to do. But we are going to be live, constant interviews, reviews of different earnings from yesterday or this morning. I've got some big topics that I want to cover for Shopify, for Zeta, for SpaceX, these sort of companies that ended up showing off great earnings. I also have not looked into Upstart's earnings just yet. I just have not had time. I've listened to like 5 earnings calls between, last night and today. And not one of them was Upstart. So maybe doing a little bit of due diligence there. I'm pretty sure that stock is up after earnings. It was last night. Let me go ahead and check that. They're up 3%. That's really surprising, actually. They were up like 15% earlier on. But yeah, it definitely gave up a lot of those gains. Yeah, they got all the way up to $36. That's almost a 20% move at the top there, only to then drop back down and only see a 3% gain. Okay. Yeah, during earnings days, we do the we go full time. Meanwhile, while we're live, Marshall's on the back end. He'll be releasing our full Reddit review that we did, as well as my conversation with Amit, another 50 or 55-minute interview. So lots of stuff coming out these days. Okay. That said, let me make sure that my guests are coming on at the right time, and I will check CNBC as well. Who here in the chat, be honest, okay? Your anonymity does not matter. Do you own Shopify, and are you holding past these earnings? This is not a name I talk about often. I feel like anytime I do talk about it, people drop off the stream. But I think today is an okay day to talk about it because I think it really goes to highlight that if a company can continuously compound at a 30% rate for multiple years, that customers, that the larger that they get, the longer that they stay on Shopify, that retention goes up the larger that the customer is. That these types of businesses can compound at unbelievable rates. And you can point to valuation and say, hey, that company is expensive. But if it continues to outperform, like a Costco, for example, Costco does great earnings, but they're growing at lower rates than, let's say, most businesses, but, a Palantir or something like this growing at 93%. Not everything needs to be at hyperscale. Some can just be at like extremely large growth, like 30%. It's not 90. I completely get that. And Shopify in its own right is expensive, but it's always been expensive. Because people believe in their ability to do $115 billion of gross merchandise volume, like essentially how much money is actually flowing through their platform. And that next year it's likely to be 150 billion. And then the next year it's going to be 210 billion. And then the next, you know what I mean? So if you can constantly project out that this company is going to head to potential years where they're doing $1 trillion in payment volume, well, then are you willing to pay up for that? What's the likelihood that Shopify continues to outperform? And I think that the likelihood for me is that that's going to be a very, very high chance. You have 2 massive executors running this business at the same time, Harley Finkelstein and Toby Lucky. And they're both extremely young and extremely good at executing. And not only that, they've been able to manage this business as it's gotten very large. They really haven't found too many problems that they have not been able to tackle. You've got 8 River Systems and these sort of things. Like you can point to faults in Shopify's past. But then the valuation reflected that during those times, right? The stock sold off. But the reason why you're seeing an appreciation in Shopify stock today is that not only did they end up executing this time around, but that the guidance looks extremely strong. And it actually looks like the company is speeding up, even though they're at their biggest amount of, gross merchandise volume, overall attach rates, payment volume in general. And now we're seeing faster and faster growth rates. This is like a little bit of like what we're seeing with Meta as well. It's like, okay, this is the biggest the company has ever been. And we're also seeing faster and faster growth rates. It's a really good sign. So the fact that they're guiding for, 30+% rates for Q3, beautiful. I actually think so we'll talk about it here in a second. We'll do a little Shopify review. But growth actually slowed down quarter over quarter. So it went from like 34% down to, I think it was like 29% or something like this. But if you actually look at the comps year over year, like what they grew off of, the comp last quarter was actually very, very low. It was like 22%, and then they grew 34% off of it. One of the ways I kind of look at like a rule of 40, like combine the two growth rates to sort of see how much have they grown over the last 2 years, right? 22 plus the 34. Or this time, the comp was on like 31% and they grew almost 30%. So it was like roughly about 60% between the two of them. It actually ended up accelerating. The 2-year CAGR actually accelerated quarter over quarter, if that makes sense. So really, really good quarter from Shopify. Great growth off of a really great comp and putting up good margins, better than expected free cash flow margins. Accelerated year over year. Some people look at it in the wrong way. They have a lot of their free cash flow comes on the back half this year. So the fact that we got like an 18% free cash flow margin in Q2, you look at the past years and how much they actually guided for was roughly about 16%. So the fact that they put up 18% and then the real, 20+% comes in Q3 and Q4, that's the really good sign to look for Shopify. You say CAGR? How do you? I feel like I'm mispronouncing everything. How do you say CAGR? CAGR. Compounded annual growth rate. CAGR. You pronounced it right. I just thought we were going to party. Okay. All right. That's fair. Okay, let's go on. I'm actually going to go through a little bit of my Shopify review right now. And then, okay, wait, no. Let me stay on track here. What we're going to do is watch a CNBC interview and then make sure that my guests are coming on at not the exact same time. Let's hear a little review of SpaceX's earnings last night. Stock is down today, roughly 7%. Maybe a buying opportunity? Who knows?
Let's look at SpaceX. It is another big story today for obvious reasons. On the other side of the earnings report, stock's down about 9%. It was down more than 10, I think. So it's a little bit off of that level. Their AI costs are soaring. I don't know if anybody is actually surprised, by that. The conversation, I think, going in part was, how is this company going to be defined by those internally, and how are investors going to define it on the outside? Are they going to be more viewed as a hyperscaler type business, investing heavily into the AI future? Well, their AI costs are soaring, and I guess the market's not happy about that. But you also had the lockup, which comes tomorrow, and then you have a stair step as well, which is going to be significant in terms of the supply coming on the market after that. You do have a number of target raises and lowered today, which is interesting. The battle on the street over where this company, at least in the near term, is going. Kevin Simpson's been a shareholder. He joins us now. We wanted to get his take, hear from somebody who's got some skin in the game on this. So what's your feeling after the report, knowing the lockup is coming? I've got 3 targets that are lowered today and then a couple that are going up. So where would you come down on it?
Yeah, I mean, I think that there's a good reason to be oscillating back and forth in terms of price targets, Scott. But if we break it down, just looking at the operating report, I thought it was fantastic. Now, the stock reaction was a completely different story. These things are not moving in lockstep. And I think that makes sense because my enthusiasm for this business hasn't waned at all, but it's far different than my enthusiasm in the stock, in large part, Scott, because of the lockup that you mentioned. The first of which we're going to see tomorrow hit the street. I want to wait and see how this stock trades as we see how these shares are absorbed into the float. But if we look at it just as the headline, the report was good. I mean, revenue grew 92% to 7.8 billion. Starlink revenue was up 66 billion. AI revenue grew 247%, but it's that $18.4 billion of CapEx that causes the problem for the street. And they're just like all of the other hyperscalers, Microsoft, Meta, Amazon, Alphabet, now SpaceX. If you're going to spend this kind of money, you need to show the shareholder that there's some path to a return on investment. And I'm not sure that that's a story for the next quarter or two, but I think as an investor, if you're 2, 3, 4 years into the future, this is an incredible business. We're going to own it. But interestingly, we have not added to it. We put a 0.5% position in the QDevo growth ETF at 160 because it was included in the ETF. And we've watched it come down patiently. And just because a stock pulls back doesn't mean you need to add to it. I imagine that we will, but I want to see how it trades with these new shares as part of the marketplace.
How much of the lockup do you think is already in the stock? You know, it's come down obviously a tremendous amount from the IPO.
A lot. I'm not going to, I mean, I'll be surprised if this thing sells off a lot tomorrow because of it. You're talking about a stock, Scott, that's down $100, almost 50% from the highs, going from the low 200s down to the low 100s. A lot of this has embedded into this price action. This is no surprise. I mean, it is the talking point. I think you even led with it in the introduction here to the name. This is a 24-year-old business. It was an inaugural report. It was really, really good on one hand, but that CapEx is a big deal. This lockup is a big deal. And I'm sure that Jimmy's sweating from a valuation standpoint saying, you know, I can't value this stock. And I don't disagree with him, but I feel like this is such a revolutionary, generational change in business if it works down the road. We know about Starlink. We know about the AI investment. Can they monetize it? And boy, they can make Starship a reality. The sky's the limit.
Yeah, we'll have to wait and see on that. We know that. Kevin, thanks. Kevin Simpson joining us with his commentary around that.
That AI CapEx spend, the total amount of CapEx, $18.4 billion, something like 15 of that goes towards their AI side, data centers, chips, networking, these sort of things. The interesting part is you can kind of look normally to the Googles of the world, to the, well, not Microsoft really, but the Amazons for sure. And you have a mix between Trainiums and Nvidia products and, you know, the whole mix of different competitors. Google, TPU, Nvidia, who knows? Whenever you look at Elon's CapEx, which is expected to be explosive, right? Tens of billions of dollars per quarter, they said in their earnings call that they are going to be exclusive to Nvidia. Exclusive. So let's take a look here, and I'll read you out the quote that I had posted on X. We expect to end this year with over 2 gigawatts of compute, and probably our cumulative compute online by the end of next year will be several times higher than that. Let's say closer to 10 gigawatts of compute rather than 5 gigawatts of compute. That's a way to think about it. So whenever he says several times larger and between higher to 10 but less than 5, I think about 8 gigawatts. But still, that's a lot, right? Think about the amount of compute that's coming online. All of the largest companies in the world are essentially striving to go from 1 or 2 gigawatts to 5, 10, 14 in the case of Meta. The unlock of compute that's about to happen over the course of 2027 is very, very large. Anyway, so they're all sort of targeting that end of 2027 target, which is very big, right? Going forward, we decided to build everything exclusively on NVIDIA because we think that the Vera architecture is the best architecture. We think it's the best AI computer. We greatly value our close collaboration and partnership with NVIDIA, so we're exclusive to NVIDIA. That was Elon Musk's words on the call. Very, very exciting comments made by Elon. And so while SpaceX is down 10% today, NVIDIA was up like 4+% because you can kind of mark how much a gigawatt would be worth on a Vera architecture. And, you know, you're honestly pointing to somewhere like $80 billion. Let's say Elon, the reason why he's doing this is they're getting quite a large discount. Who knows what that is? $65 billion, $70 billion per gigawatt, right? But still, that points you towards, okay, well, what does an additional 6 gigawatts worth of build out mean in terms of CapEx, and how much is NVIDIA going to make on that? Remember, the Vera systems are only starting to come off the lot right now. They're in full production, but they are not like, we're not delivering them in full force just yet. So as that starts to build out, all of the comments that SpaceX is making is for future revenue. This has not already been sold. You know, he didn't say, hey, we're exclusive to NVIDIA on Blackwell architecture, something that could have already been priced into their CapEx today. They're talking about future commitments, you know. So that's very exciting. This also hit AMD a little bit yesterday. Now, I don't think that AMD is going to be a bad name at all. I think that people are not appreciating how much that this stock has already ran up. Okay. Year to date, this company is up 122%. And yesterday, before this sell-off, it was up 140%. You know, comparatively to NVIDIA, NVIDIA really hasn't moved that much. So these types of news stories can be, you know, really advantageous to NVIDIA and not devastating or anything, but just not a good sign for AMD, even though the Helios racks and the MI450s are likely to be fully sold out. Like the future products that AMD is making has been clear that they see a lot of customers for it because, you know, you have Meta showing up, OpenAI showing up, Anthropic showing up. And those are literally the 3 biggest customers that you could ask to come to your event. The 3 biggest. Okay. So AMD is going to do perfectly fine. Perfectly fine. And I'm not worried about them at all. And people think I take sides too often. It's just, I've just been an investor in NVIDIA way too long that I just understand that business. I understand the management. I understand Jensen, you know. I feel good holding on to that company knowing that the valuation for me seems like there's still a large margin of safety. That does not mean that AMD is not going to sell a ton of chips. Okay. Which semi stock hasn't run up? I mean, none of them. Even you can look to NVIDIA year to date, it hasn't moved that much, but then you zoom out a little bit more. And what you actually realize is that AMD and NVIDIA have both seen big runs. They're just different times. You know, there was the time where AMD sort of stayed flat and NVIDIA did a sort of 10x run. And then NVIDIA sort of flatlined at 200 and AMD is starting to, you know, head towards that $1 trillion market cap. They're both doing well. They just were sort of about 1.5 years off from each other. You know, the right thing for me to have done was to ride up NVIDIA, take my 50% position, buy into AMD whenever we were looking at it at 185 and run that up to 500. You know, I make a mistake. Happens. I was too chicken and think that the valuation of NVIDIA is cheap, which I absolutely do think that, and I still think that. Okay. Let's see here. CoreWeave signed a multi-year SSD supply agreement with Solidigm. Google in talks for a $1.5 billion AI coding startup mechanized to strengthen model evaluation and close its coding gap with OpenAI and Anthropic. You know what's so funny is like whenever you look to the Metas and the Googles of the world, all you see is these stories coming out that they are spending, and you don't see any stories on the money actually coming in. Now, obviously, the money is coming in because Google search continues to see large growth. Google Cloud is at 82% growth rates, and who knows, maybe that even extends further. Their backlog certainly points to that. But yeah, it's still pretty wild that how much they're spending over time. Okay. Let's see. Harley Finkelstein of Shopify, the president, was on Fox. Let's listen to this, and then we'll go through my larger review of the actual quarter in case people are interested in learning more about the company. Here we are.
Would you explain to me what is a AI referred orders?
This is something that has been happening now for the last year or so, but it's really starting to take off now. This is where any consumer goes to any of their favorite AI applications and they start to do discovery, research on a product. What we've seen is that both traffic, so the number of actual visits, but also the orders coming from AI channels to Shopify stores, there are millions of them, tripled in the last year. And in particular, I think something that I think you'll be really interested in because of your love of small business is that AI search in particular is helping smaller brands that kind of form the long tail of commerce, which is our core base, get found. In fact, 75% of all AI-driven purchases were from categories outside the top 100 categories. So it's, consumers are looking for a car seat that fits 3 across the bench, or a dog harness for a French bulldog. And this is really where these smaller brands are really doing well. And then there's no stopping it now. We think it's going to continue to grow.
Would you explain to me?
So let's talk a little bit more on Shopify. The stock currently right now is up. The stock is up currently 18.5%. It's the number one stock moving on my portfolio, except for Bending Spoons, which, we just recently talked about. And I said that this is a name people should probably take a look at. And then it literally popped today, up 18.3%. Great timing on that. Or maybe we should have spent a little bit more time on it beforehand. Maybe we would have taken a position. But Shopify earnings, Q2. Let's talk about it and some of the things that they said in the earnings call in case people didn't have a listen. So for Shopify, what we end up seeing is that revenue is accelerating. As I said earlier, it's a lot of this has to do with the comp as well. So last quarter, we ended up seeing that 34% growth rate, by far the fastest growth that we've seen over the last 3 years. But that was off of a quarter. So over the year over year, off of a quarter that was only growing 26.8% only, right? But that comp is much easier than what you've seen with the quarters around it. Then, skip to this quarter, what you end up seeing is that a quarter that grew at 31%, and then the next quarter, it grows by roughly 31, 32%, or no, let's say 33, almost 34%. This growth rate is much harder to put up on a way, way better comp. So this quarter, I actually think was much better than last. And on top of that, there's a mix of 2 different segments that they really try to track here. So you have the subscription revenue, and then you have the merchant revenue. Subscription revenue is a sign of, who is actually paying for our platform, and then are they sort of moving upward? Are you getting to Shopify Plus, and are you paying more to be on the platform over time? They've raised their prices a few times, 30 plus increments, these sort of things. But really, the big step is going to go from you paying, $50 a month to you starting to pay $2,000 a month as your business scales and you need more tools. But the big block of their overall revenue comes from merchant solutions. Merchant solutions is really an indicator of how well your business is doing. This is what aligns Shopify, what makes this business so amazing. What I think Palantir actually highlights a lot with their business as well is that the only way that you should make money is if your partners are making money. That's how the merchant solutions work. So payments, all of these things. Now, that side of the business is growing the fastest. Last quarter we did 39%, this quarter 37%. So the bulk of their revenue is growing the quickest. But it's still important to see that even the subscription revenue is starting to accelerate in its overall growth rate again. It's no longer in the mid-teens. We're starting to get into the sort of mid-20 percentages, and it definitely will be there next quarter off of the bad comp that we've seen year over year. On the gross profit side as well, you see a lot of profit come from the actual subscription side. You see that from anywhere. But let's not neglect that the actual gross margin on the merchant side is actually growing faster than their overall revenue, which means margin expansion. That's a really good sign for merchant solutions, which makes up for the bulk of their overall revenue. Operating profit ended up being at around a 13.6% margin, $488 million. And as you see over time, while the expenses are still high for the most part on Shopify, they're all coming down over time. And there's a trend that you'll see here where it spikes up in Q1 and then works its way down to all-time lows as a percentage of revenue in December, right? And so we are actually near the height. And as we get down to December, we are likely to hit brand new lows and help bring up the margins overall from an operating perspective. Monthly recurring revenue is climbing up. Now, the growth rate is high, but it's also on a bad comp. So you really see that 185 million here was some of the slowest growth rates that we've seen in a while. That's also why it's showing up pretty strong. So what I want to see is that the monthly recurring revenue is ticking up, but also this is more on the subscription side of things. It's not the biggest part of their overall revenue, but we still do want to see that climbing. It'll be good to see that re-accelerate, and if they can put higher and higher growth rates on better and better comps. That's what we need to see. Now, this is another slide from their overall earnings call that I think is really important to highlight, that large brands that you would be able to identify, you can look through here, Canada Goose, Elf, Sonos, Keurig, any of these names overall, like you see Guess here or Avon or any of these, that they end up switching over to the platform over time. Now, one of the craziest things that Shopify said this quarter was that over the last 5 years, merchants who have reached $1 million in annualized GMV or gross merchandise volume had a 92% retention rate. That jumps up to 97% as they end up reaching the $10 million in annualized GMV. So the larger the customer, the more reliant that they are on Shopify. Think about that, because a lot of these types of solutions, people worry about people being able to outgrow Shopify. That this really helps with the very small merchants that don't have the teams available to build their own websites. They don't have the capabilities of, making or partnering with Stripe and doing it their own way. And what Shopify actually shows you here is that the customers that get larger and larger actually rely on more and more of their overall product suite. So the global merchandise solutions, or being able to sell onto Facebook and Google and OpenAI and all of these other solutions that they've recently unlocked, those types of connections and partnerships is really helping the much, much larger businesses that are on their platform. Now, Shopify, this is another one of those highlights that they really have to show off. GMV is just exploding. Once again, that same similar comp, really, really low in Q1, 22%, then skyrocketing up to 34%. If you combine these two rates, sort of looking at it over a 2-year CAGR, compounded annual growth rate, it actually is not as good as doing a 30.6% growth rate and then doing almost like what is a 31.6% growth rate. This together is roughly about 60+% versus the roughly 58% of the quarter before. So we're actually accelerating even faster. Although if you were to look at just the year-over-year growth rates, you would think that last quarter was exceptional and now we're starting to decline. That's not the case. It's actually accelerating. Okay. Now, overall, Shopify continues to do this over decades now. I've been a very, very long time shareholder of this company since 2019. But I want to continue to hold on to this company because what you end up seeing is that the longer that they are able to make more free cash flow, bring on new customers, especially in today's age, what they're doing is they're taking that data, making new solutions for larger and larger businesses. They're entering into, business to business solutions, or, wholesale, or in person, like for in person commerce rather than just e-commerce. And what you end up realizing is that AI is likely not going to disrupt, commerce in the grand scale, and people are not willing to pay. What it just means is that actually opens up Shopify to develop new solutions and actually offer their merchants a much better way of converting on their potential leads. So look at this as well. This is one of the greatest signs that Shopify is working here. Q1 of 2025 cohorts now have a quarterly GMV that's 5 times higher than its initial size, implying a compounded annual growth rate 3 times larger than the overall commerce market growth over the exact same period. That's the mission of Shopify. I want you to really think about this for a second during this quarter. If you were on Shopify, the average Shopify cohort, okay, or customer, they're not individually picking names that have outperformed. They took Q1 of 2025, just a single cohort, anyone who signed up during that time. They are destroying the overall commerce marketplace growth, and how much of that has to do with Shopify itself, offering more solutions, expanding into new markets, going global. That way, the customers who choose Shopify have more customers to sell to and can make a lot more money. Are you willing to pay to make more money? I think Shopify has proven yes, as you see every single one of their metrics as we look over time has grown. Now, once again, similar thing for gross payment volume. If you were to compare to the sort of worst comps to Q1, this quarter actually looks much better, growing at 37%, and then putting up 38% on top of it is an unbelievable statistic, processing $78 billion worth of overall payment volume. Extremely high for Shopify, and that helped bring in about $1.5 billion worth of net income. Partly because of this, they also had stakes in private businesses that did have increased mark-to-market gains. Very much like, most companies, the Nvidias, the Googles, the Palantirs. Shopify was also on that list. So they did well, but that's not necessarily to lower the fact that they are improving their margins and becoming more profitable over time. You can see that here in their strong free cash flow margins. Now, free cash flow margins over time usually come in at the back half of the year. You can see that acceleration, 6%, then into 16, 21, back down to 12, all the way up to 22, starting at 15, back up to 19. This time, we're actually ahead of schedule in Q2, bringing up the highest Q2 free cash flow margins that we've seen at 18%, 2% ahead of their guide, which they're guiding towards 16%, which they've seen in previous years prior, okay? So what does this mean? Is this a sign that we're going to end up seeing higher and higher margins for the back half of this year? Every back half of the year prior, we've ended up seeing really good signs. Not only that, but the company's overall balance sheet is looking quite strong. Now, people can point to their less than $5 billion worth of cash, which they've only seen 1 time or 2 times previously in the past 3 years or so, and say, hey, what the heck is going on here? There might be a little bit of a red sign here, or a red flag. But we also have to point to, what are they doing with this cash? Buybacks. Buybacks have officially started at Shopify, and now they are coming with a lot of money. The first quarter was last time $491 million. This time, $1.4 billion, tripling their efforts, okay, from last quarter. And this is actually having a material impact on their overall amount of shares, even outside of just stock-based compensation. So as far as I can remember being a Shopify shareholder, this company has been slightly dilutive. Stock-based compensation, high overall expenses have been something that, we've had to face as this company has grown into its scale. But now we are starting to get to this level where not only is this company still growing at 30, maybe even, high 30% growth rates, but now they're starting to have the balance sheet and the ability for them to actually look more mature, keep those outstanding shares at a reasonable rate, and hopefully try to bring that down to levels that we haven't seen for years. So this decline in outstanding shares is actually a really good thing, and we want to see that go into big, big negative numbers. Another thing that I wanted to point out was Shopify Sidekick. This is sort of their AI agent that helps people at every stage of their business. This is looking to be very good. They're starting to show up or show off some really, really great statistics, helping with sales, conversion, building out themes, getting people to their, starting to build up their shop to getting their first sale has accelerated. So people can immediately start to see revenue. That's likely, or a higher likelihood that they're going to retain as a customer for multiple more months, okay, or sign up long term. As the customer gets to scale, however, the Canada Gooses of the world, are they using Sidekick? Well, the answer is still yes. And what they end up using this for is similar AI agent, but now it's going through your entire admin full of a ton of data and user, user sales and all of these things to tell you, hey, this catalog of products is not working. This one you need to put an ad campaign on. This last ad campaign that you ended up running was a major success. Why did you stop doing that? And so this is actually helping convert to more sales, keep people online, and it's actually not too expensive to run, especially as they get higher into the scale. So Sidekick is really starting to see some real growth here. I think that's also a good highlight for Shopify. Overall, it was a massive success for their company in terms of way out beating their overall revenue expectations. Down to the bottom line, free cash flow was faster than expected. And the next quarter, we've been in this sort of rut of guiding towards high 20% revenue growth, high margin, right? Now we're starting to guide to mid 30% revenue growth for next year. So, for next quarter. So Q3 looks really strong in their guide. Very, very exciting. Hopefully we end up coming out and beating that as well. Margins end up ticking up for Q3 and Q4. We have a really strong holiday season again for Shopify, and just the flywheel continues. More merchants, more sales. That more money allows us to find new solutions to potentially tackle for new merchants, and the whole thing starts all over again. So they recently also just brought Shopify payments into Europe and a lot of places outside of the United States. They're now in 40 countries, I think. We're also starting to see some big pickup there for local payments in Shopify. There were a ton of good signs there for them as well. But double thumbs up from me. I continue to be a shareholder and honestly will likely be for many, many more years to come. Anyway, that's my little Shopify review for you guys. And that's why the stock is up 19%. Good sign. This is my second biggest holding in my portfolio. So the actual percent changes means a lot. Okay. Did Tanner get sponsored by Shopify? No, not at all. No, I would like to interview Toby, the CEO, but nothing in terms of them sponsoring me. Tanner, I heard Chris is looking at memory stocks. In a good way, you mean? Okay. Owning shares is kind of like a live sponsorship, but the other way around. Yeah, exactly. I'm paying to promote them. Chris bought Micron. All right. 1 second. I don't know if he'll answer. I never call him. We're calling Chris. When does he work? Chris, I'm live.
Hello?
Hey, I'm live.
Okay.
I heard that you bought Micron.
I did.
Are you sleeping?
I just woke up. I worked last night, so
Oh, dude,
I'm okay. I can talk for a little bit.
What's going on? Why did you buy Micron? What are you seeing?
Well, one, there's very oversold right now. Just from a technical bounce, I think there's opportunity for some people, looking to enter right now, and it could run nicely to the probably to 1100, 1200s very easily with a lot of just dead cat bounce happening. The other thing is you've got a lot of money that was lying on the side looking at this, and the headlines are coming out constantly now saying that 2027 is completely booked. That helps the commoditization question get that thing gets further pushed out further.
Chris, they've been saying that for a long time though. Back whenever you were bearish.
I wouldn't say just I was overly bearish, like what's that they call, like throughout the last year or whatnot. But I think what it is it has the business itself has been a cycle like for a long time. The question is, no one really knows when the cycle top is. I mean, I could be wrong, right? Like we could see this in the next month, 2 months, something happens, and then all of a sudden now we're in a more difficult place. A lot of what we're assuming right now is that the spending on AI capex continues. We just don't know when it is. So I would say anyone looking for this for long term, you have to ask yourself 2 questions. Is the RAM trade or the memory trade commoditizable? Is that like still a real thing? 2, is there something that Micron specifically is doing to differentiate itself from, let's say, future competitors like the Chinese that can help them retain their margins compared to the other guys? I don't know. That's something else to consider. And then last but not least, how is the mic market going to price this company going forward? If let's say if the commoditization fear comes back for whatever reason.
Yeah. So
and there's also technological breakthroughs also that we have to remember, because I mean, look, there's never been a year where there's been less demand for memory than there was in the prior year. I think we all know that memory is a key ingredient in making the world work. The problem is, how much can you actually price that memory for? And the challenge that you run into is that you do have other competitors. You do have these demand cycles where people think that they're going to need a crap ton of memory, and they're able to kind of build a whole bunch of supply. And then what happens? The supply comes in, but the need is not there. And then you get literally an 80-90% crash in the price, and the gross margins. Like right now, Micron is running at 90% gross margins. You don't think that's going to invite competitors? You don't think that's going to invite technological breakthroughs? You don't think that's going to invite, what's that thing called? Businesses to figure out how to get around the memory bottleneck? The question then becomes, how durable is the bottleneck? Is this something that can be crossed over? For me, I don't think anything's going to happen within a year. Which means that right now this dead cat bounce trade on Micron is actually a pretty good one.
Yes. I don't know. Maybe we should talk later. But what's it called? I had this conversation with you from the bullish perspective, and you said that the market, like, I feel like you're saying all of my arguments from the other side of the trade this time.
Yeah, well, things have changed. Right?
What has
Things
changed?
have changed significantly. Right now, the booking curve has changed. The booking curve is basically the main dictate right now of where the headlines are going to go.
Is there a quarter or a report that you've seen in the last 30 days that changed, or are you talking about from last quarter?
No, literally it just happened a couple of days ago where they said they've already booked out for 2027 completely. For what? Look that up. You can just type that in and they'll tell you that they're completely booked for 2027. That wasn't the case before. And you also have the Chinese. The Chinese are also not really charging like commodity level prices right now. They're charging the same price as the other memory makers. So
yeah.
Could the commoditization question happen? Like I said, we don't know. As far as we can tell right now, it's not the case. I'd say the biggest risk that we have to this whole trade, though, is OpenAI's S1. So what do you think about that? You think OpenAI's S1 is going to be like, oh my God, this thing is a disaster, and then things go down, or do you think that everything's going to be okay?
I think everything's going to be okay. I think that OpenAI will definitely have worse margins than Anthropic, but I still think that they're going to show off an exceptional amount of growth, and that there will be investors that are willing to pay for that level of growth. You know, they just showed off 1 billion weekly users. They'll I think very similarly to SpaceX talk about what they can do and, you know, talk about their TAM and all of these things. So
Yeah.
like who knows what the ad business looks like on a 1 billion weekly users.
And the position for me when it comes to Micron is more of a trade than it is a investment. Like, I'm not trying to buy Micron and hold it for the next 5 years. For me, I look at this as a dead cat bounce. I made it clear on Twitter when I was looking at looking at the charts that looks like Micron and the rest of the memory names are oversold, and that there's a good possibility of a nice bounce. I just needed a confirmation that it was going to be a durable bounce, and pretty much got that over the last couple of days. And I think, like I said, it could run nicely to like maybe the 1200s by the end of this year. And then if you layer on just future expectations of buybacks, that pretty much sets a nice floor at 900. So the position that I have gives me a 300% return for a very, you know, in my opinion, lower risk. Because now what's going to happen is your premium, whatever. I'm not going to go into too much detail, but it's a nice way to play the current situation.
Yeah. All right, man. Thank you so much. I appreciate it.
By the way, if we're going to talk, I was disappointed that you didn't defend SoFi hard enough during the earnings report. Like when the earnings came out, I was like, what is Tanner doing? Why is he not like just constantly harking on the $3 billion that was just raised and that money being lent out slowly over the next 2 years? I was like disappointed that you didn't bring that up.
Did you see
growth? We're going to accelerate.
Did you see my review of the quarter afterwards?
I didn't like. Did you see it? I didn't see it like afterward. Like where did you post it? Like, did you actually do like a complete SoFi video?
Yeah.
Okay.
I did a full SoFi video and everything. But you know, whenever the earnings are coming out, it's like 7 a.m. and I'm I'm trying to take in half the quarter, but honestly, I'm half asleep as well. So I re-listened to the call and re-looked at all the numbers whenever I was awake.
I was honestly, I got a little bit heated. I actually called Steve. I said, what is this guy's doing? Like, they should be defending SoFi way harder. I think the market reaction was stupid. And I thought, to be honest with you, I feel like some of these stocks are being manipulated by market makers to shake people out of positions right before they really load up. Because the numbers that I saw were amazing, but the market reaction made no sense whatsoever. I mean, it got bad enough that I was defending SoFi on X, and people were like, what? Like confused as hell. Like, what the hell just happened here?
Yeah.
You know, and I was like, look, I'm just saying, like, I'm not looking at this as, oh my God, this needs to be a $35 stock, but there's no way in hell people are selling off on earnings like this. It just made no sense to me.
Yeah.
So it is what it is, but I think the market sort of caught up and people are, you know, like, what is SoFi at right now?
SoFi is at 1854, down 0.8% right now.
Yeah, I mean, clearly, based on the numbers, this thing should be at least 25. I would say 20 to 22 is fair value. 25 is like nice for right now. Anything above 25, I'm not really thinking that this is a great buy. But you know, if it dips below 15, great opportunity to buy. I mean, I think SoFi is probably one of the best companies to trade because it just has so much retail participation in it. And retail tends to overdo things to both the buy side and to the sell side. And like I said, that volatility is where you can make money on this thing. I've made money on SoFi quite a few times when it got oversold, bought it, gets overbought, sell it, and keep playing that game.
Yeah. All right, brother. I got someone joining me in the next few minutes.
Have a good one.
Yeah, talk to you later. Bye. Okay, that was Chris. Very surprised with him saying that he has not said that he was bearish on Micron. I wanted to see because I remember, I'm pretty sure I remember the day. It was July 16th. July 16th was lower than where we are today. And he even brought up So there were a couple tweets and everything. I don't remember when the live stream was, but there were tweets about people saying that I should have took my advice and wrote some puts, but Nvidia has been up since then. And then he said, what about Micron? Because that was the one that he also harped on. And which we weren't even talking about. And I did sell out of my original cost base, but I kept my gains. That was at like $1,050 or whatever. But this was lower than where Micron's price is today and where he wrote spreads on. So someone said, like, Chris was talking like a politician. I love Chris. I'll let him wake up and defend himself a little bit better. But like, dude, I find sometimes that he talks so polarizing on stocks where he says like, SoFi's just a bank. SoFi's doing amazing. Micron is going to get crushed. He called me a moron. Like whenever I was defending Mike, like, anyway, I didn't call him names. He called me a moron. And now he's invested in the company at a higher price than whenever we had a conversation. It's, I don't know. I'm not flipping, dude. I have been in this game on Nvidia, SoFi, all of these things, and you take a rashy bunch of shit for sticking to your opinions during changing sentiment, not changing business, changing sentiment, and then you'll have the traders that go around you like you know? This is a hard game to play, especially whenever you publicize your trades, because it allows people to make comments about where a position is when it's $1,000 and when a position is at $700 whenever the company has not changed. By the way, Micron, I did check. They said that they were extremely tight extremely tight supply all the way through 2027. They said that in their last earnings back on June 24th. That didn't happen this week. That was a long time ago. I told him about that too. But he just woke up, so I'm not going to put his feet to the fire right now. By the way, I love Chris. But, you know, if you're going to say things and say things on camera, let's not gaslight me like you weren't bearish on Micron. You were extremely bearish on Micron. Yeah. Okay. Let's see. Sensitive to I'm not sensitive. I think that you know what? I find I get a lot of crap whenever things go down, and there's not the same reaction whenever things go up. People scream out your mistakes and they whisper your accomplishments. You know, like Micron can triple, and then I'll see people in the comments go like, "Oh, well, BM&R's down." It's like, yeah, okay, I lost 40% on BM&R and I tripled my money on the other end. You know? Like, yeah, I don't know. The our next guest will be joining us in the next 60 seconds. So we can talk about this latest reaction in the markets. Mag7 giving a lot of credit to Elon's comments here on Nvidia, up 4.1%. Google's down 4%. Amazon's down 2%, down to 271. Still a great price on Amazon, to be honest. Tesla 322, not quite in buying range for myself, but I would like to get Tesla if the price gets low enough. But I want to see a two handle in front. You know? Yeah, can you imagine if the guest was Tom Lee? That's so funny. Okay. Nvidia 220. And tonight we have IonQ, AppLovin, SoundHound, Mercado Libre, Sandisk, Duolingo, Western Digital, Axon, Joby, Block, Dave, Chime, It's going to be freaking packed. We got Elf and Figma and DoorDash, a ton of names. And I'm sure I missed even more. Like there's so many. We are going to be listening to only one call, however. We can only fit one call in. We're going to be listening to Sandisk. And the call's at 4:30. Oh my gosh. And the call is at 4:30. So that's going to be really a really good thing. Get us out of here a little bit early. But ladies and gentlemen, please welcome the great and powerful Stephen Fiorillo.
What call are you talking about?
Sandisk.
No, who cares about Sandisk?
Come on.
I don't care about Sandisk. That's just me.
Aren't you a Micron investor?
Yeah, but I mean, Sandisk, like,
Or did you sell? Where are you in Micron right now?
I don't own it.
Don't own it. Okay.
No.
But you have a lot of names in the AI trade as well. So
Yes.
the memory names is still something that you follow for sure, I assume.
Yeah, I mean, you have to.
Yeah. Is there anything tonight that you do hold?
Well, I don't even know what's tonight.
I'll show you. It doesn't look like a list of, actually, you know what company you probably do have? I'll make a guess in my own head.
Yep.
But there's one name on here that I would never touch, but I'm curious if you do hold it. So we're looking in this middle bracket. This is Wednesday. We've got IonQ, AppLovin, SoundHound, Mercado Libre, Sandisk, Duolingo.
Well, I own Realty Income.
That's the one I thought you were going to say.
Yeah, I mean, who
It's not
doesn't
even-
own Realty Income?
Me? It's not even on my list. I don't even have it checked off.
You don't care about reoccurring income coming in.
No. I care about growth, baby. Tech.
Okay.
Beating the market.
Okay.
We've got Chime tonight. That might
Nobody
be
cares
interesting.
about Chime.
I know. Not even this company cares about Chime. They haven't even uploaded the logo yet.
Yeah, nobody cares about Chime.
Mercado Libre is in the draft. I have that in my stock draft and personal portfolio.
Yeah, you've been a Mercado Libre person for a long time.
Yeah. Yeah. My average on it is about 1,200, which doesn't sound that far away from where we are because this company has been sold off a little bit. But I think that puts me at about like a 2.5 year hold, something like that. Yeah, about September of 2023, it looks like. I'd need to go actually check my brokerage, but that would seem right, somewhere around there. But then, it was a great run. We ended up getting to 2,600. There's been a massive sell-off over the last little bit. In many of the LATAM names, Nubank's gotten hit. Mercado Libre's gotten hit. You have no interest in any of these names, it seems.
No.
Why is that? America only?
America, baby.
The stock doesn't bleed red, white, and blue? You don't own it.
Listen, the only reason why I own Enbridge is because the majority of their business is in America. I mean...
Is that your most international business? No, you were buying Chinese stocks.
Oh, I made some money on Baba, but I mean, I'm not holding Baba. I actually think Baba is a great company, but it's hard to hold Chinese stocks.
Got you.
But look, there's definitely some international companies that are worth owning. Look, Enbridge is an amazing company. I happen to like Bank of Nova Scotia, but SAP is a great one. I like American companies. What can I say?
Just being someone from Canada, no one says Bank of Nova Scotia.
What do they call it? BNS?
No, Scotiabank.
Scotiabank. What's Bank of Nova Scotia? Get it right. Is it not Bank of Nova Scotia?
No, look at their logo. Their logo's an S.
Isn't it? Am I wrong? You can tell me if I'm wrong. Isn't the name of the company Bank of Nova Scotia?
I don't know, but I just know every single, it's called Scotiabank.
Dude, I could be 100% wrong right now. Let's say BNS. Yeah, the Bank of Nova Scotia is the name of the company.
Maybe, but it's like saying, hey, go to alphabet.com.
Well,
like it's Google.
considering alphabet.com is not a website,
You know,
google.com is a website, not alphabet.com.
Scotiabank, you're poorer than you think. Yeah, exactly. Got some Canadians in here. Okay, so did you end up getting to see SpaceX earnings last night?
Yeah.
What do you think?
Shitty earnings from a. Is this? Do you not check off not for kids?
No, you have to, but not for kids
Exactly.
does not mean that it's.
What does not for kids not mean?
It just means it's not designed for kids.
Right. And is that even a curse word nowadays?
It's a curse word on my stream. People
Okay.
have kids, man. It's not good for the streams.
Anyway, I'm wearing a very special shirt today
Yeah.
because this is what I think of the Bears and where they're going. Do you watch Yellowstone, Tanner?
I don't. You know, I watch. I've seen. What is it? The other show by that guy. What's the oil fields one?
The other show by that
Landman.
guy.
Landman. I watch
Do you,
Landman.
do you even know who that guy is?
Taylor. Something.
Come on, Taylor Sheridan.
Okay. Yeah.
All right. So the Bears, we are taking them to Rip Wheeler's train station, baby. The train station, one-way ticket, shuttles ready. The train station. Everybody in the chat's going to know what I'm talking about.
Love it. Zeta
Taking the
had
Bears to the
great
train
earnings and bad reporting on those earnings.
Well, listen, I tried telling you to change your mind on Zeta at 16.
Yeah.
They legitimately blew earnings out of the water.
It's the best performing stock in the draft.
And I have it, and everybody thought I was crazy. I said also it's going to be my number one performer.
No one thought you were crazy for picking Zeta. No one did.
Everybody did. Talking about. We can roll the tape. Everybody thought I was crazy.
Everyone went, okay, all right.
Nobody else would have taken Zeta. I said it's going to be my number one performer.
Do you think that Amit would not have taken it?
I don't think he would have taken it, no.
All right.
No, I don't. If anybody was going to take it, it would have been Amit. I just don't think he would have taken it.
All right. When are you looking to get rid of your core weave position in the draft?
I mean, I'm not.
Let's do a trade live. There's not been a single trade made.
Listen, I've been trying to deal TSM to people. Nobody wants it.
Well, I didn't hear about this deal. You're trying to get rid of TSM?
I've been shopping it around. I tried getting Bloom Energy from Amit. He didn't want to.
What do you want?
I don't know. What do you got? Bring it up on screen.
I got QXO.
I don't want QXO here. Not for Taiwan Semi.
This is your portfolio.
Yeah.
You have the largest gainer in the entire draft, Zeta, of 44%. Would you be looking to get rid of Zeta here?
No.
You don't want to lock in some gains?
No. Zeta, there's a chance Zeta, by the time the draft is over, there's a chance Zeta's over 50.
Okay. But TSM, CoreWeave, I could be interested in either one of those.
Yeah.
Meta, you're not getting rid of, I guess.
No, because I think Meta's got a lot of upside that it can extract over the next couple of quarters.
Okay, so CoreWeave, you're down to get rid of.
I never said that. I said
I'm hearing
TSM.
what you're saying.
No. I said TSM. I'm looking to deal potentially.
Either one of those two, you're happy to get rid of.
Bring up your portfolio.
Okay. We are.
Here's
here.
the problem. You don't have anything in the red I want. And I'm very
Why does it have to be in the red?
Because what am I going to do? Take something that's already run 20% for something that's down? That doesn't.
You've never bought something into strength?
No, I have, but I'm not exiting something I'm down on to extract additional upside. Like I would want Palantir or Microsoft, just not here. That's the problem. Like I can't get out of CoreWeave down when I think CoreWeave's going to run when I think the upside on Palantir is limited here because it got expensive again. Look, 160 is still expensive for a 9-month period. Can it go to 200? Maybe. But how much upside is that really compared to where CoreWeave can go?
Steve, let me talk to you. Okay.
Yeah. Let's hear it.
Let's talk business.
Yeah.
If I do not trade QXO with you,
you're not going to be able to trade to anybody.
I'm going to have to get rid of it come the quarterly move.
Okay.
Or
you
do what your community wants you to do. You've been talking up this stock for a long time.
Right.
I have been talking up CoreWeave.
Right.
The company that you bashed and that I defended.
And you were right on it.
So let these stocks go back to their rightful owners.
Can't do it.
What if would you do it if we did that thing that you said about taking the gains and taking the losses? I'll take your 22% loss.
Ooh, now you got my interest here.
And you take my 9% loss?
Oh, no. I'm not. No. You can, if you deal me something else, I would consider CoreWeave for something else with those terms.
No, thank you.
But I can't get around a CoreWeave here. Not when I think it's going to be. And I don't want to put a price target on it. But I think after next week, I do think CoreWeave has the potential to be over 110.
I don't agree. I think it's going way down from here. Let me trade. Let me take it off your hands.
You see what I have to put up with in the chat?
I could be a great pawn star.
He doesn't actually mean that because he's holding a ton of CoreWeave in his portfolio. He does not mean that at all.
Barely.
Yeah, he's got like 50 shares. Barely.
Okay.
No,
yeah.
I
can't
would
wait for covered call season on CoreWeave. I'm not doing them here, but
no, you can't do them here.
They are going to be juicy if they end up running up. CoreWeave gets back to 180, 200, start writing covered calls for 250.
Yeah, I mean, the premiums are already big.
Yeah.
So I can only imagine what they're going to be like when they get back to 125, 150.
All right. So no trades today.
Yeah, like I said, I'm willing to deal TSM. I don't want to deal CoreWeave.
I meant a pawn shop, but I said Pawn Stars, the TV show. All right. Now, this position in the draft, me, you, and Matt in the green.
Yep.
Amit, Jason, they're sort of hanging out in similar fields. Chris, a little bit in the middle ground here, down 9, almost 10%. Who do you think, from this perspective, if you had to put your money on it, wins the full year's draft?
Me.
You are, honestly, I think you are very, very well positioned.
I am very well positioned for anything that happens in the market.
Yeah, because I think what's holding you down is your stocks that are down 20%, and I like CoreWeave.
And I like Oracle too. I mean, that's why I'm saying, like, Uber's down a little bit, but I think in 9 months, Uber's going to be higher. Like, that's the thing. Positioning, if the market tears and we go to 8,500, I'm not winning. But, and I'm saying by next June, right? If we're at 8,500, I probably don't win. But if we're at like 8,100, 8,200, or we experience a lot of volatility, I got a good chance of coming out on top.
Now, what about Jason or Amit?
I hate Jason's portfolio.
I mean, I wasn't going to say it.
No, I'll say it. I hate his portfolio.
His portfolio. I don't even know half the names. That's the fair part too. Like, I don't even know what they have to offer.
Yeah, I don't like his portfolio, and it's too much small stuff I don't know about. And I think if we get a volatile market, it's going to get the most crushed out of everybody.
Yeah. Do you think that there's a ton of upside in these names, though?
There could be, but I mean,
like, Qualcomm's getting crushed here, but it's Qualcomm.
But you don't buy Qualcomm for 1 year. That's the thing. I think Qualcomm is undervalued if you're going to hold it for 5 years. For the stock draft, I would never take Qualcomm. Because when you look at the roadmap for them, their business is going to be the 28 and 29 server CPU line, because Meta and Microsoft are guaranteed customers for multi-generational and their chips for the auto business. None of that hits this year. And it certainly is not hitting in the first half of 27.
Now, what about Amit's portfolio? I think a little bit more of the stocks that we do know.
Yeah, I mean, I like Amit's portfolio a lot more than Jason's. In fact, I think that there's two companies I really don't like in there, and that's Rocket Lab and Galaxy. Other than that, I think his portfolio is fine.
Yeah.
Wait, what's Fix? I don't even know what Fix is.
Yeah.
The hell is Fix?
I think that's the I think it's another AI name. It's exploded in popularity. Sandisk is on here, down 35%. That's about to report tonight.
Yeah, that can rebound in a week if you get a hot week.
For real.
I mean, let me rephrase that. That can rebound in a month, considering they're reporting, Nvidia's reporting, Broadcom's are going to report, and you have everything backed up by the hyperscalers. Sandisk can rebound this month.
Yeah. Okay, sorry. Got a text. I've got my next guest saying, can they move it to 240? I'm going to tell them to heck no. Okay. What's called? Yeah, no, I agree with you. Amit's portfolio definitely could come back. I would not write him off.
I do not like Chris's portfolio.
No?
Nah.
Yeah, I mean,
Fluorescent, I'm not an Iran fan. I don't even know what MOD is. Marvell, I think, is very overvalued. HUD, I would never get into. I mean, I just don't like it.
Yeah.
But that's also not my style of investing.
We came in so freaking high beta. It's unbelievable.
Yeah, so what?
And
we all started on the same day. It's all good.
No. I know. I completely agree. I'm not saying anyone got the bad end of the stick here. But whenever I look here, I do really like your portfolio. These are all names that I understand. Makes sense. Matt's portfolio. I really like even names that are doing well. I don't fully understand. Duolingo.
Shit company.
Okay. ASTS, Micron. These are high beta names, but Micron can come back so fast. What's NEE? What is that one again?
That's Next Era Energy.
Oh, okay. Yeah. And then I don't think there's too much. I mean, QXO stands out like a sore thumb.
Yeah, I mean, the only things I don't like in your portfolio.
Coinbase.
I don't hate Coinbase light. I'm just I actually like your portfolio a lot.
Thank you.
I actually said it on the stream today that for somebody who went last, you did a pretty damn good job at building this.
Thanks. Yeah, thank you. My two first picks are my two biggest. Like, this is almost like close to the order that I picked them in.
Yeah.
Microsoft and Palantir was my first and second pick. And then ASML. QXO was slot number 4. I can't believe I've wanted it from you so bad. I wanted the clip more than I wanted the position of you.
I know. I mean, you pulled to me last year taking HIMS. I thought that people would want I could trade something for it. And you did the same thing, thinking you could get something out of me with QXO.
Yeah. I think in a longer term portfolio, I'd love QXO. But in just the rate environment that we're expecting, it just doesn't make a lot of sense.
I agree. Like, this is a difficult environment for QXO. There's no question about that.
Microsoft and Palantir are going to carry you. I agree. I'm not getting rid of those all year. And that's the thing, dude. I'm so happy we got rid of the steals. That would have sucked. That would have made this game horrible.
Oh, it would have been so much fun. It would have been so much fun.
If you could pick one position from anyone's portfolio, what are you taking?
It would have either been Microsoft from you or the SpaceX short from Matt.
Or the SpaceX short, you would have done that?
or Nvidia from one of those three. Yeah.
Yeah, I would have stolen Nvidia.
Yeah. No, I went off today. I'm really upset about SpaceX. I'm upset that a lot of people lost a lot of money. I think the banks should, it was a shame on the big banks for allowing this to get the valuation it did. It is insane. Talking about a company that just did what? How much was their revenue this quarter?
I've got no clue.
It's like $8 billion. Hold on, I'll tell you right now.
But you don't think that adults can make you're worried about the average investor for buying into this company?
I think a lot of people do not follow the markets the way that we do, or the people who watch our channels do. And I think a lot of people looked at Tesla. They heard SpaceX was going public. They saw that there was hype around it. They saw that the big banks were supporting it, and they just wanted to get in, and they thought they could make money on it. I think that this was a crock. I think that the valuation was ridiculous. This thing shouldn't have even went for $500 billion. It just shouldn't have. You make that face.
In private valuations, it was higher than $500 billion.
But once again, I don't care. The reality is I'm looking at dollars and cents, and I get it. What can they generate in the future? I'm saying this, and in the next sentence saying SpaceX has the ability to be the largest company in the market in the next 10 years. But you're still paying a stupid valuation today for where they need to get to. You're talking about a company that loses money, that's bigger than Meta, and Meta generates over $100 billion in EBITDA and operating cash flow. It is a dumb valuation. A lot of people lost a lot of money, and there's only 4% of the shares. What happens when the next 7% come on? What happens when the next tranche comes on? I mean, you can have even more pressure to the downside and this go under 80.
But I'm not as bearish as you in this name. I think the interesting part about being a retail investor is that you don't have quarterly reports. You don't have to answer to people for long-term holding. You're not an institution. You're betting on somebody who has made the impossible possible multiple times. And they are betting on orbital data centers. I think that will be a real thing. Everyone who's in the space is...
but when?
They're calling soon. They're calling I know it's Elon timelines, but let's say it's 4 years out.
Okay.
Do you think that they'll be able to get customers for this? Do you think that governments will support it because...
Listen, if it works, yes. If they can make it work, absolutely. Why wouldn't they have customers? The problem is paying a 1.75 trillion valuation at IPO for a company that doesn't make money.
But what would you want them to do?
What do you mean? I don't think it should have ever got that high.
But do you think that it's not in Elon's best interest to shoot for it to get that high?
I'm not saying it isn't. What I'm saying is I think it was ridiculous for that to be the valuation. At some point, you have to have a rational aspect of earnings and potential to actually not burn cash and make money. There's a very big problem in the market with companies catching a bid. Look at Rocket Lab. Should Rocket Lab have ever got to an $80 billion company? No. Their TTM is $662 million of revenue. And that was trading at an $80 billion market cap. And they're barely expected to make money over the next 5 years. Now, I'm saying pretense, pre-iridium deal. But Rocket Lab should have never got anywhere near that valuation.
Yeah, but isn't there some sort of valuation premium that you should give on companies that can do something like that?
Why? Because they're launching something into space? Who gives a shit?
Well, all I'm saying is I think people look at Tesla being the exact same owner that is SpaceX.
Right.
I was around in 2018. This company was the largest shorted company in history.
Sure.
More than Apple in aggregate dollars. And then they were selling cars. Selling cars. COVID happens, and the opposite of what people thought was going to happen. People thought luxury cars were going to stop being bought. It was the opposite. Tesla exploded in their amount of sales. New factories came online. They sold affordable vehicles, Model 3, Model Y, and the company 15x'd.
Mm-hmm.
Going from being one of the least profitable automaking companies to having the best-selling car in a few years. should there be a valuation premium on the next, business that he ends up putting up, that like he has already proven in SpaceX that they are capable of doing some extraordinary things. For example, setting up data centers faster than any other company in the world.
Mm-hmm.
What's the premium on that?
You realize that they still burn cash, right?
Of course. Yeah. But so does Nebius and CoreWeave.
So let's go back to Tesla for a sec. Over the past decade, do you know how much profitability they've generated in the past decade?
I think these are the wrong companies to go through the fundamentals.
I'm asking you a very simple question.
No, I wouldn't know off the top of my head.
$44 billion net income. $44 billion. Meta does more than that in a year, and Tesla is a bigger company than Meta for God knows how long.
Yeah.
All I'm saying is, at some point, you have to value these companies in somewhere of the realm of reality. And I am all for paying up for growth, paying up for great companies, and not having everything have to be a perfect mathematical equation and dumpster diving. But when you were talking about a company that is compounding earnings, that should also get a premium. And Tesla has been going the wrong way on profitability. They've gone on a sequential decline for the past 3 years in profitability. There's no guarantee robotaxis is going to work out. They still can't bring Optimus to the forefront. And Tesla has the ability to also be the largest company in the future. And I understand why people give it a premium. But think about what they're paying. And when you look at Meta, Alphabet, and these companies, think about how much you are paying for their profitability. And then how much you're paying for Tesla's on the chance that they get to where Microsoft is or where Alphabet is. Why should you pay way more for their profitability now to potentially not even get to where these other companies are in the next 10 years?
Yeah, I'm not, just to be clear, I'm not a shareholder in Tesla or SpaceX. Okay. But I don't think it's a problem to say, shame on the bankers for allowing retail investors to get access into a company that they want to hold for the next 10 years.
No, that's not what I'm saying. I'm saying shame on the bankers for putting a 1.75 trillion valuation on it. Everybody makes their own choice of what they buy and they sell.
Yeah, but the bankers took the risk on that. Like the investors didn't need to show up and buy those shares from the bankers.
No, they didn't.
They took risk on that. And it's not one company that's doing that. It's a syndicate of banks. They all agreed on this price.
Which is collusion, but okay, cool.
It's not collusion.
I mean, do you see where the stock is now?
Yes, I do. It's still
With
95%.
4% of the shares.
Yes,
falling.
that's why it's not collusion, because the people who could have possibly colluded are still locked up.
Fine, maybe collusion's not the right word, but a serious mistake on the valuation of the company. Like, think about, and all I'm saying is, think about all the companies that have actually reached that level. Think about how profitable they are. Like, that's the problem I have with the valuation on it. It just doesn't make sense. And it doesn't make sense that people are willing, like, look at this. So bring this up. And I'm not putting SpaceX in here because we don't have a full year data for them.
Yeah.
But for Tesla, people are willing to pay, and this is an off year with free cash flow. So go EBITDA, 137 times their EBITDA. Yet Meta trades at 14, Microsoft trades at 18, and Google trades at 25. What are we doing? Like, why? So you think, not you, but just in general, like these investors think Tesla over the next 5 years, say, is going to generate, where's my EBITDA? 193, 172, or 100 billion in EBITDA from 9 billion. Like, it doesn't make any sense. And even if they do, let's just say Tesla gets from 9 to 100, which would be insane. Let's say they do. Okay, cool. They're doing the same amount of EBITDA that Meta does today, and Meta is going to continue to compound and generate more EBITDA. The numbers don't make sense on the valuation of what you're paying for the profitability.
Yeah.
They just don't. There's no way that Tesla makes sense at 290 times operating income. Or if you go to the cash flow statement, paying, where is my cash flow? You're paying you got 18.7 billion. So your price from cash from operations is 68 times. Like, what are we doing? That's insanity.
I get that. I think that people are to look trailing and see what these companies are doing, SpaceX or Tesla, especially SpaceX. SpaceX is even more levered because, you know, how did Google, Microsoft, and Meta all come to be? It's like kids in their garage coding the next new platform, or kids in their dorm room. There is no kid in their dorm room that can compete with SpaceX. No one's getting a rocket with a satellite into atmosphere and offering government contracts for space defense. Like, there is a level of moat that is unparalleled with SpaceX versus any of the other companies that we just looked at.
Sure, there's a moat around it. There's also a moat around trying to compete with Microsoft in whatever they do. You can't do it.
I mean, I think people are trying to compete with Microsoft every day.
Well, they can have fun. You're not competing with Microsoft on enterprise level for products.
Google's doing it right now.
No. Enterprise level for products. Google can't compete with Office. They can't compete with any of that stuff. Now, they can compete with data centers, but there's only two companies that can compete. It's them and Amazon. That's it.
I mean,
Nobody can compete. Nobody else can compete because it's not just selling compute. It's being able to run a business on those data centers, and you need either Google Cloud, AWS, or Azure for the actual cloud tools and environment. There's only two companies that compete. It's a triopoly.
I don't think you're right there. And
I'm 100% correct. You can't run your business off a CoreWeave's data center.
Well, I think that you can run a lot of businesses off of Nebius specifically, because I think they're trying to become the fourth hyperscaler. CoreWeave specifically, I don't think is trying to operate in that. They're just offering bare metal. But I think the fact that there is even a couple of companies and they're trying to steal each other's market share is worth giving companies a little bit of a discount on their multiple. If you stand alone as the only company, then the pricing goes to whatever you dictate. And I think that there is a special place for SpaceX in terms of being priced differently than potentially any other company in the world. I'm not personally buying it right here because I want to see some of those things come to fruition. But I guarantee you, if they can offer me internet, whether that's to my cell or my own house, right where I am right now for cheaper prices than what Rogers or Bell or whatever we have here in Canada is offering, I'm switching. And they 100%. Can do that. They can do that around the world. And AT&T and Bell and Rogers and all these companies can't compete.
They got to get there first, and there's no guarantee they get there.
Get there meaning what? Into space?
No, into the speeds delivered through satellite. You look at Starlink, the speeds are not good on upload for any of the packages. So yes, you got to get to the package where you're actually delivering. The other thing is, can they deliver on business? Can you run a business on this? We have no idea. Now, that doesn't mean that they can't go out and acquire a T-Mobile or American Tower, get the towers and the fiber from it and build it out that way. They absolutely could. But once again, they got to get there. It's unseen, unknown.
Yeah, but I think all I'm saying is I think the company should be more expensive than its competitors. It should not be looked at fundamentally. You know, I would look at this as being one of the largest startups in history. You're going to pay startup prices. And if you go into private markets, there's no such thing as a cheap company. You know, whether you bought SpaceX back at $1 billion or 200 billion or 400 billion or 800 billion, some of their previous rounds, it was always extremely expensive. And has only 2x, 4x, or 8x your money since then. You know, so I would look at this as being the largest startup in history.
It absolutely is the largest startup in history. But once again, it's trading at a stupid valuation. Let's see where it goes.
Yeah.
It's probably going to go under 80. And I'm probably going to get even more mad that people lost a lot of money on it.
Did you see Shopify?
No, I did not.
Shopify ended up showing off earnings.
Was it good?
Proving that they're the best Canadian business in the world. Well, nice. In Canada. Okay. And beat and raised, nice triple beat, nice for the portfolio. That one was really good. That company Bending Spoons that I ended up talking to you about was also up like 18% today. they acquired Airtable. And they've just been slowly, they're almost like a public, like one of those private equity firms that's just buying up these businesses for their customer email signups and, you know, all of this stuff. And, but they're a public business, $27 billion now. The founder's like, I think he's like 30. It's wild. They came out of nowhere.
Now, I want to address one of the comments.
Hmm.
Can you highlight Sammy Sharista?
Oh, my bad. Sorry, go ahead.
2 comments down from that one. There you
It's
go.
just a joke. I don't.
Yeah, I did buy it for my nephew. I'll buy more for my nephew. And guess what? My nephew is 10. It's not his money. It's my money, which I could light on fire and not give an F about. I buy him Robux all the time. I am making an educated gamble that by the time he is 18 or 21, whenever we give him the money, it will be worth more. And trust me, his portfolio looks amazing. And he has no idea what's coming to him. So you guys can say this all you want, but you know what? Guarantee you all you will want me as an uncle.
I honestly, I do appreciate you. Not a single swear word there while addressing a negative comment. He's truly, he's the GOAT for that.
So
Did you hear that Chris is buying?
I called Chris this morning. I didn't believe it.
He was saying, and then I said, bro, you've been extremely bearish. He said, I have not been bearish on Micron. I was like, you are gaslighting me to the nth degree. I was like, I was on a call with Steven. You called me a moron. Like, what are you talking? This is a recording. This is live, bro. You were extremely bearish on Micron.
I don't know what to say. I mean, I don't think Chris is bearish overall per se. I think he's very cautious.
Yep.
And I think he likes to point out a lot of things that could happen. I am still very surprised that he bought spreads on Micron.
I know he's turning a new leaf, but honestly, I think that it just means that he's a very opportunistic. Like he takes advantage. He sees where the momentum is swinging.
Amit is saying check WhatsApp.
To me,
yeah.
Yes. Yeah, you can. Okay. Cool. Yeah, it's going to be a long freaking stream with a ton of guests joining. Speaking of which, I got 10 minutes with you, Steve, and then I got someone joining at 2:50.
Okay.
What other names have you been seeing? So what exactly surprised with Zeta? Can you tell me a little bit about this? Like, what did we see in the actual earnings report?
Well, I mean, look, the reality of the situation is you've seen companies get to 25, 50, 75 billion valuations that had no business being there, that weren't profitable.
Yeah.
Zeta came out once again. They crushed earnings, 44% year-over-year growth. The 64 rule of 40, adjusted EBITDA up 56% year-over-year. And they're not including any of the Palantir revenue in the guide because they said it would skew the numbers too much. They also came out this morning and said that they have a button in Foundry now. If you didn't see it, Wealthmatica has it on his X from Fox Business. It's 30 seconds.
Okay.
Where you can go into Foundry and actually push a button in Foundry and have access to all of Zeta's marketing stuff. They are going to absolutely continue to crush. It was the 21st straight quarter of 20% plus revenue growth. I just think that when you look at the valuation, you look at the inflection point. Let's watch this for a sec.
Yeah. This is from Wealthmatica. We've had Nick on the show.
Yeah.
Let's have a listen.
We're fully integrated by the end of
It's a little quiet. Give me one sec.
July, and we've already created 2 massive client relationships. They have over 800 global clients and all of them will now be able to push a button through Foundry, which is their main platform, and just turn on the Zeta marketing platform. So our ability to help enterprises lower their cost to create, maintain, and monetize customers by greater than 50% will now be real-time available to all Palantir enterprise clients.
And I want to.
Does David look a little different there?
I don't think so.
No?
No.
I mean, you've met him in person, right? I
Yeah.
haven't.
I think it looks the same.
Okay.
I think maybe because he's got a sport jacket on.
Yeah, maybe. Who knows?
He normally doesn't do that. So probably because he was going on TV.
Yeah.
I think people are discounting how big of a deal the Palantir deal is. I think people are discounting where they come in at free cash flow and where the projected free cash flow is going to go over the next year with these deals. I think people are discounting that there's over 100 shared customers with Snowflake. I think people are discounting that Zeta is now actively serving ads in the OpenAI infrastructure ecosystem. And it's still what, a $6.5 billion company today?
Yeah.
It is, and this is once again, valuation. It reminds me of a baby Palantir at that inflection point. Now, I'm not saying it's going to become a $300 billion company, but what have I consistently said to you? I think it's going to be a $15 to $20 billion company in a short amount of time, meaning 1 to 3 years. And from where I was buying it, that's a 4.5x.
Yeah. Yeah. I didn't see some of the metrics. I need to go through and see like RPO. Did RPO go up again?
I don't remember what the RPO was, so I'm not going to give you a BS number.
Okay, let's have a look.
But there's a huge pipeline. They raise guidance. They're going to grow this year by 39% year over year. It's just, it's going to be huge.
Fell. Well, ever so slightly. I mean, it's way, way higher than where it was before.
What is this?
This is their remaining performance obligation.
Gotcha.
And I don't like the color here. I apologize. I find it hard to read, but that's just their brand color. It's still
you should build your own system.
Sorry?
You should build your own system.
Way more expensive than this.
Nah.
Yeah.
I would know.
You know it is.
Definitely not.
You spend hundreds of dollars on Anthropic tokens.
Spent a lot. You know how many Anthropic tokens I've used in the past 2 weeks?
No.
Take a guess.
I'm
going to show it on screen. Past 2 weeks, how many tokens have I used?
I wouldn't even know how to quantify it.
Take a ridiculous guess. It's a ridiculous number.
No, I really wouldn't know how to, are we talking billions, trillions, millions? Like, I have no clue. Like, I don't know. I don't know how to put it into perspective because I don't look at how much I spend through OpenAI and I don't use Anthropic.
2.2 billion in 2 weeks.
Yeah, that's is that a lot? I honestly
I would think it is. I used 816 million tokens on August 2nd.
How much does that cost you?
You know what? I'd have to look at my credit card.
How much is the $200 a month thing? Like, what does that actually unlock for token wise?
Let's put it this way. I started with the 100 and then I had to hook up my credit card to it. And I saw how much I was spending. I'm just upgrading to 200. And yeah, it is what it is.
Yeah.
So I'm supporting these companies. I'm token maxing.
Look at this. That's a baby number. I'm at
Yeah.
5.4 billion.
Listen, keep going. I don't think people realize how much you can do with these platforms.
Yeah. Get those numbers up. Those
Get
are
those
rookie numbers in this
up.
league.
Get them up.
Okay.
Get them up. So yeah,
super
Zeta, I
scaled
think,
customers over 1 million. They ended up seeing another 17% growth year over year. Overall average revenue per user as well wasn't an all-time high, but it was really good for Q2. This is a not cyclical business, but they obviously have holiday seasons where advertising is much higher. So average revenue per user is climbing up. Overall customers are climbing up.
Yeah, and I think what you want to look at is the super scaled ARPU from their larger clients because that was up 17% year over year.
Yeah, yeah.
But overall, it's a great quarter, and I think that it's going to do really well. And then you got Palantir, which just, once again, arguably the greatest operating business I've ever seen.
Dude, I was looking through and trying to, I was using OpenAI to try to find like what were the best SaaS quarters we've ever seen.
Probably this one from Palantir.
And I honestly don't think I could find one.
And
I can't think
before
of another
that,
company with a net dollar retention above 157 or whatever it was.
yeah. And before that, it was Palantir's Q1. And before that was Palantir's Q4. Palantir is just, it's insane how good these quarters are.
Q4, I don't think was as crazy as these last ones. There's definitely been companies like Snowflake and stuff like this that have put up net dollar retentions above 140. But 157, and did you hear the comment? He said that get used to 157 or even higher.
Yeah. Well, keep in mind, they don't incorporate any deals within the past 12 months into that number.
I know, but like customer count is kind of slowing. So like, are we expecting that 157 is going to accelerate? Like, how do you know that the customers signed in the last 12 months are better than the customers that were signed, let's say 24 months ago?
Well, you see the amount of deals on 5 and 10 million. You see the deals for over 1 million. I mean, how many deals did they do this quarter?
Yeah. Let's see. And then also that, how does that make sense? Like, how does the customer count only go up or I guess it's deals signed with already existing customers? Is that how that works?
So I don't remember exactly. I want to say it was like 208 or something like that on the deals.
Yeah, I'm bringing it up.
220. It was 220 deals of 1 million or more, 98 of 5 million, 73, 10 million or more. That's crazy.
Yeah.
Crazy when you think about 157% net dollar retention on these deals in a year from now. Like my prediction is that they're going to do 100% year over year revenue growth next year as a full year.
Yeah. So because these are accelerating and these deals are in Q2, but this is not all new customers. These are 220 deals from maybe even existing customers.
Could be. It's just new deals. It could be upcharging. I'd have to look at all the minutia of it. I just look at this as 220 new deals closed. Whether it's an existing company or not, I don't know. I would think it's not. I think it's including because their customer count isn't going up by 220 quarter over quarter.
Yeah, it went up like 40 or something.
Right. So it's still 220 deals of at least $1 million.
Yeah, I think Basic says it well here. You either believe Karp or you don't. Like he's calling to run the business at 115% or whatever for the next 18 months. That's what they're pushing to. They said that net dollar retention will be higher than 157. He said that free cash flow would be between 15 to 18 billion 2 years out.
By the way, I had Claude grade my predictions for Palantir. These are the grades he gave me. I called the 93% year over year on the dot.
Yeah, A+.
My predictions. I was light on the EPS. I was very close on adjusted operating income. I was very close on Rule of 40. I was off by 1. I said it was going to be 154.
Dude, you weren't even, honestly, hey, go back. You get A+ across the board because your GAAP EPS.
No.
Listen, you said 38 cents. They also had SpaceX allocation, which they didn't talk about, which gave them a boosted 3 cents. You got to 41 cents.
I appreciate it, but I'll stick with their grades. I mean, look, I came in very close, and then I came in very close on this stuff. U.S. commercial, look how close I was. U.S. government, pretty close. Like I was dead on with total U.S. revenue.
Okay, so Steve,
a lot of people like to make fun of me that I don't know how to analyze companies. It's pretty funny.
I get this. I get it. What's happening in Q3? When do we get to see the Oracle of
100% year-over-year growth in Q3.
All right. It does feel like Palantir is trying to, and I think that they will be able to sustain higher growth rates than Nvidia. But it's funny that they highlighted and even brought up in their quarter that they had a rule of 40 that was higher than Nvidia.
Yeah, but
that won't be the case.
They're also a much different company. And even though they are 20 plus years old, I still look at them as a young company because AIP is really the bread and butter as a compounding factor with Foundry. So I don't look at them as a 20-year-old company. I still look at them as a quasi startup to some degree.
Yeah.
And I think it's going to be a lot easier for them to compound at these rates. And then in 28, it'll probably fall off a great deal.
But still, 100% year-over-year growth next quarter.
I think so. I got to run the numbers. I haven't actually run them yet, but yeah, I'd say around 100%.
Higher margin than last quarter?
It's going to be tough. Maybe. I got to look at the numbers. I haven't done the math yet.
Got you.
But Palantir is it's one of the best companies in the market. Period.
Yeah. All right, man. I think that's it for us today. No Steve and Tanner podcast tonight. Not this week. Next week should be much better. And then on Friday, I'm not here, so I'd like for you to stream a little bit longer.
I have some stuff I got to do, but I will figure it out. I'll stream a little longer on Friday.
That's on Friday. Yeah, Friday I'm gone.
Yeah. So where are you ended out with this? What are you thinking for the rest of the year?
Well, I'm not ending. I'm having another guest on.
No. I'm just saying, what are you thinking for the rest of the year?
Oh, dude.
Because we're already at S&P 7740.
7740 on the S&P, another
Crazy.
green day. Yeah, I don't know. I whenever I see these really great days, I also don't want to get euphoric and call for, much higher prices and just assume that what has happened over the last few days is going to happen in perpetuity. I do think that we're going to be at higher prices by the end of the year. I think that if what I believe is going to happen for Nvidia being such a large percentage of the overall S&P, that's going to drag up the markets, just by itself. If it goes up another 25%, what I need to happen. That said, I don't know. I think that 8,000 call is a pretty reasonable call by year end. S&P 500. You?
I mean, I'm still hanging out with my 8,000. I may actually have to take it up. We'll see.
I know, but that's always what happens is you start to.
I don't want
when stocks come up.
I don't want to, but we'll see what happens. I think a lot's going to be said at Jackson Hole, but I don't want to hold you up. I know you got somebody waiting, so I'm going to get going.
No, they're not backstage just yet. I just messaged them, but
okay.
Yeah,
we'll
anyway.
see. We'll see.
We will see. Sometimes whenever everything is going well, like in Nvidia, Shopify, and SoFi, and all of these names are going really, really well.
Dude, how good was SoFi's earnings?
SoFi's earnings were great.
So good.
Did you see that Vlad was stuck on the side of the street? Did we ever talk about that?
Yeah, we talked about it on the phone, not publicly.
Yeah. So that podcast is going to come out soon. I'm just waiting. I'll probably release it on Friday just because I won't be here on Friday. So maybe drop a little bit of a banger for everyone whenever I'm not here. The in-person podcast, man, you guys cracked it with basis points. It's the way to do it. And I'm going to try to do that as much as possible. The only difference is, New York is way more popular for a lot of the American companies that we follow rather than Toronto.
I told you, get Enbridge to come on.
Yeah. I do want to get like Toby Lucky and these sort of guys that are in
Shopify's in Canada.
Yeah, but still I think they're officed out in Ottawa. Decently far away.
Okay.
But I'm sure they're in Toronto from time to time, and hopefully we can set something up. But I haven't even reached out, so it's not like I'm not leaking anything that's coming. There's nothing remotely set up yet. But yeah.
Gotcha. All right. Good
All right,
stuff.
brother.
I will talk to you later. Stay out of trouble.
Thanks, man. You too.
Later.
I'll put Steven's link down here in the description, or not in the description, in the comments. Please go give this guy a follow. And then we'll have our next guest on to talk about AMD. Here's Steve's posting it in the chat. There it is. The great and powerful Steven Fiorillo. Okay. Well, we wait. But I'm not hearing back from them, so we will see. Let's also check on CNBC, see what's been going on. Yeah, we did end up seeing a little jobs report. This was in the morning. Let's just have a quick peek for anyone that hasn't seen this really quick. And then hopefully our guest will be on whenever we click back.
Well, it's out, Steve. What you got the numbers? ADP.
Yeah. Good morning, Joe. A miss by ADP coming in at 44,000 compared to an estimate of 75,000. That was the estimate that was out there, and down from the prior month of 95,000. It was revised down from 98 to 95,000. Good sector minus 3,000. So that was something that hurt the top line there. Service sector kind of lackluster at 47. And there's the non-farm payroll estimate for Friday at 83,000. That includes both government and the private sector. So not a huge miss considering the variance between ADP and BLS, but something worth noting. Small business, 23,000. Medium sizes, they're business companies with 50 to 49, 50 workers, 8,000. And then large businesses, 13,000. So kind of muted across the board there. And then the sectors are what we've seen. Education, health services up 36,000. Financial services, though, up 10,000. Construction lackluster. Trade, transportation, utilities down 8,000. And leisure and hospitality, which had, of course, been one of the leaders, down 11,000. Maybe we're seeing some of the reversal of the World Cup hiring that's out there. But decent wage numbers. This job stayers, 4.4%. That's unchanged. But job changers, that's some of the best number. That's one of the best numbers we've seen since 2025, up 7%. If you change your job, but 4.4% are unchanged. If you don't, now I'm looking at, guys, the difference between ADP and BLS, private sector. 805,000 jobs created this year, according to ADP, 721,000 according to the BLS. They're close in there, but not on a monthly basis. So nobody really takes it that way. Over time, though, still a low fire, low hire economy, Joe.
Okay, let's keep going here. Certified dev in chat, certified AI dev in chat said, Tanner, where is it here? Would you do me the honor of making me a mod here? I am always present. Certified, you are always here, but I don't remember your channel activity. Let's see what this guy's always saying. Honestly, I usually mod the people that have like the coolest things to say rather than like, what's your opinion on some of these stocks? Command Shift Tab will reopen your last tab. You're being helpful. Tevis posted it online. Do we mod certified AI dev? Let me know in chat. Have you guys had good experiences with this gentleman? I like your comments. You're a funny guy. We do need more mods. No, it's a flurry of ban him and no. But honestly, here's the truth. I don't know if there's a strike by the mods. I don't know if, they take their job not seriously. I don't know if they're not getting paid enough. I don't know what it is. But I have a lot of infighting, a lot of complainers. Paul and Lena are always going back and forth on whether Steve is giving ads like I care. And Paul, by the way, it's your fault every time. Begging is a disqualification. George, you might be right. George, a member for 38 months. Have I even been streaming that long? Thank you, George. You're the absolute goat. I remember like one of the first like large donations that I ever got on stream was from George himself. Like the first like $100 donation, I think was George. Dude's been around forever. I see him in other people's chat. All he does is listen to finance content. He's one of the real ones. Thank you, George. But I don't know if it is a disqualification because it's like whenever you're looking for, you're like, oh my gosh, if only, I don't know what to eat tonight. And then you see an advertisement pop up and they're like, dude, come to this restaurant. We've got a brand new burger for sale. And you're like, that's exactly what I was looking for. Mod George. George is a mod, I think. George, where are you? Send a message in chat. If you're not modded, you're getting modded. Zach, can you make him a mod? I'm pretty sure Zach's a managing mod. If you guys don't know Zach, by the way, to all the other mods out there that don't know Zach, Zach is your, is your supervisor. Zach and Parsival are the supervisors in chat, and Marshall. Marshall's above all. I don't even think Marshall's working right now. I think he's taking time off. Freaking guy. He's getting too comfortable. Should we fire Marshall right now live on stream? Should I call him in for his quarterly review? I'm going to do that. Join stream for your quarterly review. He has 5 minutes. Okay. Where was George? Camera on. Okay. Our next guest should be joining. The initial time, so he told me 3 o'clock, and then he told me 2:40. I told him, can you meet in the middle? And then he ghosted me. Now, okay. Marshall needs a company car Lambo. Dude, I don't even have a company car. Let's fire the guest too. Okay. Marshall needs a company bicycle. All right, we're waiting for our guest to tell us if AMD was a smashing quarter, which I'm pretty sure was the consensus that it was a good quarter. It just wasn't, it didn't blow the Wall Street expectations out of the water, which I think was some of the initial expectations. You know, by the way, stocks, let's keep the stocks on the screen. S&P 500 is green right now. NASDAQ, a little bit red here, but honestly, off of a pretty unbelievable run over the past 5 days. Marshall, welcome, brother.
Hey, everyone.
Dude, you're talking to me. Don't, hey.
Oh, sorry.
Oh, dude.
Sorry, sir.
Bad, yeah.
Sir.
Sorry, he calls me sir. You guys don't know. He calls me sir in our meetings. He has to. No, I'm kidding. I've called you to this meeting for a quarterly review.
Oh, great. Okay.
How's everything going?
I think everything's going fantastic.
And the new work schedule, me being the guest joined. You're out of here.
Oh.
All right. You can keep your job for now.
Short-lived. Okay.
Yeah. Bye. Ladies and gentlemen, please welcome Jose Najarro.
Who was that, Tanner?
That's Marshall. He's joined the future investing team. He's been here for 3 or 4 months.
Marshall, I'm sorry. Please don't hate me.
Yeah,
It was-
he's still backstage.
My apologies, sir.
That said, I want to talk about AMD.
Yes.
We were trying to buy time because you're showing up late these days. You're telling me you have kids. You know,
Kid, black kids, kid.
it's not what I want to
Don't
hear.
get
I
me in
want to hear
trouble
about
with the wife.
AMD.
Yeah, I mean, where can we start? I mean, where can we start?
Did they end up blowing away Wall Street expectations, or was this a little bit, shorter than expectations?
No, I would say it was shorter than expectations, even not just for analysts, in my opinion, for me. And I mean, I think revenue beat was around 2-3%, was like low single digits. So nothing crazy there. I personally, as an AMD investor, have been hearing about this CPU shortage story, and we kind of heard it more from Intel. So I was expecting in the short term to get a little bit more reaction of the CPU side and be able to outperform analyst expectations. So that's where they fell short, in my opinion. I don't think they fell short in the AI GPU story because the AI GPU story hasn't started yet. It's been kind of like it's been the pregame for them. The real story begins in September of quarter three of this September of this year, and so the end of quarter three. So in the regards of the AI GPU space, I don't believe they missed expectations because in theory there shouldn't have been any expectations at all.
Yeah, that's the thing, right? My understanding is that AMD is not like, this is a company that's about to pop and people are getting really excited about future expectations, not necessarily this quarter. So what were people expecting here if, the MI 450s and the Helios racks, like all their future product lines that they're end up putting out, isn't that what investors should be paying attention to right now?
Yeah, and I mean, I feel like that has, let me get my words closely.
Yeah.
Uneducated AMD investors
believe
that MI 350, MI 300s, and all these were going to be that big opportunity. But one of the main reasons that they're not is because inference at the scale that we're at right now, you need a very high scale-up architecture. AMD does not have that with the MI 300, with the MI 355. When I mean scale up, it's like Nvidia's NVL72, right? When you connect 72 GPUs together, you have it's unified everything. You act like one giant GPU. AMD can only do that with up to 8. Now with I was almost going to say the Vera Rubin. Now with the Helios rack, that's changing, right? It's not going to be similar to Nvidia's NVL72. There's still going to be some weakness. But with the MI 450, you get that scale-up approach of 72 GPUs. So that's what the market likes, and that's what the market wants. Now, there's also other innovations happening with other players, but that is the stepping stone when you want to enter into this inference market. So that's why if you were an educated AMD investor, you would have known that this wasn't the quarter for the Helios rack. It's very true, right? The market right now is much pricing in high expectations in the upcoming quarters, and we can probably even talk about some of the commentary that management shared. But it's not like an Nvidia, right? Nvidia is trading at a forward PE ratio of, I don't know, I mean, great stock today, right? I'm super excited, but even still, probably way still low 20s in forward PE ratio, where I would say AMD is probably, I don't even know. I really don't know where it's at, but it's
we can take a
near
look.
that value. Yeah.
It'll take me a bit to build, but yeah, can continue.
Yeah. So now with the commentary of what we got from AMD's management, right? We had the second half of this year, data center revenue was going to accelerate versus the first half. In the first half, they did about $15 billion. So we're going to assume that in the second half, they're actually going to do more than 15 billion. Let's say they do somewhere around like 18, 19 billion. That puts this at around $32 billion in data center just this year. Then they kind of gave commentary for 2027. They expect the data center segment to double at least double, right? I think Lisa Su mentioned that when you're talking about 100%, you're talking way over 100%. And yeah, see, huge difference in stock valuation compared to the GOAT. So the market is really pricing in that data center growth that we expect to see next year. So if we do 32 somewhere this year, I think it's possible we do like 70 billion next year in data center space. So that's what the market is truly projecting, but is expecting. Then you also have an AMD's Lisa Su say that previously they gave us a guidance of $20 in earnings per share, 3 to 5 years.
Mm-hmm.
I'm a huge AMD bull. I believe Lisa Su sandbags. To me, $20 in the next 3 years was when she said that. I would say, sure, 3 to 5 years. Okay, I'm just because of how I know how you are, I'm going to put it closer to 3 years. Yesterday, she mentioned that they're exceeding the earnings per share. I forget what number. She said some adjective before it, like extremely. I forget what it was.
Okay.
And I don't know if that's an adjective actually, but yeah, I'm a numbers guy, not whatever.
Here, let's try to find this quote. Do you remember a specific thing that they said in the quote?
It was just put financial analyst day or analyst day if that comes up.
Yeah.
She goes on to say
it was mentioned 4 times, but
okay. That one significantly higher than the $20 we outlined. So significant. I mean, when you tell me significant, I'm not talking about $1 or $2. I'm probably talking at least $5, maybe even 10. But let's just go with $5, right? $5 on the $25 earnings per share. Again, I'm more bullish on it that I expected to hit it closer to the 3 than to the 5. Then you slap a forward PE ratio of 30 on that bad boy. 30 times 25, 750, and forward PE ratios are 12 months. So $750 price point in the next 2 years, right? Because if you got to give that 12 months, doesn't seem that crazy to me. And that's me saying $5 is exceeding. To them, to Lisa Su, does $10 seem exceeding? So to me, that the long-term opportunity is what I like there. I sometimes always feel like it flamed from both sides because I'm a huge Nvidia bull, like a huge Nvidia bull. It was fun listening to SpaceX yesterday, but I feel like you can be an Nvidia bull and still have kind of like the opportunity of where AMD can rise. I'm not saying AMD is going to destroy Nvidia. I don't think we're going to see these massive gigawatt scales that we're seeing with Nvidia, but in a space where you can get $20 billion per gigawatt, that's a huge number for AMD on the data center side. So that's my story for AMD, and I'm sticking to it.
But there's still an aspect of if AMD is going to do well. One, of course, I think a lot of people are betting on that there is market share gains here, but that Nvidia is not going to be significantly losing or something like this. They're still going to be able to put up their own guidance.
Oh, sorry. Go ahead.
No, I was just going to say that shouldn't investors be looking at AMD and Nvidia in similar buckets? That you're betting on the semi trade, and that they're both going to do very well over time.
Yeah, I think so. I mean, even if you're a bear of AMD and say they're never going to get X amount of market share, if the market is getting bigger, and we can see by CapEx that market is getting bigger, right? I mean, if you can just look at the CapEx numbers of all the hyperscalers, the market is growing. So even if AMD still stays around the same market share, or even if it just goes 5, let's say market share stays only 5, goes to 5% for AMD, and that's it. But if this market is ever growing, that revenue is still going to go up, right? That's revenue is still going to go up. So at least in that angle, yes, if you're voting for this AI story to continue to go up, I think AMD and Nvidia should be seen at least in the same bucket. Maybe one bucket is a lot nicer and cleaner than the other bucket, but they should definitely be seen in that space for sure. And obviously right now with power limitation, right? One of the big things that we see is power limitations, locking in supply chain. Even if Nvidia wanted to get all the market share that they can, they're not getting all the TSMC supply. They're not getting all the memory supply. They're not getting all the power supply, all the server supplies. They're getting a majority of it, right? A majority of it. But there's still the opportunity where a customer can no longer buy more Nvidia just because theoretically there's just none. Right. So that if the demand is that crazy, and Elon even talked a little bit about it yesterday, he said memory, for example, is only growing 20% in forms of capacity, but you're having AI demands grow over 200%.
Yeah.
So if it's growing that quickly, aren't customers going to say, do I wait one more year for Nvidia to give me chips, or do I suck it up and go to Lisa Su and maybe get a few 100 megawatts of MI450s and whatnot and what so. So I think because of the supply chain bottlenecks, it forces, if there is this huge demand imbalance, it forces customers to be okay with number 2 or number 3.
In terms of the memory supply thing, I think that's important. I don't remember actually catching that, but I think a lot of people, whenever they hear about supply coming online in mid 2027 or late 2027, they believe like it's going to we're going from essentially a dripping tap to like a full fire hose being on in terms of supply, when really it's like maybe a 20% bump. It's not the be all end all of like, okay, well now the prices are going to go back down to 2023 levels. There still is definitely going to be a supply demand imbalance. That points me to Sandisk as well, that we also have tonight. What are you thinking about the memory? They're more on the NAND side, high bandwidth flash. How are you feeling about this? Do you think that they're going to do well?
Yeah, definitely. I mean, even though I don't own memory stocks, I would be blind to say I am blind, but I would be blinder if I didn't see the opportunity. I mean, we're all these companies in conference calls that happened in the past few months mentioned that utilization on drives are near 100%. This is something we've never seen. And with now agentic AI solutions and just demand continuing to grow, like memory is one of the bottlenecks in this space. And I don't think technology can shift that quickly where it's not going to change in a quarter. It's not going to change in 2 quarters. So I'm pretty excited. I'm going to definitely read the transcript. I don't think I'm going to listen to the call, but the transcript I'm going to definitely read.
Yeah. Yeah. Has your opinion of Sandisk or Micron changed at all? Like, would you become a buyer? How has the thesis changed?
So it has, if we had sell-offs on just memory stocks and not the whole AI market, I would be a memory buyer. Recent sell-offs, I am very much bullish more in the neo-cloud space and networking side. But if it, like I said, if everything was going good and we just saw a sell-off in memory stocks and nothing else, I do believe I would be a buyer.
But why why Jose no own no memory sad face?
Yeah, I mean, to me, it's one of those industries where I feel I have the less visibility into. In the neo cloud space, I can easily see the demand of AI compute continue to go up, just based on personal experience. But on the back end of how that memory is being optimized, and all the other solutions happening in the overall space from supply and everything else, is not something I feel I can clearly see. And just because I do believe many people put the AI story with the memory story together, I don't believe they're exclusive. I don't believe they're, I don't even know if that's the right word, but I don't believe they should be put together.
Yeah.
Yeah. I feel even if the AI story in theory the memory story starts to dwindle, it doesn't mean the AI story or the AI compute story ends. So it's mainly my visibility. And when you're investing in this space, and I'm very much in high beta names, if I'm invested in these high beta names, maybe if I was more concentrated on an ETF or lower beta names, and then I decided my high beta would be memory, I would feel more comfortable. But when I'm already very high beta, I don't want to go with a higher beta that I don't have the visibility that makes me comfortable.
Actually, people are talking about it in chat. Do not look in chat. Do you see this currency? You're looking at chat. Don't look at chat. Do you see this currency right here? Can you guess what that currency is?
From Guatemala.
Yeah. That good work. Yeah. I think it's the Guatemalan Quetzal.
I just know because I know Rob. Well, I don't know Rob, but I know of him.
Got you. Jose said often that he likes Meta.
Yes.
Big fan of Meta and other big tech names.
Yeah, I mean, I tend to jump around depending on, and maybe I'm wrong for this, but this is just my style. There are times when I get worried for my high beta names, but so during those times, I tend to really get attracted to the Mag 7s, right? My favorite Mag 7s, Nvidia, of course. Microsoft used to be one. I don't know how I feel about that anymore. But Microsoft used to be one. Meta, I believe, has a huge opportunity ahead of itself, and Amazon. I would say those were my 4 favorite. So when the market, like I think September, not September, June, May, market was pretty hot, and I was just pumping the same video over and over. Hey, I like the Mag 7s because that's all I liked at that moment. Now with the real recent pull down, I did tend to be a little bit more aggressive on high beta names. I still am very more attractive on the high beta names right now, but Meta definitely falls in the list. I think if the high beta names were in down, Meta would be on my top list right now to be adding.
Yeah. What other stocks are you paying attention to in the market right now that you think are potentially undervalued?
Let's see. I mean, like,
I dare you to say a memory name right now.
No, definitely not. Definitely not. I'm a boring guy. CoreWeave and Iran are. I think neoclouds are just. It's crazy how bullish I am in this industry, and I don't add Nebius to the list because I'm not buying it, but Nebius would definitely fall in the list. Everything that we're hearing, right? I somehow ended up in yesterday. I was on my community. We were reading a construction engineering company. I never follow them, but someone recommended, hey, Jose, we should look at this one. And they really focus on building data center products. And the kind of commentary that we got from that company that is very outside of my wheelhouse is data center demand is exploding. I mean, if SpaceX, right? SpaceX just yesterday mentioned they expect 2 gigawatts by the end of this year. And then next year, they expect somewhere between 5 to 10. And Elon was like, let's say closer to 10, right? That's just on that company alone. You have, so let's say you go to 7 instead of 10. Let's go to 7. So that's 5 gigawatts added. 5 gigawatts added. Nvidia in the past has said 40 billion per gigawatts. Now it's much higher. So let's bring it up to 50. That's $250 billion in revenue for Nvidia from one customer, just one player. Now, within that $250 billion, that kind of falls into a lot of the supply chain in general. So bullish in the whole AI industry. And then Elon goes on to say that he expects kind of compute to still be very expensive due to the memory shortages. So if you're limited in power, if you're limited in memory, if you're having a massive demand growth in AI compute, what becomes a favorable business is the people being able to sell that compute to you. So to me, I'm a huge fan of the neoclouds. There are companies in the networking side like scale up and scale out solutions. Astera Labs just reported earnings. The stock was definitely trading at a higher valuation, but the opportunity. So I think they're down like 4 or 5% today. But Astera Labs as a whole, they're really focusing on that scale up approach. They do have optical productions that are active optical products that are going to be coming in 2027 and 2028. So if you're seeing that $250 billion being spent on AI infrastructure, you're going to have to figure out that the rest of the supply chain down is also going to be making tons and tons of money.
Yeah. I really want to touch on the neocloud side that you talked about. So I've been going heavy into the neocloud space, similar to you. But the thing that I constantly go back to is whether or not that they can afford to do this build out better than the hyperscalers. And it doesn't even need to be better than, it's just, I do believe there's going to come a day where supply of the data centers and the tokens is going to meet customer needs. And then pricing is going to level out. older generations of GPU prices is going to fall the way that it has over the past, like before the AI thing, before the AI boost, the past decade, you know? So whenever that happens, and that could be years away, how does a company like CoreWeave afford to build out the data centers at scale by only making, let's say, a 30% margin on the data centers that they're buying? So can I rephrase this? Just to put this into more context.
All right, whatever you just said, I erased it. Go ahead.
Okay.
Briefly.
Well, don't erase. Keep it in.
Okay.
I'm going to use a little bit of that information over there. SpaceX is going from 2 gigawatts to 8 gigawatts. Meta's going from, 3 to frickin' 14 by next year, or whatever the call out. OpenAI, Anthropic, they're all ramping up these similar levels where compute is 4, 5, 6xing coming online over the next year. Okay. I understand how Google can afford that. I understand how OpenAI can afford that. I can understand how SpaceX can afford that. They have external business. How does CoreWeave, Nebius, and these sort of companies who have been getting a lot of debt, but so are the big companies too. Google's getting debt and funding it from their own, their own business practices. How do they keep up?
This is the gamble. They have to accelerate their growth massively at the moment where demand is crazy. And the reason I mean that is right now, let's say, CoreWeave went from 400 megawatts, I think, at the beginning of last year to about 1 gigawatt at the beginning of this year. So in about a year, they added a lot, 600 megawatts. I think they actually added more. So right now, there's this massive demand where you're able to lock in these long-term contracts. And this could be, this is just coming to me right now. So it's going to be a lot of just random thoughts happening. But for me, right now is the opportunity where they can accelerate these rapid growth, because eventually CoreWeave is going to end up at a market where they have 3 gigawatts of power. And whenever they build the next data center, it's only going to be 100 megawatts. It's only going to be 200 megawatts. That 3 gigawatts of power is that business that's going to be able to allow them to build these other data centers without going crazy anymore in debt, right? So,
but the scale up now is larger than their current business.
Yes. And I think that right now is the time to do that. Right now is when they're going from 400 to 400 megawatts to 1 gigawatts to 2 gigawatts. Right now, the market is favorable for them. They're able to get these long-term contracts for a really great time. They're able to get all this. There has to be a time when there is going to be a time, and even CoreWeave has mentioned this, that their growth in data centers is no longer going to be it's going to be minimal compared to what they're pulling in cash. I do believe that opportunity that's going to happen.
They're going to go from 6 gigawatts to 7.5, and they can afford to do that.
They can afford it with that 6 gigawatt of business that they have, right? But you want to build that 6 gigawatt when the market is extremely hot on your favor, so you can get all these long-term contracts. You don't want to build that 6 gigawatt when the market is sucky, because you're building at a wrong time. Now, you also have to believe with this business that AI compute is going to be needed 4 or 5 years from now. If you believe this imbalance is not going to last year, you're going to be every single month, every single AI model that comes out or that becomes more efficient than the rest, you're going to see bears say, look, this is the end of the NeoCloud story. Look, this is the end of the token story. If you believe tokens are the demand for AI is not going to be as crazy in the next 3 years, I think you're going to have a hard time holding a lot of these NeoCloud players.
Yeah, I love the names.
But I agree, I think that's a great point to break, right? If this story doesn't play out, Google, Amazon, and all these players are going to be fine. The ones that are going to be destroyed, and it wouldn't be impossible for some of these players to drop if that story plays out where demand is not as crazy anymore. It's not impossible to see these NeoCloud players drop 20-30%, right? It's really not. So it is great to have that kind of bearish. I don't even know if it's bearish. Just that realistic approach on the neo cloud players. I can't see the CPU. AMD has shared their CPU roadmap and the CPU total addressable market. $220 billion by 2030. Obviously, I don't take that number too hard, but what I see is the what are they projecting that's going to grow the most? They have 3 different segments in the CPU. They have agentic sandboxes, they have head nodes of the AI servers, and then they have like traditional stuff. The only one that's going to really be doing the massive growth in this is agentic tooling. So AMD is telling me that we are nowhere near the agentic phase in AI right now.
Yeah,
and if the agentic phase is as crazy as they believe is going to be in the next few years without any other innovations happening in the industry, I can't imagine what the AI demand and AI compute is going to be. Now, if in 2 years we add something where AI has not only changed the agentic side, but changed the health inside, right? It's like different call options now that are still added into the AI industry. The demand for intelligence just continues to rise.
Do you think that the physical AI build out will be as large or larger than the agentic build out?
I think so, but I have a hard time wondering how it's going to play out between edge computing and data center computing. And that's maybe something where I need to do a little bit more research on. Is a lot of robotics and physical stuff needs to run instantaneously, right? It needs to have real-time answer. You can't have that latency there. But there also has to be some form of retraining and rebacking happening, right? If you have a robot and you have a huge fleet of robots, you have tons of data. Do every night or every other week, you send all that data back to the cloud so you can retrain your model and redo it, and then you have to send it back. So there has to be some form of cloud and edge mystery there. I want to learn like how does that play out?
Yeah. Maybe some local models that end up being small enough to run on the system, know their little bit of tasks, and you can kind of do like recursive self-improvements over time to learn about some new tasks that you ended up seeing your master do or whatever you want to call it.
So that I think robotics and physical is going to be fun, but I really want to see how it plays out between.
I lost you there a second. You said it's going to play out between, and then you cut out.
Yeah. Oh, sorry. I just want to see how it plays out between the two, the edge side and the cloud side.
Regardless, AMD, Nvidia, the networking names, they still play a role here, correct?
Yep, 100%. So I mean, Jensen is really pushing for right. They just released an open source model for autonomous driving. So for him, even if vehicles themselves are very much physical AI and a lot of it has to be done in edge computing, if Jensen wants this market to grow, and he's kind of innovating in this space, sorry, my little one is screaming. I'm gonna have to jump out on this one. Are you
coming back for Sandisk earnings?
No, not today. But he knows that data center is going to come out in the autonomous space as well.
Yeah. Well, if you have to go, Jose, no problem. I really appreciate you jumping in. Thanks for having, thanks for joining me. Thanks for having me. Yeah.
Thank you for joining me, Tanner. I'll see you next time.
Yeah. All right. And I'm out of here. Sandisk will be the main event. We're going to be joined by Neil, Couch Investor, and Amit Kukreja, for which actually we have a second channel. If you guys didn't know, we have a clips channel, reaction channel, all that sort of stuff, including a lot of the interviews. We've got a Reddit video coming out today. Shopify will be on there later. The stuff that I don't think does very well on the main channel. But if you guys are interested in that, we actually just uploaded the video with Amit. If you weren't able to see that, let me go ahead and pull this up. And if you could, subscribe to the second channel. I don't know how to bring it up when I'm on the actual channel. Okay, Let's jump over to the next story, which we only have about 15 minutes until the streams start. Almost got banned here. All love Tanner. Been listening for 2+ years. You're the reason I'm a SoFi investor. Cheers. You weren't ever going to get banned. Don't worry. We barely banned people. But dude, consensus was in. They didn't want to mod you. I don't know what it is. I would have loved to have been a mod, but I don't make the rules around here. The chat does. Michelle, thanks for putting it in. Okay. So, aside from that, markets are actually doing okay right now. S&P 500 is still green, ever so slightly, 0.01%. Essentially flat from yesterday's close. Will we end up closing green? It's a mystery right now. NASDAQ down 0.56%. A lot of really great names showing off strong earnings. We had about an 85% beat across earnings expectations. I think Morgan Stanley came out yesterday talking about that. That's not including Shopify and Zeta and Shark Ninja and all of these companies. Dude, Shark Ninja's $180. Oh my gosh. If you guys don't know this, I was a shareholder for probably about 9 months, maybe a year in this company. It just sort of stayed flat the whole time. And while I love this business, there was so much appreciation going to the CoreWeaves and Nebiuses of the world. So I'm pretty sure I sold out of my Shark Ninja to buy Nebius at the time. Now it's starting to see some appreciation as some of the gains in the market is not just concentrated into one sector. There's been a lot of love across the board, which is also why the S&P 500 looks so healthy right here, because not only is software ripping, but so are the semis. And, you know, you're kind of seeing both sides of the trade happening at the exact same time. I'm trying to see a little bit of a report on their earnings. Net sales increased 22.2% to $1.76 billion. Gross margin decreased 30 basis points. Net income decreased 7%. Why is this up so much? Q2 was a standout performance for Shark Ninja, with net sales growing our fastest pace since 2024, powered by broad-based strength across all categories, geographies, and channels. This quarter was a clear demonstration of the size and durability of our core business, an area we believe is often underestimated. Our largest, most established franchises like cleaning and blending continues to grow through diversification and relentless innovation, and our expanded international business delivered 36.6% growth, accelerating yet again with strong results across UK, Europe, and Latin America. Very cool. Very, very cool. So this company IPO'd not very... Oh, sorry. I was like, that is not Shark Ninja. This company IPO'd back in July of 2023 at roughly $25 a share. Now it's $185. This has been a 6x in the past few years. It's been an unbelievable outperformer. And it's just about selling vacuums, blenders, and air fryers. It's an amazing business. Okay. Let's check CNBC if there's any new stories happening right now. Boring is better in this type of environment. Ooh, maybe some rotation away from some of the highly volatile stocks. Doesn't help me whenever it comes to, you know, the covered call selling on some of the AI names. I actually really do like the volatility. It's sometimes hard to stomach, but let's see what they have to say.
Chief ETF strategist at Baird Strategas. This, you know, Todd, every time that this warning comes, my phone lights up and people want to know. And I can be quite vulnerable to these guys. And I go, he's right. And I'm like, I need to tie myself to the mast with a blindfold and not listen to this. I mean, with a long enough time horizon than anything other than being an institutional money manager or having to send your kid to college in 2 weeks' time, Who should move to the sidelines?
Boring is better in this type of environment, especially depending on what kind of investor you are, right? If you're more tactical, there are some stuff out there that still is a head scratcher, right? Money continues to pour into technology and semiconductor type ETFs. I think that's a little bit concerning. The behavior there is very aggressive. But for most folks, just ignore it, right? Stay the course, stay diversified, and understand how much exposure you have in tech ETFs.
You're not saying it's not going to happen.
Right.
1987
It could
happened. Guess what? There was no recession. Like these things, these market corrections happen. Nobody's saying a correction is not going to happen, yourself included. No one's saying that a bear market, no one's saying something like that couldn't happen. The point is, again, other than if you're running money or think you can time it perfectly, there's nothing you can, what are you supposed to do about it?
But here's the thing, though. I think the reason why people are saying this is because we have not had a true bona fide recession, like a traditional recession, since the great financial crisis back in 2008, 2009. You can argue that COVID was one, but that was a man-made, we did it to ourselves. We shut down the economy, did it to ourselves. We haven't had a true recession in like 20 years at this point.
There's been more rolling recessions, right? Maybe not official ones. And we even just went through a rolling correction to some extent as among the most popular corners of the market, right? Semiconductors went down 20 to 30% in July. So does it think it's possible? Yes, it's extremely rare. And I think investors should just understand how am I positioned across my whole portfolio. Do I have the right ballast?
Yeah, I mean, I think again to restate the stakes. If someone listens to this and gets out of equities, when are they supposed to get back in?
Well,
I'm speaking from experience. I've done things like this in the past, even a couple of years ago. Jobless claims are rising. You know, it looks like this is the economy could be rolling over. You get out of the market and then you chase it back higher at some point, unless we're saying that it's going to be a lost decade.
Yeah, and I think that's why you cannot take as much as they are famous investors. They have had great calls at some point. You cannot listen to every single word that goes out there. The time frames are completely different for some of these Substacks that are out there versus
the old Substacks getting brought up. Lost decades being brought back into conversation. I just really can't see that being a possibility here with the amount of earnings beats that we're seeing. Obviously, there might be some broader macro concerns that people bring up. Maybe overspending, lowered growth after a euphoric run or something like this from a lot of the big tech. But it's not just big tech that's winning. It's not a small area of the market that's benefiting from AI spend. We just saw Caterpillar's earnings. You're seeing a lot of the infrastructure names, construction names, energy. All of this ends up going into rising wages for these different businesses, which then flows into the restaurant businesses and e-commerce businesses, and eBay and Shopify and Costco end up doing well. And so I don't really see if that's going to be the case, that we do end up seeing some form of lost decade. But today's going to be one of those days where we end up seeing a big sign of, hey, can this bull run continue? We have many, I wouldn't say the sort of biggest names in our market. These are more like B tier type names for our industry, but a lot of them in general. So let's have a look here. The middle one here is today. That's the Wednesday. We have AppLovin, SoundHound, Mercado Libre, IonQ, Sandisk. This is going to be the one that we end up listening to live with Amit and Neil. On top of that, we have Western Digital, Duolingo, Axon, Joby, Block Dave, Chime, a bunch of these names. Now, although I don't have these checked off, we're still going to be looking for energy fuels or Figma, Centrus Energy, Dutch Bros, eBay, Etsy, Accelera. All of these names are going to be very important. We'll try to get you guys all the numbers in real time. We're going to be joined by Amit here in a moment, and Neil within the next minute or so. But who do you guys have in terms of being the biggest winner tonight? I think Sandisk, just like what we've seen across the memory space, I'm most excited to see that report. Western Digital, I think, will also likely surprise to the upside. But then we are going to have AppLovin end up showing off their numbers. Axon, these are likely to do very well also. Amit, how are you, brother?
What's up, man? How are you?
Doing well. I can hear echo.
You can hear an echo.
Yeah. Oh, I can hear me.
You can hear you. So let's do something to change that. Okay, that should be better, I think.
Okay. No, not at all.
Not at all. Well, I can hear you. Okay, give me a second.
I can hear myself perfectly.
Okay, how about now?
No, nothing. No difference.
Okay, I'll be back in a second.
All right. Someone says he looks like a highlighter. I think that's the Robinhood hoodie, actually. Sporting one of the greatest names in fintech. You guys, it's not just me, right? Everyone heard him? It does sound like the wrong mic. It sounds like a webcam mic or something.
Okay.
Okay. No.
Dude,
I hear myself as loud as I'm talking.
How about now?
Hello. It's getting louder.
Dude, the mic's been weird all day. I have no idea why that's happening here. What about now?
Check. No.
All right, it's your show, bro. I'll be back. I'm going to try to fix this in a second.
Are you using a different mic?
No, I'm using the same mic. Dude, I have no idea what's going on. Today's been...
Just put in headphones.
Yeah, I'm going to put in my head. Let me get my AirPods.
Okay. All right. Sorry, guys. We'll get this figured out, and then all shall be good. Dude, this is why I love the Fiscal AI team. I messaged them, and I said, guys, I cover SoFi all the time. I would appreciate if you guys put more of the SoFi metrics on their platform. I said this like a day ago. They sent me a message today. Hey, Tanner, all of the new metrics have been updated. That's why I like Fiscal AI. So let's go see if they actually did update it. This is going to be pretty embarrassing if they email me and it's not true. But they should have added all of the financial service products. Money, invest, credit card, referred loans, crypto, plus Outwork Relay. You're welcome. All right. Welcome back.
How about now? It's working, right?
It's the microphone is coming from your headphones now. I don't hear myself.
Oh, hold on. Okay, now you should go. Sorry. Today's been weird, bro.
Yeah, and it's coming in loud now.
What's going on. Anyway, I don't know what to do. This whole morning, it's been fucking weird. This should take the audio down a lot right here.
Here, let me turn off my background as well. This is not my stream anymore.
Yeah, today's the AK Media short, guys. I'm sorry. Today's an AK Media short. Okay.
Are we being joined by Neil as well?
I think so.
Okay.
I think so. Should be good now. Should be decent. If it's still bad, let me know on your end, Tanner. It's fine now.
Take it away. I want to hear about what you've been focused on today in the news. This is your show.
Okay. So obviously today's been a really interesting day. Dude, there's some headlines. I'm sure you've covered it, but the Google DeepMind dude left. Dennis?
Yeah.
It makes sense why Google's getting hit. Let me share my screen right here as well. So we got a lot of earning guys to go through. Seda, obviously having a great day, 27.50. That's up 13%. That's been a fun mover today. But Googs did not expect the head of AI. This guy's been their most public PR person to leave, which is a bit weird. So I'm sure there'll be stuff to analyze when it comes to that. Outside of that, I feel like a lot of price action has been consolidating today. Micron kind of been stuck within 20 bucks. Nvidia, Tanner, you got to be happy about seeing 220. It's been a while.
Yep.
To get there. Yeah, he didn't leave Google, but he left his position as the head of DeepMind or the chief AI guy. So I think that's why the market reacted to it. If he left the company itself, I think the market would be a bit more upset. But it is weird, right? Because this is the guy that talks about, staying up till 4 a.m. coding, thinking about AI stuff. And now He's moving into a more managerial role, which I think the market's questioning if Google's already behind Anthropic and Claude when it comes to agentic experiences in the enterprise. Then what's going on right there? Nebius down 1%, Iren down about 4%. I think a lot of the semis consolidating today is pretty normal, especially because they've had a massive run over the past couple of days. Same thing with the software names. The earnings that we have today after the bell, guys, it is going to be absolute chaos. Sandisk is the one that we're going to be listening to, and I think that's going to be the one that's going to be the most important because we obviously need to know what's going on in the memory sector. Western Digital is also today. That's important. Seagate crushed it, so I have no expectation for and SK Hynix and Samsung crushed it last week, so I have no expectation for Sandisk to be bad. But nonetheless, those are going to be important. Then you have AppLovin, software stock, Melly, International, Duolingo. This one's actually had a really good run over the past few weeks. Figma, I think it's going to be interesting. DoorDash, Axon, Elf, a lot of consumer different brands, IO and Q, Quantum. So I just think we need a solid day of continued earnings beats. I don't know which one of these names outperform. I'll do a poll in my chat, but yeah, Tanner, I mean, I know you know Micron really well. Do you know a lot of the internal dynamics around SanDisk, and do you have any kind of big expectations for it?
No, I mean, I assume that there's going to be a big boom. As much as we've seen a big boom in DRAM, we're likely to see the same thing happen in NAND. I did want to bring up, I just saw this story pop up a few seconds ago. Trump administration plans to impose tariffs of 15% on polysilicon derivatives.
Whatever polysilicon? What the hell is a polysilicon?
Polysilicon derivatives.
Does anyone know what that means? I have no idea what that
They're
means.
the essential inputs for solar panels and semiconductors. So sorry, I thought that meant like polysilicon and its derivatives. I was like, anyway. But yeah, so they're saying polysilicon and the like for solar panels and semiconductors. China controls over 80% of the global production capacity, prompting U.S. efforts to reduce supply chain dependence via Section 232 investigation.
Is that actually helping T1 Energy? T1, wow, straight moon, 470 to 550. I actually heard of this headline yesterday. I mean, it came out, I didn't know it was tariff oriented, but it was Trump definitely trying to incentivize more of this stuff in the United States. Okay. Decent for, is Enphase up at all? Enphase, no, that one's still down 6%. All right, so some of your solar names still getting hit right there, which is interesting if T1 Energy is getting the bid. Meta basically flat on the day. SpaceX, ugly day, down 12%. Palantir down about 3% after a 30% day overall yesterday. I mean, put in the chat if you have a SanDisk position or a sizable memory derivative, because obviously I think the entire memory trade will be impacted from SanDisk. In terms of these sleepers, Duolingo, Figma, Elf, are there any that are catching your attention, Tanner? Because
yeah,
I don't know. I think there's a couple that could really make a big move today.
Yeah, I think Figma could make a very big move. Their earnings over the last couple of quarters have been nothing but exceptional. However, people keep questioning some of the partnerships around Anthropic and these sort of things. I think that they could really come out with a big surprise. Also, I think another sleeper pick that people are not really paying attention to is Dave and Mercado Libre. Dave has been such a winner. They have posted unbelievable earnings for probably the past 8 or so quarters, and yet it's still a very small cap name, or mid cap name that retail is not really paying attention to.
I think that's fair. Dave has outperformed every fintech the past 5 years, I believe.
We've got a lot of names in this list that are either in my portfolio or in the stock draft. We've got Mercado Libre, Chime, but in terms of the stock draft, we also have Fluence that I think Chris has, and there's one more. Fastly is tonight, Sunrun, Abcelera, Zillow.
SoundHound. I know people have liked this one. Oh, Zillow's tonight. Okay, so there's gonna be is SanDisk at 4:30 or 5?
4:30.
Okay, so we will have 30 minutes, folks, to really get through all the earnings. By the way, Burry just sold DraftKings and Flutter, so he's out.
Wow.
I don't understand why he bought them in the first place, but okay, so there are gonna be a lot of earnings that we have to look through as we get into it. Zillow, SoundHound, Fluence, Chime, Fastly. I think everyone is gonna have a different kind of take on all these different positions that are out there. AppLovin was actually green on the day, now going red. But SanDisk, this is the main one. If this thing tanks 10% or it's all priced in or something, that's not going to be fun. And I think that's kind of why Micron's been range bound today.
Do you? I mean, we can pull this in terms of it being a pump or dump, but I don't suspect that they are going to do anything other than beat earnings by large double-digit rates.
Yeah, I think they're going to crush, but like Micron crushed and then fell 40%. So was that bad macro, or was that the market saying you crushed so well that we think you're not going to be able to crush further than this in the future because of the cyclical, which if it slows down, but it's still really good earnings, then who cares, right? So
yeah, but you know what? Sandisk last quarter fell on its earnings initially. And I remember that because it fell below $1,000. It went to like 999 at one point. But that was 3 months ago, and now we're 36% higher. You know, so will it matter if over the long term, you know, people start to turn and look at this as being undervalued versus how much earnings they're actually putting up? I don't know.
By the way, on my side, guys, let me know if the audio is way better from the morning, because if all I had to do was put in AirPods to fix it, then you guys will see me with AirPods on for the foreseeable future. If that's all it took, then that's amazing. That's amazing. Yeah, I agree. I put the poll in the chat. 63% of people say Sandisk is the one that is going to outperform. Then you got Figma, AppLovin, Duolingo. It's all good. It's all good. All right. AirPods, baby. Shout out to Apple. That will be part of the attire every day. Duolingo is still down 23% this year, even though it's up from 90 in the April lows.
Yeah. Duolingo is also in the draft. Matt picked that.
Matt did pick that as well. Elf, I know a lot of people like that one. This has made like a 40% move, or I think, no, it's made like an 80% move in the past month. So again, same thing like AMD. Maybe it just ran up too much into the print, but will give us an expectation of what's going on with the consumer. What did people do today? Any moves in the chat? Bought, sold? Tanner, did you buy, sell anything?
I have not purchased anything today. I'm almost near like all-time highs. Obviously, I need Nvidia going to 240 was whenever my portfolio topped out. It's by far my biggest position, but Shopify right now, it's a green day for me. Nvidia up 4%, Shopify nearly up 17+%. Those are my two biggest names in my portfolio.
Yeah, I've never experienced a Shopify green day until today. So this was fun.
I'm happy you're in it with me, man. This is it was a great earnings call too. I don't know if you listened or not.
I've not listened to the earnings, but the growth was phenomenal. And I think that's, you know, you buy companies where the growth is amazing and it's reaccelerating and they disprove the narrative. I think Shopify and Zeta in particular proved today that when the noise is the loudest and people are talking and chirping, if you just know what you're buying and you're buying at the time when everyone hates it, that is where you make money. Like Shopify was under 100 for like a month. Zeta was under 20 for like a year. It was at 21 last night. Like, so there's opportunities to just buy if you believe in something. And the market eventually catches up, right? Sometimes it takes a long time, but eventually the market needs to allocate capital to growth. So I see a bunch of people in the chat here took some profits throughout the day. A bunch of people sold some Zetas, sold some AMDs today. Obviously that one, we covered it yesterday. Great earnings, but just got ahead of itself in terms of the actual valuation, down 6%. SpaceX actually had a big bump in the morning, and now it's right back down to the lows of the day at 14%. So I don't know.
Are you getting this name at all?
SpaceX?
Yeah.
No.
Like if this gets down to 90, are you interested?
Nope. I know too many people that are going to be dumping their bags on me if I buy it. Like I just feel weird buying it. So I'm not interested right now. But look, now if it's 90 in a year and the company's grown so much, maybe it's more interesting. But I think there's other opportunities. Robinhood, again, a little bit of a dump into the close, 92.90, did hit 95 today. Enphase down 6. We got about a minute. All right, folks, here we go. Sandisk, it's a big one for memory. It will kind of determine the trajectory of some of these other memory stocks. Figma app, I think, could be really important for SaaS. Obviously, we got Duolingo. Overall, S&P did hit 776. We're closing red, as we probably should, because it has been a massive 2 days. It'd be kind of crazy if we were up another 0.5% or 1% today. So I think today's been good consolidation, and hopefully we just get some good earnings to keep this going.
I'm happy to be here joined with you, man. It's greatest time to be covering the stocks is during earnings.
It's fun. Thank you all for being here. We got a lot of earnings to get into. 4:30, we got Sandisk. It is now Wednesday, August 5th, 4 p.m. The stock market is closed. can't hear it that well with the AirPods in, dude. It sounds
No mute, gang.
I know what you guys feel like now. All right, S&P closed below 770, 769.77, basically flat on the day, although we did have some nice green momentum in the morning. Palantir down about 2.6%. You got Meta 588, Roblox down about 2% after being down 10% over the past couple of days on earnings. Zeta ends at 27.09, got up to 28.50, still 11% day. Highest price it's seen in the past 52 weeks, which is nice. Micron actually closed below 900, 893. Nvidia closed below 220, so everything got a nice little dump towards the end of the day. But again, this week has been relatively good for many of these names. Even Shopify got a red candle towards the end of the day, but up 17%. Gold was up today. Netflix was up a little bit today. Flutter was down 11% on earnings. Disney was up 3.6%. Your Figmas of the world were up 3.8%. AppLovins, which got an upgrade this morning, that was down 0.5%. But this one, based on their growth, I mean, this thing was an $800 stock at one point, got into the S&P 500. So if they have a really good growth quarter, maybe that sentiment comes back. SpaceX down 12%. AMD down 7%. And then this is what we got for earnings. What'd you say?
Sandisk is moving.
Sandisk is moving. All right. So we got a lot of companies. Let's start with Sandisk. Hopefully we get those results very soon. Up 1% after hours, was down 5% during the day. So we need to get up at least 5% to break through the intraday action.
Mercado Libre up 2.7%. I don't have any of the numbers just yet.
Me either.
Axon is out. Double beat. Beat on EPS by 2%. Wall Street wanted $1.84. We got 188. Beat by 4 cents. Revenue, 876 million was the expectation. They did 904 million. Beat by 3%. 2 small beats. That's all the information I have just right now.
Axon, another SaaS company, also hardware play with body cameras.
Yeah.
Stock flat after hours, but you got a double beat. This thing was like at 300 at one point this year, so it obviously has made a pretty big move. Okay, Western Digital. This is also in the memory space today. Oh no, that's down 7. SanDisk is flat. I don't like that for SanDisk if Western Digital is down.
Duolingo's up 7.
I mean, dude,
trim Western Digital, buy Duolingo.
It fell 80% at some point. It had to make a move, right? There you go. That's up 7. Western down 4. SanDisk down 2. I don't like the sign of this. I don't have exposure to memory, but I do not want memory to tank. That really messes with high beta.
Western Digital double beat, but revenue beat by 1%. Revenue's up 44% year over year, but that is not the smashing beat that people wanted to see. EPS beat by 8%. Wall Street wanted $3.30. We did $3.56.
That's not
Western
enough.
Digital is down.
That's not enough. I mean, these are not the record-breaking beats that we had last year or even 90 days ago. That is not enough. I mean, it's good. Don't get me wrong. Yeah. But if the SanDisk has got to come with a big beat because the market's already interpreting that SanDisk is going to have the same as Western Digital. Duolingo up 8%. Don't have their numbers yet, but that's green. Mercado Libre.
I got the numbers.
Go ahead.
Mercado Libre beat on revenue by 4%. Wall Street wanted 9.7 billion. They did 10.2 billion. EPS, they wanted $9.11. They did $9.19, beat by 1%. So big beat on revenue, 4%, but almost met on EPS. But revenue year over year up 50%.
Goodness, dude.
They're growing faster than Western Digital.
That company just compounds. They just grow. We have Square, which is up 3. Adjusted operating income 875 versus 865. That's a beat by 10 million. This is the company that did 60% of layoffs last quarter. Stocks up 3 right there. Looking for revenue and EPS, but they beat on adjusted operating income. Don't have Chime yet. Don't have SoundHound. Trying to get Duolingo's numbers. I still don't see that yet, but it should be relatively good. Mercado Libre up 1. Axon up 3. Symbotic up 1. Epsilera don't have their numbers yet either.
Really big beat on Western Digital's Q1 guide. So for next quarter, they're expecting a big beat on adjusted EPS and revenue. That was higher than Wall Street expectations.
Why is it down 9%?
Yeah, management said that they expect further margin expansion and strong free cash flow generation.
Dude, I feel like the market has priced all of that in and they're not happy enough with it. Either that's a gross overreaction or Seagate after hours is down 2. Micron after hours is down 3. SoundHound, they beat by 23% on EPS. -10 versus -13 expected. Revenue 61 versus 52. That's a beat by 18%. EPS is up 47% year-over-year. Revenue is up 45% year-over-year.
SoundHound kind of crushing it here.
They crushed it. Oh no! Oh no! Oh no!
Uh-oh.
Oh no, 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 no. No, no. Please no. That's
Chris's
a little
spreads are
nasty.
doomed, bro.
Oh, dude, of course Chris buys memory today. Of course. This is Nebius. Okay, Sandisk down 10, Nebius down 1, AAOI down 2. See, this is the thing, bro. Sandisk is not just Sandisk. It's everything high beta and AI. You don't want this to crash. Why is it down 7? They beat by 14% on EPS, 39.25 versus 34. That's a $5 beat on EPS. That's not a small amount. Revenue 8.9 versus 8.39. That's a beat by 7%. Nothing that crazy, but still, EPS is up 13,000% year over year. Revenue is up 372% year over year.
AppLovin.
What just happened?
AppLovin came in line on EPS, missed by 1% on revenue. Revenue still came in at 53% up year over year, and EPS was up 57% year over year, but there was no double beat. This is kind of in line on both.
No, but how is AppLovin down 21%?
I think the whisper number must have been much higher.
But this is a very large company. They don't fall 20% on missing a small whisper. This is not Amazon. Like this, the street's that harsh on AppLovin. That is unbelievable.
That's wild.
I mean, it's kind of believable, but it's still I mean, that's crazy, dude. That's crazy.
They were
go deep in the numbers
going
guys,
into they're not a cheap company.
Yeah, but they're growing. Like Shopify's not cheap either, right? And they grew, right? Like that's interesting. Sandisk, fourth quarter revenue, Street wanted 8.4. They came in at 8.97, so they beat on the guide. Adjusted EPS, Street wanted $43. Sandisk said we're going to do 46. That's a beat on the guide. I don't see the red flag in Sandisk other than the Street is not that excited about the sexiest trade of 2026, which was memory. And
Figma, I knew it. They're doing such great things. Revenue beat by 5%, EPS beat by 100%. Street wanted 4 cents, they did 8 cents.
Yeah, Figma should be pumping. This is a no-brainer. I mean, this one, it's been dead for so long. So this is kind of reminds me of Zeta, like a SaaS company that can beat numbers and has been depressed. So yeah, Figma revenue up 50% year over year, beat by 100%. Stock-based comp is still a concern, but Anthropic killing them is hopefully not anymore. $29. AppLovin, I cannot believe this, dude.
Yeah, that's 21% wild.
Down.
Someone in the chat said TTD V2. Like, is this the next trade desk?
Well, Trade Desk's growth is abysmal. AppLovin's like at what, 80%? They came in. That's their top line. 70%.
No, AppLovin I think was 48%.
Okay,
53%. 53.
Last quarter was like 60. So I don't know if that's horrible. Yes, Figma revenue was up 50% year over year. Fastly, that stock is up 11. Thank you. We don't have the numbers yet on this, but that is green. We got DoorDash in a second. Figma now up 6%. Sandisk down 4. It was down 10. Trying to recover AppLovin. There is no recovery in sight. Elf, I don't have the numbers yet. I do have Dutch Bros. Dutch Bros beat by 10% on EPS. 33 cents versus 30 cents expected. Revenue 550 versus 525.
AppLovin's down 28%.
Yeah, I don't get it. Dutch Bros up 4% after hours. EPS up 27% year over year. Revenues up 32%. Dutch Bros growing more than tech companies. Some of these tech companies, they've continued to increase the brand. Duolingo just lost it. 150 back to 134. They beat by 8% on EPS, beat by 1% on revenue. EPS is down 30% year over year. Revenues up 18%. Some funky stuff going on after hours, dude.
Chime is another one. I don't have their numbers just yet. This one I actually have in my own portfolio. That's up 6.5% in the after hours. This company has actually had like a quiet little reversal, or not reversal. I mean, like it's gone up a little bit over the last month. I didn't even realize.
Chime up about 5% after hours. IONQ missed EPS by 747%. Street wanted negative 60 cents. They came in at negative $5. They do 80 million in revenue versus 66. So they beat expectations by 21%. Revenues up 287% year over year. EPS is down 626%. This is a $14.9 billion company doing about $300 million of revenue a year. The CEO did say Nvidia GPUs would be cooked by 2027 and replaced with quantum computers. I don't know if that's happening. Did Figma reverse? Oh my goodness, Figma. What is going on after hours, bro?
Can you imagine Elon Musk comes out on the SpaceX call and says we're exclusive to IonQ?
Yeah, that would be funny. That would be.
Wow. Did you read Elf's numbers? These are unbelievable.
I have not. Go ahead. Go for it.
They beat on revenue by 11%, and they beat on EPS by 143%.
Is Elf up?
Barely.
We get Elf up. Elf is down 3. Okay, so Elf has a massive beat on EPS, 140%, beat on revenue by 11%. That stock's down 4. Duolingo was up 10, now it's down 4. Figma was up 7, now it's down 11. Sandisk is hopefully trying to break even right here, but it was down 10, now it's only down 1. SoundHound is the only one holding on to some of these games. DoorDash is down 2. They beat EBITDA 914 versus 843. Marketplace 33 billion versus 34 versus 33.4. It looks like they beat on the top and the bottom. That stock basically flat.
If you went on the earnings predictions on Call Sheet and just put $10 on SoundHound would be the biggest winner today, you just won $4.3 billion. Like, no one had this in their prediction. This is unreal.
I mean, this is the stock market. Greatest show on earth. Here's some more coverage on Sandisk. This is really important to figure out what the street is so upset about here.
The non-GAAP gross margins for the quarter were stronger at almost 85%. The street was anticipating 80%. A reminder, Sandisk was spun off from Western Digital just in 2025. They make NAND, so that's a memory that is stored on an actual device, disk drive, USB, etc. And so their guidance was a mixed bag, what we also saw with Western Digital. So the guidance EPS at $45 midpoint, a little bit higher than the street, and it was the Q1 revenue guide that was just a touch higher than what the street anticipated. So perhaps that is the reason why shares did initially drop, coming back a little bit, and then the non-GAAP gross margin guide is higher, about at least 5% higher than what the street anticipated. So that's strong there. No major quotes or anything in the release either, but you can really see the discrepancy between Western Digital and Sandisk. These are names that have soared, to your point, year to date, Melissa. This one was up over 460% into the print. So perhaps just profit taking right now.
Yeah, although
I know it's an excuse no one wants to hear, that it's profit taking, but honestly, some of these names, that might be the excuse.
Yeah. By the way, the Call Sheet thing was a joke. Your audience takes me way too seriously.
Oh, I took you seriously, dude. I thought you looked at the numbers.
$10 is making $4.3 billion.
I was a little confused, but I was trying to pull up the numbers, so I didn't really factor it in. But I was like, oh yeah, that's kind of crazy. But Fastly's holding on to some of its love right here. Fastly's up 7. They beat EPS by 114%. They beat revenue by 5%. EPS is up 600% year over year. Revenue is up 23% year over year. DoorDash, they missed EPS by 2 cents. 46 cents versus 47, missed by 2%. Revenue, they beat by 3%. EPS is down 29% year over year. Revenue's up 36% year over year. Elf, I don't know why this is falling off a cliff after beating earnings by 170%. Same thing with Figma. Zillow beat by 16% on EPS, beat by 2% on revenue. EPS up 30 year over year. Revenue's up 18. Zillow's also down 2% after hours. The only thing holding any level of gains is Chime, Fastly, SoundHound, Axon, which is barely anything. Everything else. Dave is down 18, Tanner.
Hey, I didn't say I hold it. I just said this is a company that's gone from 5 to 500. Okay, in the last 30 months or something. It was one to follow.
But like, were the earnings that bad? Like
I don't know. I haven't got the numbers.
Elf down 8, Sandisk still down 2, Figma down 14 now. Dutch Bros was up 7. Now it's down 1. This is a weird Wednesday.
Dude, Micron's up 1% in the after hours. Micron's up.
I hope that's a good sign for Sandisk coming back. This is oh, what about Fluence? Didn't they have earnings? Fluence?
Yeah.
Oh my goodness.
Chris,
it's numbers on a screen, guys. That's all it is. It's just numbers on a screen. They go down, you don't look at it. They go up, you pay back attention. Why is this down 18? Every AI play outside of Fastly and SoundHound, which are, derivative AI plays, getting demolished here.
Western
After
Digital down 9, Duolingo down 7.
eBay beat by 6% on EPS, 160 versus 151. They beat by 4% on revenue. eBay's revenue up 15%, EPS up 18%. eBay is flat. Where is Accelera? That's the biotech that's down 5. I don't have their numbers yet, but that one's also getting hit. HubSpot, they beat by 8% on EPS, beat by 1% on revenue. This stock is down 9. Now, HubSpot, I don't know how much of a moat these guys have in SaaS, but I mean, EPS up 49% year over year, revenues up 20. Street takes it down 9%.
Yeah.
Fluence missed EPS by a lot. I don't have those numbers. Let me see if I can get it. Fluence is also one of those X names that people are very excited about. Okay, revenue. Wow. Street wanted 848 million. They came in at 649. That's a miss. EPS, the Street wanted them to give you 2 cents of profitability. They came down to negative 24 cents. Yeah, these are not good numbers across the board. I mean, not necessarily across the board, but on many of these names, the numbers just aren't good enough.
AppLovin's going to be an interesting one to follow while they have their call. Adam's definitely been one to share some new guidance numbers and things that maybe analysts weren't thinking about previously. So this one has come back in previous quarters in the after hours. It already has. We dropped below $300. Now we're sitting at $335. So I don't think that this is the price that we're going to open up tomorrow. Let's just say that.
For AppLovin?
AppLovin, yes. Adam, the CEO, could say a lot on the call.
AppLovin down 20. Tanner, you can share my screen. Honest, I don't have those numbers. I should be seeing it soon. Is Honest down? Honest is up 4. Now, Honest is a small company, 400 million. But that's up. Fluence, again, we talked about that. I don't see the earnings for Honest yet, but that's up. Joby, I do have their numbers. Joby is beating revenue by 27%, missing EPS by 9%. EPS is up 40% year over year. Revenue is up 25% year over year. Joby's flat.
But what is their what's the base on that?
They 30 million.
Okay.
So it's not it's not a lot, but Sandisk, can we get green? Dude, Sandisk is a little scary, bro, because this was not like a type of. I mean, Western Digital, you could say those numbers weren't as good of a beat as they needed. Sandisk put up some big boy numbers. Sandisk put up some big boy numbers. Oil after hours is at 74.90. It's actually the lowest of the day, so you can't even blame the macro here. IONQ missed horribly on EPS. Stocks up 2% after hours, but yeah, they missed by like 700%.
Is everything honestly like, were earnings that bad? I felt like 80% of the numbers that we covered, if not more, were green.
Yes, but some of them weren't as green as they needed to be. Having said that, they were not bad enough to be down 10 to 20%. The initial moves is what's confusing me. Like, why did Duolingo and Figma pump, and then 5 minutes later, like, did another number leak? Did the market switch their attitude? Is this more algo macro driven?
I don't think I've ever seen this in my life. SMR expected revenue was 11.9 million. This must be incorrect. They did $75,000. They missed revenue by 99%.
Dude, I think you and I are doing more revenue than
like AK Media did more than 75K this
Can I go public, bro? Can I go public if all it takes is 75? I will have the best earnings calls.
Yeah.
You guys will get the best quarterly updates. The best ones. I mean, it will be a party if I can be a public CEO. Redwire, I don't have those numbers yet. But this one got chopped in half ever since the SpaceX IPO, unfortunately. You can't go public with them, Mike. You know, this mic is probably better than a lot of the mics we've heard on these freaking
dude. Episodes. Occidental Petroleum. I don't know why
it's what? It's Occidental.
This is a big name. Revenue beat by 15%. Wall Street expected 7.25 billion. They did 8.3 billion. And then on EPS, they wanted $1.85. They did $2.40, beat by 30%. huge double-digit beats there. Revenue's up 29% year over year. EPS 515% up year over year on Occidental Petroleum.
It's Occidental. Why do you keep saying that?
Oh,
Why are
my
you saying
bad.
it the wrong way?
My bad.
This is like one of the biggest Buffett stocks ever. How do you?
It is a
you
big
not know
Buffett stock, and I'm pronouncing it wrong.
Anyway, those numbers are great. 1 point. I mean, we need a lot of energy. So it makes sense. And rising energy prices have helped. I mean, Berkshire basically owns like more than 51% of this company. So there may be a world when this one goes private soon as well. Oh wow, really pumping.
Yeah, starting to go now.
Up 3. Sandisk still down 5. IONQ down 3. SMR down 2. Tanner, thank you for letting me call out a mispronunciation for once.
I know.
Be on the other side of it. AppLovin, I still don't get why it's down 20. Is anyone heavy in AppLovin that has anything to say? Like, why is Trump live right now? Like, we don't need more volatility.
That's true too, right? While you're trying to do earnings, you have Trump potentially placing new tariffs in the market. It's not really a great macro to be producing misses.
This is why every time I think of buying, levered strategies before earnings, you get a day like this and you just remember that some days it'll be good. Figma was good for 5 minutes. Your calls are going to open up 4x in the morning, and then it's just not good. And it's like, you just never want to take that gamble with an expiration date. Fluent's down 17.
Do you have Fastly there?
Fastly is, we looked at their results. They're up.
Yeah, triple beat raised guidance by a lot. Estimate was 33 cents for the full year of 2026. They're now saying 52 cents.
Wow. That means they're going to get a deal like Akamai did with Anthropic. That's a big boy raise. I mean, if everything was up after hours, the stock would probably, Fastly felt like 30% last. This is a big mover on earnings. That could be up big tomorrow if the street likes it. Viavi data center play. This one is up 4. Revenue's up 50% year over year. EPS 13 cents versus 4 cents. That's a beat. Guidance looks like it's a beat. Data center business, network and services business is going very well. Operating margins 24% versus 14. That's a beat. I mean, you have some decent numbers right here, but the big ones, like Symbotic, which is not a big company, but still 30 billion is not small, down 6%. I mean, there's like 3 companies that have held their momentum today. Elf, is that one still down? Elf has recovered. It was down 15. Now it's down 2.
Someone in your chat said that Occidental sold a fraction of their business to Buffett, so maybe that is juicing their numbers a bit.
I think the chemical part of the business.
Yeah,
OxyChem. Yeah. Okay, so that's fair. Melly's now 5. This is one of the weirder earnings I think we've ever. I mean, this is, and I'm not optimistic going into the Sandisk call now, and I hope they say something that changes the momentum. Is Centrus Energy today? Is it LEU? That stock is flat. I'll see if I get their numbers, but I don't see them or Redwire yet.
HubSpot reported as well. They're down 11.7%. Or let me actually check. That was a little while ago.
Okay, June. I don't see Centrus's numbers. App down 23. Solaris Energy, that stock is up 6. I don't see their numbers either, but that one getting some love. $5 billion company, small one. IONQ down 4.
HubSpot did a double beat and then missed on guidance. They're down 14% right now. Hubs is the ticker. I don't know if you have it.
Yeah. Some more color on SanDisk. So the guide for Q1 was a little light. Street wanted, I think Tanner mentioned that, 11.1. They came in at 10.8. EPS guide was a beat, but only by 50 cents. Data centers up 130% Q over Q. Edge is up 392% year over year. Consumers down 5% year over year, but consumers not that relevant. Qualcomm had the same issue with phones, right? Like really, it's the data center business that matters. They just authorized 14 billion of buybacks, so they have 15.5 billion remaining. We closed 2026 with a leading technology portfolio, established data center as a key growth pillar, and deepened our commercial customer partnerships. You know, the issue here once again is when you look at their stock, like over the past, not even 3 years, but past year, it gets kind of stupid, right? I mean, this is the stock. $27 to 2,300, now to $12.90. Like one could say the alpha has been achieved. And now the question is, should it trade at a multiple that it deserves, that a tech company should get? Or is so much of the alpha baked in and there's so much fear around DRAM and NAND prices, HBM, that the street says we don't want to take the risk right now?
Chris's fluence in his stock draft is now down 21% in the after hours. Mind you, this is his most read name in his portfolio already.
Yeah, I think that there was some hype on this on X as well as an energy play. I mean, look, these names can rebound 20% the next day.
Yeah.
So the move is the move, but it's also just like, why? Like you know, are the results that bad? Because, you know, these are smaller plays to the whole picks and shovels bottleneck trade. So if that trade is dying out, there's a lot of people that are just tourists for that trade. They don't actually want to hold these names for a long time, which means they're going to be out. They're going to sell. Bitcoin, why is BT? Wow, to make tonight even weirder, Bitcoin goes up while everything gets hit.
It's not going to matter in 10 years, right? Money's not going to be here. Enjoy it, ladies and gentlemen.
Dude, Figma's down 16. I don't have a position, but I've been looking at Figma for a while. I wouldn't mind if this thing gets back into the very low 20s, because 50% growth, like in Anthropic, I don't think is going to kill their business. I have to do more work on it, but if the street's going to send it down for that, maybe there's a stock-based comp issue the street's upset about.
So what's the fair value price on Figma? I mean, I think Adobe tried to acquire them at 20 billion market cap years ago.
Yeah, right now market cap's 14 billion. I don't know. I'm doing a lot more. I'm trying to understand Dylan Fields as a CEO. I'm trying to think, like, is he the guy you could count on for the next 10 years? I think he is, but I don't know. And like, it really comes down to that a lot with everything. But the Anthropic thing was why that stock was at 16. You know, people look at them from 150 to 30. I think that's unfair. Like, it pumped to 150 just because of the market being stupid. But more accurately, 16 to 30 has been the range it's been swinging behind, and move back to 20 would be a bit more interesting. Salesforce is down after hours, is it? Oh my! That doesn't happen randomly. 4% on Salesforce. What do they say? Salesforce, there's got to be something. Mark Benioff gets a new operating chief. Miguel Milano is the new operating chief. Wait. No, not CEO. COO. They have a new COO. ServiceNow is down 2% as well. Okay, maybe these names are just falling because SaaS is falling.
Yeah.
But Salesforce 4% is a bit bigger than expected. Wait, where's Palantir then after hours? Palantir down 0.5%. Weird Wednesday. It is August. August is August.
I'm just going through a little bit of Mercado Libre right now. This is an unbelievable business.
Go ahead.
I mean, they're just killing it across the board. They're growing in every geography. You know, they did like $10 billion in revenue, up 50%. This is, for people that don't know this name, they're like the Latin American Amazon, but they also have a fintech side of the business. They're killing it on both sides. Customers are spending more with them. They have like AUM, assets under management, for Mercado Libre went up 68% year over year. Like, they're just killing it in fintech. They're killing it in the package delivery. I love this business. Oh, call starts in a minute.
Okay, so we all want to listen to Sandisk, right? Yes, I think we kind of have to.
I think so.
We'll put updates in the chat for everything else, but we went through as many earnings as we could. I think Sandisk kind of determines what happens with a lot of this high beta stuff. I'll pull it up as soon as it starts, Tanner.
Yep.
And then we'll take a look at it.
You got the chart one?
Yeah, we got everything. Okay. App Lovin still down 22. Again, we'll be in the chat and put some updates if we get some answers for why Duolingo's 11 and Accelera, I still don't have that yet. That's down 7. Redwire is now up 4. I still don't have their numbers, but that was down. Now it's up. Yeah.
Did you talk about the Accelera double miss?
I did not. Yeah, you can say those numbers.
I don't have the exact percentages here, but yeah, it was a double miss. Expectations for revenue was, or sorry, no, I only have EPS. EPS was supposed to be negative 14 cents. They did negative 18 cents. Revenue fell 76%.
Oh my, year over year?
Yeah, year over year.
Okay, that's a bit aggressive. Redwire lost 22 million versus 29.5 million. So that's why that stock is up. The call is still not live yet, guys. As soon as the call is live, we'll play it. It is not live yet. Fastly is reversing. Centrus Energy 176 versus 149. That's a beat. This is a nuclear play. LEU's up 4. Okay, market's at least liking that. And then Redwire, you have a double beat.
Okay. Pray for my Micron position during the Sandisk call. Soundhound, man, they really, really beat. I wonder if that's worth looking into or if that's still kind of a little bit of a meme stock.
Okay, I got the Sandisk call. Let's pull it up.
Our annual report on Form 10-K and our other filings with the SEC for more information on the risks and uncertainties that could cause actual results to differ materially from expectations. We will also make references to non-GAAP financial measures today. Reconciliations between the non-GAAP and comparable GAAP financial measures are included in the written materials posted in the investor relations section of our website. With that, I'll turn the call over to David.
Thanks, Ivan. Good afternoon, and thank you for joining Sandisk's fiscal fourth quarter earnings call. As we close fiscal year 26, we believe Sandisk is in a strong strategic position to deliver for our shareholders and customers. The strategic actions we have taken over the past year have established a stronger foundation through technology leadership, longer-term customer partnerships, financial flexibility, and operational capabilities, which collectively position us well for the next stage of execution, growth, and shareholder returns. Over the past year, we strengthened our portfolio with BiCS leadership across both TLC and QLC and the continued advancement of high bandwidth flash. Established data center as a major pillar of growth, deepened customer relationships through multi-year shareholder returns. Over the past year, we strengthened our portfolio with BiCS leadership across both TLC and QLC and the continued advancement of high bandwidth flash. Established data center as a major pillar of growth, deepened customer relationships through multi-year partnerships enabled by our new business models, our NBMs, with momentum continuing to build during the quarter. We reinforced our supply chain and transformed our business model with a net cash balance sheet and a capital allocation framework designed to generate growing and durable free cash flow to reinvest in the business and return excess capital to shareholders. The fiscal fourth quarter provided our clearest proof point yet. We delivered record revenue, gross margin, and earnings per share, each above the high end of our guidance, and repurchased $4.5 billion of company stock. We are encouraged by this progress and believe the long-term earnings power, cash generation, and resilience of this business will become increasingly evident as we execute against this new foundation. Underlying our performance is the most important force in our market, the era of inference. AI is fundamentally a memory-centric, storage-intensive problem, and it is reshaping the demand equation for NAND. The shift to inference in agentic AI is generating data at a scale that is redefining storage requirements. Every AI interaction creates content that must be stored, retrieved, and served at low latency. And each of these steps relies on data storage products, including our high-capacity enterprise SSDs. NAND is the most scalable semiconductor technology in the world, and it has become a critical component of the AI architecture. This demand is anchored in strategic, long-term infrastructure investments by the world's largest technology companies, which are increasingly working with suppliers who can scale, partner with them, and secure supply that ensures performance and reliability years in advance. These enduring and mutually beneficial partnerships give customers greater confidence in long-term supply, while giving Sandisk clearer visibility into demand and a stronger foundation for planning, investment, and more durable cash flow generation. Our technology leadership is how we are capturing this opportunity. BiCS has become recognized as an industry gold standard for NAND, and this year we ramped BiCS 8 to the majority of our bit production, delivering industry-leading performance, density, and power efficiency across both TLC and QLC. BiCS 8 was enabled by innovations like CBA, hybrid wafer bonding, and our roadmap builds on that same fundamental approach, with future generations extending performance and cost leadership through continued innovation across multiple dimensions of scaling. Our leadership is translating directly into customer adoption across our various end markets. We scaled our compute-focused TLC enterprise SSDs across a broad set of hyperscale and AI infrastructure customers. And this quarter, we began shipping our QLC Stargate platform for revenue, giving us a complete complementary portfolio spanning performance-intensive compute workloads and high-capacity AI data lakes. A year ago, data center represented roughly 12% of our bits. Exiting fiscal year 26, it represents 38% of our portfolio and is our fastest growing end market. Our technology leadership also extends well beyond data center. Edge remains a large and strategically important end market for Sandisk, spanning smartphones, PCs, tablets, and an expanding set of emerging use cases in the realm of physical AI, including automotive, robotics, and on-device agentic AI. Near term, both PCs and smartphones are working through a period of adjustment as demand is shifting towards AI-enabled devices and premium configurations, driving higher storage content, particularly in smartphones. In the PC market, OEMs are growing revenue and expanding margin on a more profitable mix, reflecting demand for higher-end devices. We expect these markets to return to growth in calendar year 27, and over the longer term, on-device AI, richer content, and entirely new form factors will continue to expand the role of high-performance flash at the edge. Our ability to deliver high performance, density, and power efficiency positions us well as these platforms evolve, and we expect increases in content per device through future refresh cycles. Sandisk's global consumer presence remains a meaningful differentiator within the industry, giving us a unique connection with end users and channel partners. We continue to invest behind the brand, sharpen our go-to-market capabilities, and innovate around the products, capabilities, and experiences that consumers value. Our ability to innovate at this level is enabled by our operational excellence. Sandisk manages the entire value chain, from the design of the NAND die through front-end wafer manufacturing at some of the largest fab complexes in the world with our JV partner, to system-level design, including our world-class controllers, and final back-end assembly and test, all the way to the hands of our customers. This end-to-end integration, combined with our R&D depth, proprietary BiCS systems expertise, and the market diversity that gives us the optionality to direct our technology where it delivers the most value, is what enables us to serve customers at attractive returns. Just as important, we grow supply primarily through nodal transitions rather than wafer additions, delivering mid to high teens bit growth from the productivity of our technology roadmap, with capital intensity that continues to decline as a percentage of revenue. This is a structural advantage and what makes this franchise such a powerful cash generator. With that, I'll turn the call over to Luis for an update on our new business models and a deeper dive into our financial performance and guidance.
Thank you, David. Fiscal year 2026 was a transformational year for Sandisk. We exited the year significantly stronger than when we entered it. We believe that we're well positioned to create sustainable value for customers and shareholders. Our new business models, or NBMs, reflect the stronger and longer-term partnerships that we're building with our most strategic customers, the value they place on our technology and products, and the confidence that they have in their demand. Our revenue growth, margin expansion, and asset efficiency enables us to deliver leading free cash flow per share and therefore generate an attractive return to shareholders. Since announcing 5 NBMs during our April earnings call, we have signed 5 additional agreements, 3 NBMs with new customers, and 2 deals expanding on previously signed NBMs. These extensions reflect our customers' strengthening demand exceeding their prior estimates. One of the 5 signed deals, 3 closed before the end of the fourth quarter and 2 closed after quarter end. In total, we now have NBMs with 8 diverse data center and edge customers and reflect the conviction our customers have in their long-term demand and the value they place on Sandisk. The length of our NBMs varies, extending up to 5 years with a weighted average duration of over 4 years. We expect our NBMs to represent more than 50% of our bids in fiscal year 2027 and approximately 2/3 of our bids in fiscal year 2028. NBMs are quickly becoming our predominant way of doing business. We will continue supporting our non-NBM business with uncommitted supply. Pricing for our NBMs include both fixed and variable elements, with a variable portion subject to floors and ceilings. We expect attractive margins even at floor pricing. Pricing of our non-NBM business will fluctuate with the market. The total expected revenue from all our NBMs we have signed is a minimum of $93.9 billion, assuming floor pricing. We believe actual revenue will be above that minimum. The remaining performance obligation, or RPO, at the end of the quarter was $59.8 billion and would be $91.1 billion, including the 2 NBMs signed after the quarter closed. The difference between the total NBM revenue and the RPO is the revenue that has already been recognized. Each one of our NBMs includes financial guarantees through a combination of cash deposits and financial instruments totaling $16.5 billion, which are intended to protect Sandisk if a customer fails to satisfy its purchase obligations under these agreements. These funds and financial instruments are mostly held by or provided through third-party financial institutions, with the remaining in our cash balance. For each of the existing deals, the financial guarantees are released towards the end of the agreement, so the ratio between the financial guarantees and the remaining performance obligation increases over time. Our NBMs are built on clear and detailed supply and demand agreements, defined by year and by quarter. These features provide clear visibility for our operations and additional financial protection. Overall, we're pleased with the 8 customers we have signed, as they strengthen our strategic partnerships. We expect these relationships to last for many years and to enable our customers to continue building exceptional products for their end customers. Going forward, we will remain highly selective in evaluating additional NBMs. The key characteristics we look for are strategic customers that value our products, duration of around 5 years, growing volume requirements, and attractive financials that enable us to invest in the business while generating a sustainable return to our shareholders. We will be patient in these evaluations. With that update, I will turn to the results for the quarter. Revenue for the fourth quarter was $8,965 million, up 51% sequentially and 372% year over year. Revenue came in above the guidance range of $7,750 to $8,250 million that we provided on our prior earnings call. Sequential revenue growth came approximately 1/3 from higher volumes and 2/3 from higher pricing. Turning to our own markets, during the quarter, data center revenue reached $2,977 million, up 103% sequentially. Edge revenue reached $5,432 million, up 48% sequentially. Consumer revenue was $556 million, down 32% quarter-over-quarter. We're pleased with this evolution of our portfolio and remain committed to serving all three end markets to maximize long-term value creation. For the full fiscal year 2026, revenue reached $20,248 million, up 175% year-over-year, with bids growth in the mid-teens in line with our plan. By end market, for the full year, data center revenue reached $5,153 million, up 437% year-over-year. Edge revenue reached $12,160 million, up 195% year-over-year, and consumer revenue was $2,935 million, up 29% year-over-year. Non-GAAP gross margin for the fourth quarter was 84.6%, up from 78.4% in the prior quarter and 26.4% in the prior year. This compares favorably to our guidance of 79 to 81%. Non-GAAP operating expenses for the fourth quarter were $484 million, representing 5.4% of revenue, down from 7.5% of revenue in the prior quarter as we generated additional operating leverage. This compares favorably to our guidance range of $480 to $500 million. R&D represents close to 65% of our operating expenses. Non-GAAP operating margin was 79.2%, up from 70.9% in the prior quarter. Non-GAAP EPS was $39.25, up from $23.41 in the prior quarter and 29 cents in the prior year. This compares favorably to our guidance range of $30 to $33. We closed the quarter with 157 million diluted shares outstanding. Key GAAP to non-GAAP reconciliation items include a gain of $807 million from our investment in Nvidia and $67 million in stock-based compensation expense. We also recognized a tax benefit of $175 million from higher stock prices related to the vested employee equity, which was offset by $170 million of taxes recognized on the gain from Nvidia. During the quarter, we repurchased 2,836,000 shares of our common stock for $4.5 billion. Moving on to free cash flow. During the quarter, cash flow from operations came in at $7,126 million, partially offset by $153 million from net cash capital spending. Gross capital expenditures totaled $562 million, representing 6.3% of revenue. We generated $5,035 million in adjusted free cash flow, which represents 56% margin. This excludes $1,938 million in NBM prepayments and deposits, which are included in cash flow from operations. We closed the quarter with $4,762 million in cash and cash equivalents on our balance sheet. With that, let's move on to guidance. We expect the NAND market to continue growing at an accelerated pace, supported by AI inference as a tailwind. We estimate the NAND market will exceed $300 billion in revenue in calendar year 2026, up 3x year-over-year. Looking further ahead, we estimate that the NAND market will approach $500 billion in revenue in calendar year 2027. Within this time frame, we expect data center share of total TAM to expand from approximately 30% in calendar year 2025 to to approximately 50% in calendar year 2026 and to continue outpacing the market in 2027. Demand from our customers is growing faster than our supply. We therefore expect bits to remain on allocation beyond calendar year 2027. For the first quarter of fiscal year 2027, we expect revenue between $10.3 and $10.8 billion, with sequential growth driven by both bit growth and higher pricing. We expect non-GAAP gross margins between 83 and 85%. We expect non-GAAP operating expenses between $520 and $540 million as we continue to invest in innovation and R&D and have higher expenses related to taxes on employee stock compensation. We expect first quarter non-GAAP EPS between $44 and $46, assuming 155 million fully diluted shares. Here is some additional perspective for modeling purposes. Consistent with our long-term objective of growing supply mid to high teens, our capital spending will increase year over year, primarily as we ramp BiCS8 and BiCS10. Yet our investment relative to revenue will come down to approximately 6% for the full year. We plan to operate at higher inventory days consistent with current levels to support our NBMs and account for higher component costs. The higher inventory levels reduce sellable bits to mid-teens for the full year fiscal year 2027. Moving on to capital allocation. Our priority remains to invest in the business to support long-term growth and durability. We will continue returning cash to shareholders. Sandisk Board of Directors has authorized an additional $14 billion share repurchase program, bringing our total remaining authorization to $15.5 billion. We look forward to seeing many of you at our Investor Day in New York next week, where we plan to review the business in greater detail. We're encouraged by the progress made and remain committed to creating value for customers and shareholders. With that, let me turn the call back to David.
Thank you, Luis. In summary, fiscal year 2026 was the year Sandisk redefined what this franchise can be. We delivered record financial results, established data center as a major pillar of growth, secured our manufacturing and supply base through the next decade, and fundamentally restructured how we transact with our largest customers. The value of our technology, built on decades of R&D and tens of billions of dollars of cumulative investment, is increasingly being reflected in our financial results. As we enter fiscal year 2027, we do so with a balanced, well-structured portfolio spanning data center, edge, and consumer, one that has served customers across every part of the storage market for decades and gives us flexibility to move wherever demand grows next. We have industry-leading NAND technology across TLC and QLC, with a roadmap of continued innovation extending our leadership. And we are investing beyond traditional NAND in emerging technologies like high bandwidth flash that carry the potential to change the AI memory storage hierarchy entirely. Combined with our NBMs, a net cash balance sheet, and an active capital return program, the result is a durable growth model, a valuable franchise, and a business built to generate substantial increasing cash flow. We're proud of what the team accomplished this year and believe we are still in the early innings of this opportunity. With that, Ivan, let's open it up for questions.
All right, Q&A. Hopefully this changes sentiment here.
He said that the NAND market would expand to $300 billion in 2026 and $500 billion in 2027. Wild.
Yeah. Obviously a very large global TAM.
If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster.
By the way, the head of product at X just
First
stepped
question
down,
today
Nikita.
comes from Ben Reitz with Melius Research. Please go ahead.
Yeah, hey guys, how are you? Thanks for the question. I wanted to ask maybe two things. Last quarter you talked about the NBMs were being signed in this 80% margin range? I know there's a lot of puts and takes with regard to pricing. I was wondering if you can talk about, whether it's in that ballpark or if it's kind of trending actually more towards the guidance for the next quarter. I would think it's more in the 80 ballpark. And then I have my follow-up is with regard to buybacks. If we just round up to 5 billion per quarter, I know the authorization isn't this big, but if you commit to buying 5 billion a quarter, that's, and you do that over the next 4 quarters, that's about 10% of your market cap. I mean, is that the kind of buyback magnitude we should be thinking of, or is it too early to kind of call the pace? Thanks.
Hey, let me take the second one, and then Luis can take the first one. So we plan to be, we're walking into the buyback program. We're our second authorization now. You saw we had a $6 billion authorization. We executed $4.5 billion in the first quarter of that. Now we've reauthorized another $14 billion. We expect to be very consistent in our execution of this program. We have a lot of confidence in the cash generation of the portfolio. Ben, to your first question, and Luis will talk about the margins, but we spent a lot of time over the last 2 or 3 quarters really working very, very deeply with our largest customers on committing demand. We have over 4 years of visibility now. So we feel very good about where the franchise is. And, I'll just speak personally as somebody that's been managing this franchise since March of 2020. I am thrilled to be at this point where we're recognizing the true value of this franchise and really ramping up the shareholder returns. But Luis can talk about the margin.
Yeah, Ben, we, not to pick a specific number, but we do expect to be around 80% for the new business models. As you know, there is some upside as prices continue to go up. We'll capture some of that upside as well. But we feel very good about the work we've done. We'll talk about about the MBMs, I'm sure, but you've seen there are not a lot. There are really meaningful deals that we did with 8 very strategic customers of ours. So we feel very good about that.
Thanks a lot, guys. Appreciate it.
Sure thing. Thanks, Ben.
The next question comes from Mark Newman with Bernstein. Please go ahead.
Hi, thanks for taking the question. For your Q4, I don't think you've given, obviously Q4 strong results. I don't think you've given the breakdown yet on the volume growth. You've given some numbers for the year, so we've got some pretty good estimate. But I wonder if you could give some clarity on what's in there for Q4 for volume, and also in the Q1 guide. Particularly for the Q1 guide, it seems a bit lighter compared to expectations. It's share price been down a bit last time I checked in the post-market. I just wondered if that is volume related or if that is because the locking in of pricing and so less price upside, or perhaps a bit of both, or is it a bit of conservatism? Really appreciate it. Thanks.
Yeah, so in Q4, Mark, what we mentioned is that about 1/3 of the growth came from incremental bits and 2/3 came from pricing. So you have that split there. And obviously, as you compare us versus others, there is a different timing on when price increases were taken. So you have to look at things over several quarters to really understand where we are, because as you know, we took significant pricing the prior quarter. If you look at Q1, we expect both the growth to come from both bits growth and modest price increases. So we expect both of them to be contributing to our revenue growth.
Okay, great. Thanks very much.
Sure, Mark.
The next question comes from David Gibson with MST. Please go ahead.
Thanks very much. Great quarter. 2 questions. I'm just wondering if Nvidia's context memory CMX standard and their plans for storage next are opportunities for you with products to come. And then the second, you announced the other day the global standard with SK Hynix for HBF. Just wondering how far out are we talking about for samples of such a product? Are we 1, 2, 3 years away? That's my question. Thank you.
So David, sure. So look, there's a ton of innovation going on right now in inference memory architectures, which we think is fantastic, very healthy. There's a lot of different ideas. We're gonna dive into this a little deeper next week at our Analyst Day, where we'll actually go into how we think about the problem and kind of how you dimensionalize it. But yes, all these are opportunities for us. We think, especially inference is a memory-bound problem. Storage is extraordinarily important to the equation. We showed some stuff in our FMS keynote just a couple of hours ago about how, when you use HBF, how we simulate performance and maybe break through some bottlenecks. So we think there's an enormous amount of innovation happening. As we scale inference, we think it provides an enormous opportunity. The biggest, the way we're thinking about this is staying very close to our customers, because they're going to be the ones that define what the architecture is in the future. I mean, all of us as suppliers will provide a lot of good ideas to that. We'll work with them closely on, which ones are going to be the predominant ones for what they're optimizing for. And these are really where our NBMs, we think they're extremely important in that we have NBMs with, several of the largest hyperscalers in the world. They've given us forecasts years into the future that include, quarter by quarter, month by month mix. So we know very clearly what products they're going to deploy and the intensity that they're going to deploy them in. And it keeps us very close to the conversation as their deployment architecture changes. It lets us reflect that in our roadmap appropriately. So, there's a lot of good ideas out there, a lot of, flashing green light for innovation. We know we're a super innovative company, and we think that provides nothing but opportunity. Now, on your second question, HBF is something that, we announced almost a year and a half ago now. It was very much targeted at this whole idea that inference was going to require a different storage and memory architecture. We feel very good about where that product is at. We'll tell you a little more about, where we're at specifically next week, but we feel very good about deep conversations with customers. This week you saw additions to our advisory board. At FMS, you saw some very significant customers talking about the technology and how they could use it. So we'll have more to say as we progress with technology on actually shipping and release dates and all of that. But from where we were a year and a half ago, that this was an idea and a lot of research and some work that we thought it was a great idea, to where we are now, we've come an enormous distance, and we'll talk more about that next week.
Okay, that's great. Thanks very much.
Thank you. Thank you, David.
The next question comes from Jim Schneider with Goldman Sachs. Please go ahead.
Good evening. Thanks for taking my question. When you think about the composition of NBMs you've already signed and the ones you may intend to sign, how are you thinking about the mix of desired customers you'd like to see across edge, hyperscalers, AI data centers, and so forth? And maybe can you talk about whether you're pursuing additional agreements with large hyperscalers beyond the ones you've already signed?
Yeah, Jim, we're open to signing deals with companies that really meet the criteria that we talked, right? One is they need to be customers that are highly strategic, that they really value our products, and they're creating amazing products with those. We want customers that are looking at several years, ideally 5 years of agreement with growth, year-over-year growth. That's very important, because every year we're producing more bits as we introduce new nodes. So we want customers that grow with us, and we want attractive financials. So that's the criteria, but we're not close to any segment. As I mentioned, we signed deals with customers across data center and edge, and we feel great about that. In terms of the hyperscalers, I'm talking about specific agreements. I think it's not in our interest to be disclosing specifics about contracts, but we feel great about each of them. They are, as David said, long-term relationships. that get into a level of details that we've never had before from a technology, from a commercial point of view. And we believe that these relationships will last many, many years.
So Jim, just a few more comments on that from my perspective. So first of all, we really started this journey just two plus quarters ago. Here we are with, a little bit more than 50% of our supply for fiscal year 27, which we're a month in now, is already committed. We understand the financials. We understand exactly where it's going. We already have POs for the year from those customers. In FY28, that steps up to 2/3. Roughly 2/3 of our supply is already committed. We understand what the mix is. We understand what the economics are. So we feel like we've just made incredible progress here on, taking, a year ago, we were talking about visibility in this business of 3 months. And now we're talking over 4 years of committed financials and understanding the mix and working with, as Luis said, some of the most enviable companies in the world. So we feel really good about where this is at. And, we'll continue to talk to customers. I think one of the most interesting dynamics is some of our biggest customers are already coming back and wanting more, right? From just what they thought they needed 3 months ago. It's a very, very robust demand environment, especially in the data center. So we feel good about where we're at. But we're getting a lot of the portfolio spoken for at this point, and we'll be selective from here about how we add to it. But we're definitely still in deep conversations with additional customers.
Thank you. And then could you maybe address capital allocation at a somewhat more holistic level? I mean, it's great to see the buybacks you've already executed in terms of the authorization, but how should we be thinking about your ability to do sort of more programmatic buybacks on sort of an ongoing basis, and maybe talk about the idea of a dividend if you've considered that?
Yeah. So our priorities continue to be the same as what we've talked since day one, which is to first continue to invest in the business. And although that's a generic statement, you've seen us do that, right? Through our OPEX, through our CAPEX, through investments in Nanya, through our JV extension. So we continue to make our company more robust and more durable over time in any scenario. So we'll continue to do that. And I've talked about some of the numbers, some of the requirements to continue to invest in the business. Priority number 2 that we've talked, which is frankly completed, was to get a good cash balance, which we've done, and to get rid of our TLB, which is also done. So that priority number 2, we feel very good of where we are. And then really our role as a company is to return cash to our shareholders. We believe that at this point in time, and things may change, as time goes on, we believe that the best way to do it is to return cash to investors via share buybacks. So we started that journey very quickly in last quarter, and we'll continue that journey, and we'll keep you updated. But that's the form we believe it's better for our shareholders, more tax efficient, and probably the right thing for us to do at this point in time.
Thank you.
Thanks, Jim.
The next question comes from CJ Muse with Cantor. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess 2 questions. First, with pricing up modestly sequentially, can you help me understand why gross margins are guided lower? And then bigger picture, the challenge for semi investors is moving less of a focus on margin and EPS revisions, but rather buying into the durability of this cycle. So can you focus on why you're so confident in the securities of NVMs and that today's supply is limited and that will drive a durable and elongated cycle? Thanks so much.
Good question.
Yeah, so I'll start and Luis can add on. CJ, I think you answered your first question with your second question, which is we're focused on multiple things here, not just one. As durability is a big piece of it. We want to get, a fair return for our product. I think, mid-80s gross margin, I would characterize as a fair return. And then we want to increase visibility and durability of the franchise, right? We want to get this kind of boom and bust out of it. It doesn't work for anybody. in 23 we were having very different earnings calls than we're having now. And we want to get more consistent and deeper relationships with our customers so we can plan better and they can plan better. And so we're executing what we said we were going to do last quarter. We're committing supply to customers that are willing to commit for years in advance at the economics we guided to last quarter, which Ben said earlier. We guided to about 80% gross margin, and then the rest of the portfolio floats. And then there's, all kinds of things that happen in their mix and all different kinds of things influence it. It's a, fairly complicated business. So when you put that on top of half the supply is committed for FY27, you get to kind of the numbers we're talking about, which we're thrilled with, quite frankly, because the amount of, the operating leverage, operating profit and free cash flow that drives is very substantial. And again, we'll go into why that's the case a little more next week. So why do we have conviction that these, customers are going to hang in there with us? There's lots of reasons for that. Number one is we put a contractual structure in place where we align our incentives. They're making financial commitments to us that if they don't follow through on their commitments, that, I think $16.5 billion in aggregate would flow to us on our balance sheet. We don't ever expect to see that money, quite frankly. It's just to align interests. But if some black swan event happens, companies have to do what's in their interest, and maybe something happens. But more importantly, we're dealing at a very different level with our customers than we were a year ago. I mean, we are literally talking to the CFOs, the CEOs of the largest companies in the world. This used to be, quite frankly, just a supply chain conversation every quarter in a, price negotiation 7x24. The business has turned into a highly strategic, Sandisk has incredible products that allow them, our customers, to build incredible infrastructure to serve the world with, things like inference, which is, we're just getting started on scaling. So it's, as somebody that's been in the technology industry for 35 or 40 years now at quite frankly, a very high level, the level of customer engagement we have is as high as any technology franchise I've ever been a part of. It's incredible. And so we believe that, we have pivoted to a highly strategic supplier to our customers. Their demand continues to grow. I think one of the more interesting things, again, I think I said it before, we've already have customers coming back for the second round of NBMs, a quarter in. And so that gives us an enormous amount of conviction that this franchise is set up for the long term. We have over 4 years of visibility now at economics, which are extremely attractive. And, we're really looking forward to, executing this business over the next several years.
The next question comes from Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. You talked a little bit about gross CapEx coming up a little for the BiCS8 and BiCS10 transitions. Can you just talk about how you think about that and the fact that, the guys who also make DRAM seem to be focused more there? Any thought of spending more to accelerate those technology transitions, or just how should we think about your decision-making process on CapEx?
Yeah. So Joe, basically we continue to be committed to grow bits mid to high teens, right? And we're spending to that level. The reason why our dollar increases from one year to another is because obviously as you transition from one node to another, you will first take the easiest, right, or the cheapest transitions, and then you would go on and do the more expensive ones. Particularly when we had, underutilized the fabs in the prior year, we had some tools that could be reused, and we were in a good place on that spending. So we're very good. We continue to execute the plan that we had. We believe that's the right plan to do it, that allows us to provide the bit growth that we believe is sustainable in the market. And we haven't changed that position. Now, this year, as I mentioned in my prepared remarks, it will be a little bit lower. I mentioned mid-teens as we continue to build capabilities for the new business models. We need to build a little bit of inventory just to make sure that we're always delivering on time. So that mid to high teens, which is our ongoing number, will be a little bit lower for 2027.
Okay, so if we think about a $500 billion kind of industry number for next year, do you think you would, between the different puts and takes, kind of hold segment share relative to that?
Yes,
this year?
That is correct.
That's always our goal, Joe.
Okay, great. Thank you.
Thank you.
The next question comes from Carl Ackerman with BNP Paribas. Please go ahead.
Yes, thank you. I have two related, so I'll ask at the same time. Consumer revenue is down a bit this quarter. Is that allocation choice or demand driven? And how should we think about the dollar commitments of these contracts relative to the perceived consumer customer demand through 2028? In the absence of LTAs, how do we gain greater visibility on end market consumer demand? Thank you.
I'm not sure if I got the last portion of that. Would you mind repeating that one, Carl?
The consumer one first, Carl, and then we'll come back to you. So,
sure.
Consumer is a business that it doesn't move at the pace that the transactional markets move at. It's kind of an interesting business because in normal times you can move pricing and consumer around much more quickly than some of the other markets. But in these kind of markets where the other ones are moving so fast, it's hard to move the consumer up as much as possible. So there's no doubt we're seeking at where is the right equilibrium point for pricing and the amount of product shipped and all these kinds of issues in consumer, and that's a little longer process than in some of the enterprise markets. Luis, you want to add anything to that?
Yeah, I mean, as you can imagine, prices on the consumer market have also come up, and there has been some impact on the TAM itself. We're very happy with that business. It's going super well. We're very happy about our market share within that market, and we continue to be committed to drive that business. Do you mind going through your second question, Carl?
Yes, Luis. I was asking, you gave some very substantial numbers with respect to long-term agreements across your customer base. And I was wondering how we should think about the dollar commitments of these contracts relative to the perceived consumer customer demand of these LTAs. And in absence of LTAs, how do you gain greater visibility on end market demand for consumer? Thank you.
Yeah, so the LTAs or the new business models are not related to the consumer business. If you are questioning whether the new business models were taking bits away from the consumer market, is that what you are asking, Carl?
Oh, no.
Yeah, I think we feel very good about the demand that our customers with NBMs have. Otherwise they wouldn't be increasing their demand to us just a few months after they sign their commitment. So if the question is on their demand, I feel very good about their confidence, their conviction on their demand, as these numbers, I think they're actually being conservative as they make commitments to us as they come in and increase their numbers, just a few months after signing the deals.
Great, thank you.
Thanks, Carl.
The next question comes from Aaron Rakers with Wells Fargo. Please go ahead.
Thank you, guys. This is Michael Svednoff on Aaron's behalf. I wanted to ask, it sounds like you guys have significantly improved your visibility. You keep mentioning, greater than 4 years. So I'm curious with that and kind of your thoughts on supply growth. When do you see industry supply demand converging? And kind of how has that view changed relative to 3 months ago? Thank you.
Well, I mean,
converge to every quarter.
Yeah, I mean, industry supply and demand converges all the time, I guess, right?
Yeah.
I mean, that's the way the market works. I think if you're saying is supply going to increase so everybody gets everything they want at the price they want, that's a much more complicated question. Look, I think this is really there's a lot into the question you're asking, and I don't mean to make light of it at all, because we take this very seriously. And this is really a big part of the NBMs. I think the thing that we've struggled with is to understand what is demand 5-10 years from now. And when the business is transacted on a quarterly basis, it's very difficult to do, and it's very difficult to get wrong. And if you get it wrong, the implications are kind of tragic, right? We saw that in 23. Right now we're seeing, maybe people didn't anticipate that things were not going to be as available as they thought, and the market's reacting to that. I am actually extraordinarily optimistic that the market is reacting at an incredible pace. I mean, again, if you just think 4 quarters ago, this whole market was transacted quarterly, and now we're sitting here saying we have 4+ years of visibility, and we have customers signing up for 5 years of demand. That is exactly how supply and demand is going to get matched. It's not going to get matched at, quote, the industry level. Like we keep saying industry this, industry that. It's going to get matched with customers and suppliers having deep discussions about supply and demand, and how do we get those aligned. And I think we've taken 2 very big steps down that path over the last couple of quarters. As I said earlier, the level of strategic engagement with our customers, it is difficult to comprehend how advanced it is versus where it was 2 or 3 quarters ago. So I think we're making incredible progress on this, and we're going to follow our customers. That's the simplest way to kind of run a business, right? We have customers. We now have relationships with 8 customers that are some of the, they're just incredibly large customers, and they're going to give us visibility of what their demand is. As I say sometimes, they need NAND, we build NAND, right? It's a match made in heaven. We just need to get the economic model figured out, and we are making extraordinary progress on doing that. And I expect that that's going to continue, and we're going to continue to have those discussions, and that will inform our investment decisions.
Thank you.
The next question comes from Blaine Curtis with Jefferies. Please go ahead.
Hey, good afternoon, guys. I had 2 questions. I want to ask on Edge. Obviously, the PC smartphone markets are, probably going to be down for most people in the back half of the year. How are you thinking about that segment? And I guess, can you just speak to the strength you're seeing? I know it's broader than just those end markets. So what is going well, and how do you think about, the markets that'll be down over the next few quarters?
They're great markets, first of all. Again, I've said this before, this is one of the great things about the NAND business. It's got tremendous diversity of markets. Smartphones, PCs, very, very important. There's no doubt those markets are adjusting this calendar year. And we said it in the script, we expect them to stabilize next year. But we see units down mid-teens for both smartphones and PCs this year. But we still see, in smartphones, we see average capacity up significantly, mid-teens, and in PCs we see it flat. But then next year we see, units flattening out in both businesses, both markets, and then average capacities going up. So we see the market adjusting this year, and then next year return to overall exabyte growth across both. So again, the market's adjusting to kind of the reality of where the way the industry works now, and I think it's happening pretty quickly.
Thanks. And then I just wanted to go back to a prior gross margin question. I'm trying to understand, the margins are down modestly, but pricing's up. I just want to understand, is it the impacts of these new business agreements that's kind of, capping the, leading to the modest growth in ASP? And then even with that, is there any other factors that are contributing to gross margin in September?
Yeah, I would not assume that our new business models are a drag on gross margin. They are good margins. If you look at where we come from, right, the last 5 quarters, we've expanded gross margin every single quarter, starting with 22.7 all the way to 86.5. So we feel that we're driving gross margin. We believe it's one of the most important metrics to drive the financial health of the company. Now, if you look at, some of the reasons on the math that you're questioning, right? I mean, there's some mix. There is the high end of the guide is 85, right? And so it's a little bit off versus what we just printed. And we're making some prudent assumptions, if you wish, on component cost and other things. And when we factor all of that in, we believe that the right guidance to give you is somewhere between 83 and 85%. So slightly down, slightly up from what we printed this quarter, driven by all these factors.
Thank you.
We ask that you please limit yourself to one question. The next question comes from Wamsi Mohan with Bank of America. Please go ahead.
That was kind of timely to go to one, but
I mean, Wamsi, you got stuck with the one question, man.
well, I will ask a two-part single question.
Okay, there you go.
So you have an industry forecast here of the NAND industry growing to 500 billion in 27 from 300 billion in 26, and we know that your bit growth is really not meaningfully accelerating for the industry. So just as the assumption that there is going to be any price normalization that we expect in 2027 or not, that's like the first part of it. And the second part is, in that growth of the industry, is your expectation that you would outgrow the industry in line or undergrow the industry as you think about that market growth? Thank you so much.
We want to grow with the market. We plan to grow with the market. Look, I mean, Wamsi, we're transitioning our business into a more predictable business. We're working on pricing and predictability and duration, and so we expect to grow with the market as it goes and increase our visibility. We continue to see very robust demand through the end of 27 and into 28. I mean, customers are giving us demand signals for all the way out to the end of the decade at this point. So, I don't know what more to say about it. We're going to grow with the market, and as we grow with the market, I think we're turning in market-leading profitability. And we've got our bit growth plans. As Luis said, we're going to be carrying a little more inventory as we go into these NBMs, which will have an impact on growth in the near term. But we continue to see a very robust market, and it gives us this opportunity to both continue to drive significant profitability of the business and increase the duration of our visibility very significantly.
Okay. Thank you, Dave.
Thanks, Wamsi.
The next question comes from Asha Merchant with Citi. Please go ahead.
Oh, great. Thanks for squeezing me in here. David, I think in the past, Sandisk has talked about, the KV cache opportunity. Can you just remind us how you're thinking about it? Clearly, agentic AI is gaining a lot of traction here. I'm here at FMS, and seems to be a lot of discussion around there. Has your views or dialogue changed over the last quarter as it relates to and how you're thinking about this KV cache opportunity into 2027 and beyond? Thank you.
Yeah, it continues, Asha. It continues to mature, I would say, and that's with staying close to the customers because it's use case dependent on how much KV cache is going to be, how it's going to be used, how much NAND is a part of that equation, how do you configure the system, and we continue to do an enormous amount of research in this area, and you'll hear more of that next week. But we just continue to get more optimistic on the requirements for NAND as AI gets more sophisticated, models get bigger, context lengths get longer, and then agentic is just a big multiplier on top of that. So we continue to get more bullish on the requirements for NAND. And again, this is why I'm going to keep going back to the same theme. This is why it's so important to stay close to our customers, because I am a very, very big believer now that the customers are driving the requirements in this market. It's not what the suppliers are coming up with on different architectures and those kinds of things. Now we're talking about scaling inference globally. And that is very, very difficult. And to do that and understand exactly how that system is going to work, you need to really understand the use case. And that's different for each provider. So again, why, it's a reason why we're staying so close to our customers, why we're increasing our visibility, because we're going to need to stay very close to those architectural discussions. They're evolving very quickly, and the demand continues to get stronger. Again, witnessed by, we have customers coming back, after only one quarter and wanting to increase their demand for the next 3 to 5 years based on what they've learned in the last quarter. So it continues to be, it's quite a complicated calculation. We're going to try and demystify it a little bit next week with how we think about it. And it continues to be a very strong story and getting stronger.
The next question comes from Vijay Rakesh with Mizuho. Please go ahead.
Yeah, hey, David and Louis, just a two-part question here too. When you look at the BiCS10 and high bandwidth flash, wondering if you're seeing any price premium on that, and how should you look at the price premium versus conventional NAND, I guess. And then you mentioned that 2027 growth, you should be in line with industry. What would drive the upside for you, I guess, versus the industry growth? That's it. Thanks.
I think it's a little early to talk about pricing on some of those nodes just yet, right? And some of that technology, but we'll keep you updated on that. We're certainly very proud of the technology. BiCS10 is a great node. We just announced it, I think, last week or last couple of weeks, and it's been in development for a long time, and it's great. Again, Alper's going to show you more about that next week as well. In high bandwidth flash, we continue to have deep engagements, both with cloud customers and device customers, about using that technology as an inference platform. Look, we grow, BJ, we grow through nodal transitions, right? I mean, our technology is so productive. We can grow in excess of the market rates we're talking about just through nodal transition. So that's the way we grow. If we're going to speed up or slow down nodal transitions, even that still takes a significant amount of time, but that's something we always look at and allows us to kind of always stay in line with where the market's at.
This concludes our question and answer session. I would
Thank God. Oh my gosh. It's exciting. The market doesn't care. They couldn't have made a more exciting market more boring. I mean,
look, here's the problem with Sandisk, okay? I don't know if anyone noticed, but every question was, when is the cycle ending? Every answer was, we don't know, but for now, there's a lot of demand. And this is why the memory trade is really scary to me. Because at the end of the day, if prices peak or supply comes in, the trade is done. I mean, these names will fall like a rock when that happens. So you're betting on the cycle not being done for a while, which I agree with. But when Sandisk was 40, when Micron was 300 and 200, that's when the longevity of the cycle seemed like it had alpha in it. Now it's kind of like, all right, we know the CapEx is not stopping, but the companies have grown to multi-hundred billion, in the case of Micron, trillion in Samsung, SK Hynix, $1 trillion market caps, that for them to go to 2-3 trillion, like for Meta, Google, Amazon, Nvidia, to get to those multi-trillion, you need sustainable earnings growth, which is what was basically the theme of all the questions. It's like, how do we know this is durable and sustainable? And they talked about their long-term agreements and all that stuff. And again, I think a lot of that will be sustainable and durable for the coming years, but the market looks forward and tries to find out at least a year and a half in advance before things start peaking. And so I don't know, man. This is the problem with the trade. Doesn't mean the trade is bad, but the stock should not be down 7% after hours on what were absolutely incredible numbers unless sentiment around memory in and of itself, which does bleed into other parts of the semi-stack. It doesn't just affect memory. That's an issue, man. That's an issue I don't think can be ignored. Do you feel the same, Tanner, or you have a different?
Well, I mean, you know, this is not being priced as a traditional company growing at this rate. Not only are people not pricing in 370% year-over-year growth on revenue, which is what we're seeing here, but the forward PE on this company is still less than 10 times, right? So while I do agree that there is going to be a boom-bust cycle, it almost is being priced as if that's going to happen. So if we're going to continuously see this market grow from 200 billion or even less than that to 300 billion to 500 billion, and data centers make up a larger and larger share of that overall spend, the cycle does seem longer than I think what people are giving it credit for. And no, of course, they're not going to come out and say, hey, this is whenever the cycle ends or something like this. But ladies and gentlemen,
we have a guest.
We have a guest.
Okay,
the great and powerful couch investor.
What's going on, guys?
You missed out on all the earnings call fun.
I was watching Spider-Man, seeing if this $1 billion box office movie was really worth. I'm not going to tell you yes or no, but I'm just going to say that
good?
It's good. Is it $1 billion in a week good? Probably not. Probably not.
Well, you are doing something fun versus listening to the Sandisk call. Look, the thing is, Tanner, I agree with you. The forward PE is priced inappropriately for the level of growth that they're putting up. I don't think anyone can look at those multiples and say that's wrong. But nonetheless, the one question that almost explicitly, I mean, literally, he was like, you know, is this boom and bust? I didn't like the CEO's answer. I don't know about you guys, Tanner. I don't know if you remember it, but the CEO did not answer that. And I don't blame the CEO because it's kind of not in his control. All he can do is continue to grow. And, you know, he said, I think 80% gross margins are fair. He was kind of saying it as a joke because it's like, dude, like we have 80% gross margins. The problem is the market's like, yeah, but like you've never had that. And that's probably not sustainable, which is why every question came down to pricing, supply, and overall durability. And so I agree, you know, the multiple should be higher for all the memory names. And as a trade, that makes sense. But there's a lot of people that have a lot of gains on these names. And if the market starts to really panic on the sustainability of it, granted, the TAM is growing so massively, I think that's where you get the fear. And for the people saying, what about Nvidia? Nvidia has a moat. They're not selling a commodity. Whether you like it or not, memory is a commodity. It's just the supply-demand imbalance is so massive that there's, you know, 80 to 85% gross margins on these memory companies. You can't just build Vera Rubin. There's not another person that could do that outside of Nvidia. So now Nvidia is going to need a lot of memory. So if Nvidia is growing, then theoretically the memory company should be growing. But if there is a, you know, just because you're selling a lot of cars doesn't also mean the price of oil corresponds with the margins of cars just because cars use oil. So I don't know. I feel like, once again, these stocks are undervalued. And if we get a raging bull market again, S&P 8,000, they will go up. But the fear after hours, once again, tends to be from these lack of meaningful answers that I can't even blame the management for around cyclicality and durability of their growth.
So the TLDR, since I didn't listen, was we are growing very fast, but we don't know if that growth will be here for the next 5 years, 3 quarters, a year. Well, what's the...
Well, they did make a prediction on 2027 NAND market size. They said $500 billion. In the trailing 12 months, Sandisk put up $20 billion. Now, they're not the only player in the NAND market, but it's significant expansion going from 2025 to 2026. By 2027, you're having multiples on multiples, larger market spend on high bandwidth flash and NAND markets.
Okay, so to go back to what Amit just said, it's true. You cannot have another Nvidia in this market right now, but I'm not certain, but I think if you go and allow these big tech companies to go to the Chinese companies, you can maybe replace what a SanDisk cannot supply at the moment to everyone. And maybe that's the fear in the market, is that an Nvidia cannot be replaced, and I mean, if they can be replaced, I'm pretty sure everybody would be running to the replacement right now. They've built out their ecosystem, whether it's software and hardware, with memory, whether it's a Sandisk, maybe a Micron SK Hynix, Samsung is a bit different, but in my opinion, the solution is way easier to get these types of components, to get these types of products. I mean, the fact that you can literally go today, if they're allowed, to China, to these Chinese companies and get what you need is, I guess, part of the reason why the PE will not be much, much higher for these companies. Because let's say Trump decides, you know what, Apple, you know what, other companies, you can buy X amount from these Chinese companies to ease the pressure on the supply chain.
Which it seemingly he just came out and did the opposite today.
Right.
He imposed a 15% tariff on polysilicon derivatives.
I think we need to ask ourselves, why is Microsoft trading at 25 times forward and Sandisk is trading at 5? Because as uncomfortable as the conversation is, like there needs to be a response to that. It has been months now of Micron Sandisk trading at well below the average tech PE. And it's like, what is the street? It's not like the street doesn't understand the story. I mean, it's not like the street is crazy. The stock was at 40. It's up thousands of %. Like, there is a reason for why that multiple is this discounted. And I don't know. I feel like that reason, once again, comes to the fear. Now, if Sandisk rockets all the way back up to 2,500, maybe Figure comes out in the robotic space and says, we think there's going to be another 10 years of memory needed because we're going to have 2 billion robots. And like, you have real evidence of that, because I know Jensen has said that to an extent, but like, that elongates the cycle, which, once again, if the cycle is going to go much longer than what we all think, way more than 4 or 5 years, because again, you got to discount 2 years before the market prices it in. If it's going to be 10 years, then we have like 7 years. Then it obviously should be a $3,000-$4,000 stock, just based on where that future growth is coming from. But if the market doesn't see that happening, then I don't know if that multiple easily comes back.
Because the market is on, I'm not even going to say it's on the other side of the trade, because I mean, this thing has gone up like a rocket over the past 12 months, 18 months or so. But the market is thinking about, okay, 2027, you will have a lot more supply coming online. Right? Everybody is going to increase supply, whether it's a Sandisk, a Micron. Mid-27 is where Micron starts to really expand the supply. And so let's say we are in 2028 and everyone across the board has managed to increase the supply. The demand can still be there, but by then, all of these players, I assume they will be optimizing for efficient memory use, which might mean, yes, the demand might be there, but might not be as big as previously expected. I'm just trying to speculate. I own Micron, Tanner, I own Micron, you own Micron. So this is where the market is now. It's okay, maybe revenues will continue to grow, but whatever flows to the bottom line might not be as much as today, a year from now, 2 years from now. Does that mean they have to trade at single digits PE? That's
Yeah, I mean, even then, though, whenever you look at what Wall Street today, not what they will revise for tomorrow, is expecting net income just for Sandisk to continue to expand. And they've been very conservative on this name, I think, for the most part. Like, the stock had appreciated so quickly, but if you look year over year, they went from doing negative 23 million in net income last year, this June quarter, to this quarter doing 6.9 billion. Negative 23 million to 6.9 billion.
But Tanner, the stock is also up like 30x. It's not like that hasn't been
of course. But what I'm saying is, if this is the new paradigm and they are putting up, as Wall Street's expecting, $8, $9, $10 billion of net income per quarter going forward, you don't even need margin expansion. Let's take a 10 forward PE, and the cycle continues to get pushed out 1 year at a time, and they continue to deliver on that expanded amount of growth. Well, then trade it at a 10 times PE, be a little bit cautious on the side, and let the earnings be able to buy back stock, give dividends, M&A, whatever you got to do. That alone will appreciate the stock going forward.
So that's another question I have. I'm curious if your guys' take in the chat's take. Are buybacks really the bull case here when the cycle starts to peak?
Are buybacks the peak?
No, you just said they can buy back their stock. Is that why you buy Sandisk for the next few years? Because they're going to just do a bunch of buybacks?
Well, no, I think that you hope that an investor buys it before the company has to, but it's a good backdrop of saying, hey, if no one buys Nvidia, then Nvidia will buy Nvidia.
Yeah, but what I'm saying is for a supplier of a commodity to have excess cash more than they know what to do with it, because this is the ironic part that no one's mentioning about the buybacks for the memory companies. They can build new fabs and invest in growth. But then that messes up the supply. Like they're in this game of chicken and egg where like if they build more supply, the demand fizzles out or at least normalizes.
I think so. So Elon talked about this on the SpaceX call. I think a lot of people, whenever they talk about supply coming online, that they think like it's like 5x supply coming online. And Elon said there's a 20% increase in supply. It's not going to change the unit economics. Like,
no, but a 20% increase would definitely change the street's expectations across the board.
Yeah, to the upside. There'll be 20% more sales.
Yeah, but prices would come down.
Yeah, but do you think that's proportionate? That the margins come down 20% as the supply comes up 20%?
No, it wouldn't go down 20%. But the point is there would be like that happening in the chart, which would start to get investors to be scared. So then Sandisk and Micron will come out and say, well, we're buying back our stock. So our EPS isn't going like that. Our EPS is still going like that. And then investors are going to be like, okay, but you just don't want to invest more in supply. So you're going to save the stock by buying it back. I just feel like it's different when Apple buys back their stock because there's something long and sustainable there versus Sandisk.
I agree, but I do still think that it's a good benefit. I think there was a report from, I don't remember the exact bank. It was Morgan Stanley or one of these financial firms that said that once Micron is actually able to buy back stock, right now they're not allowed. By 2028, they could buy back like 40% of their outstanding shares. This is not a 5% buyback. They're talking about buying a substantial percentage of the outstanding shares. That does artificially, or however you want to phrase it, increase their earnings per share. Your ownership in that company drastically increases. And so they can buy back as many fabs, buy as many fabs and increase supply as they can, whatever they believe is good for their business overall. But buyback is still a good lever for these companies that are making way too much cash that investors don't believe will be sustained over time.
I don't disagree with that. I just think perceptually, we've never had memory companies do this level of buybacks. I mean, you're basically talking about buybacks in the hundreds of billions. The only company that we've seen do that at scale is Apple. And like Apple is a bit different than a supplier of memory. So I don't know, like, yes, it will keep the EPS up and theoretically your ownership will increase because the shares will go. But like after those buybacks, what's left? If all the supply comes online and prices have peaked, what are you buying these memory companies for?
Well, I don't think that you should buy it if you believe that there's going to be a significant drawdown in average selling prices and that, over time that their earnings will collapse. I think the people who are buying it at today's prices need to believe that this is going to sustain for multiple years. That we are looking at like a shift in the way that we price memory because our needs are higher. That's how you have to.
Right.
Do you think Micron will still have close to 85% gross margins 12 months from now?
Well, I mean, yeah. 12 months from now, yes. 24 months from now, maybe not. But will it be high 60s, low 70s? I mean, I would still be extremely happy with that. That's,
yes,
almost Nvidia margins.
Correct, but it would still be a big drop, which the drop will be perceived as, but the dollar amount that will flow to the bottom line is probably still going to get bigger just because the revenues increase.
Right.
Way more. But I don't know. The fear is probably that margins will peak. So the market thinks profitability has peaked, everything peaked, blah, blah, blah. But I do still think that revenue-wise, they can still increase. I mean, what's his name from Grok with a Q? Jonathan Ross talked about the fact that, right, if these memory players cannot figure it out, the industry will figure it out. Which
yeah, but like, is that why Elon just signed long-term contracts with Micron?
You can sign long-term contracts with Micron to be safe and still work on a solution to make sure that you don't need too much memory to keep ordering more and more in the future at super high prices. Could be. But yeah, it's a question I guess we will still have 12 months from now, right? Do these companies deserve a 20 times PE or something like that because they're growing super fast or not? Will they get it? Will they not get it? I don't know. For now, even without getting it, they've been going up like crazy over the past 12 months. So it's not like they need it. And I mean, other than buybacks, I do wonder what the heck they're going to do with all that cash.
I also think there's a perception thing. So if Micron had a 25 times forward earnings right now, which is similar to tech companies that they are growing way faster than, stock would be worth $2 trillion. I think companies can get to high market caps, but for companies to stay at high market caps, I mean, there has to be a fundamental positioning of their story over a long time that people really buy into. I think this simply comes down to if Micron gets to 2 trillion, Sandisk gets up to 1 trillion, then you have to believe this memory demand from a price peaking perspective, from a supply demand imbalance perspective, and then from a broader like AI legitimately, Jensen said last week, the semiconductor industry should 10x. If that happens, Micron could be like a $5 trillion company. Like if that really is what takes place. But every time you get a little bit of data out there into the world, last week it was from Asia, Sean Kim from Morgan Stanley saying, look, our checks are showing that these prices are going to stall out by end of 2027, early 2028. There will be more supply. Immediately, you ask yourself, am I going to pay $2-3 trillion for this company at this moment of time? And by the way, it's okay for things to be a trade. Like some things are not meant to be investments. They are meant to be trades. And these have been amazing trades. And I think there's more juice in the trade. Don't get me wrong. Micron probably should be $1,500. Sandisk probably should be $2,000, which means the upside here is still pretty damn good if it happens within the right time frame. But if the street just doesn't let it get back there for whatever reason, these fears that we talked about, which might not be that meaningful as the overall sector grows, then I think that's why we'll see the prices kind of stay at this level.
Yeah, I think it, like you said, it's okay to have this company as sort of a speculative position. I don't even own Sandisk. I own Micron, but this is not a Nvidia level position for me. It's much smaller of a name. And it's okay to not have the exact answer. Like Sandisk is being priced as if people do not know what's going to happen next. There's a reason why Costco holds the forward P that Costco does and why Sandisk holds the forward P that Sandisk does. And you could likely make money on both or lose money on both, but
This is what Gavin Baker just came out and said about the memory stocks.
Let's just say Google breaks an LTA. There's an oversupply. I'm making this up in 28, 29. They break their LTAs. Well, if they're breaking their LTAs, it probably means your oversupply, prices are coming down, and then capacity naturally contracts. Well, like, what do you think is going to happen to Google's allocations? And then this is a cyclical industry, and oversupply is followed by undersupply. What do you think they think is going to happen to their allocations next time? So I just think, given that this is like the axis around which kind of everything is revolving, man, like you might blow up your entire business and your franchise by breaking an LTA. And that was never the case before. Apple, who cares? They're buying, they don't have a competitor. They're overwhelmingly the largest purchaser. They know they can do whatever. This is, going back 3, 4, 5 years. They know they can do whatever they want with no consequences because their volume is so big, that even if they like super screw Hynix, Micron will of course take them. This is just different. You have at least 4 players. Then you have all the startups. You're an investor in Etched. And if you break an LTA, and that they just say, okay, fine. You know what? Great. You broke the price agreement. We're going to break the volume agreement. And, screw you. We're going to give the volume to your competitor. You just lost share, So I think I think, NVIDIA's dominance, I think, is
what a terrible time for that to cut out.
I think it's a fair argument, and that's why the LTAs are very strategic. And I don't think the hyperscalers are going to break them unless the hyperscalers think they can get better pricing. Like you break your long-term agreements if you think, dude, why am I paying 80% margins to Micron here because I could be getting 70% from SK Hynix. So, so it's like, but again, that depends on the nature of the actual supply-demand imbalance of the entire memory sector. So I just feel like to own these names right now at these low PEs, you have to be very confident the cycle has not peaked or that the perception of the cycle is not peaking, which I think we can kind of say, yeah, it hasn't, because there's a lot more room for AI to grow, which is why these stocks are at very attractive valuations. But once again, if we're trying to make sense of why the prices are not reflecting what they obviously should reflect if you were to pay a regular price to earnings, not even at 50% of a regular price to earnings, not 5 times, but maybe 10, 12 times, these stocks would double. And that's just not what's happening right now.
And Micron is still expected to 3x revenue over the next, fiscal 28, they're expected to generate over $260 billion. They've done $90 billion over the last 12 months. So I don't know. It's a very, very interesting story. And again, like Tanner said, you don't have to make these types of names 20% of your portfolio for it to actually make sense for you.
Yeah.
Yeah. I don't think there's going to be a lot of LTA breaks. I didn't really think about that from Gavin's perspective. Like, these companies are playing multi-generational games. They're trying to win way past what the CEO's timeline is. You're not going to be breaking your LTAs. You have a long relationship with Micron way past this initial cycle. That too, I would imagine that a lot of these are take or pay contracts, and you're going to be paying with or without taking the chips regardless. So Sandisk is going to be pretty insulated, and so will Micron.
Yeah, and theoretically, again, to your point, if supply is growing, demand might just grow even further than what supply is growing. So that keeps the dynamic in place. Look, NVIDIA's results will be pretty telling for how much the overall semiconductor index demand continues to persist. And once again, if there's not massive innovation in memory over the next couple of years, then theoretically, those long-term agreements should be followed through. Those margins should be somewhat stable, and these stocks should ultimately re-rate higher. So I don't think it's a question of anything that's bearish around the actual fundamentals of these companies. It's just when we're trying to analyze why the stock market is not giving them any premium compared to what they had even a month ago, it goes back to the boomer bust cycle being fake or real. And maybe the market switches their mind next month and we get back to much higher premium.
You know that Nvidia could potentially post 100% year-over-year growth?
They will post 100% year-over-year growth. And I called this 6 months ago. It's going to happen. Don't even put it into the sphere that it might not happen.
No. I'm just saying it's probably going to happen because the estimates are at 96.5% year-over-year growth. So it's crazy to think that they can grow 100% year-over-year, post over $90 billion in revenue.
Yeah. Do you think the stock will go up if they do that?
Depends. If we're at 250 by the end of August, maybe not. If we're back at 200, probably yes.
Yeah.
What happened with Google today? What's going on there?
Demis
Some
stepped
people
away.
jumping ship.
Yeah. Demis, I think, is on the board now, or he's an advisor, but he's not leading DeepMind anymore.
I don't get that, dude. That's weird. That guy loved his role. And Nikita stepping down at X, that's also weird.
Mm-hmm.
You had a lot of high profile people changing the roles. By the way, the CoreWeave director sold 13 million of stock today as well. Also, Jane Street owns 5% of Sandisk.
Yeah.
That was disclosed after hours. So honestly, all this theorizing, it's probably Jane Street just messing around after hours. If we were to give a real answer, it's most likely that fund just playing with the stock review.
Did you listen to that song I sent you, Amit?
I did. It was quite a good song.
Be honest, right? I feel like you're lying to me. Did you listen to it?
No, I listened to it. It was good. It got me hype.
Are you doing that thing where you interview people and you go that's a good movie? Are you doing that?
No, genuinely, I heard the song last night. It was good.
All right.
It was a good song. I prefer Drake, but
okay.
But is it another Green Day type of thing, or is it?
No, it's like it's another rap song. It's like a hardcore, heavy rap song. It was a good song.
No.
Just wouldn't listen to it as much as Drake. Trump, we are talking with Iran. Let's see what happens. I'd rather make a deal. We are talking. Let's see what happens. We're taking a lot of oil from Venezuela. Iran respects us. Iran cannot have a nuclear weapon. I would rather make a deal with Iran because I don't want to kill people. Iran called me and said, please don't do it. They respect us. We love Elon.
Is this a tweet from April, from June, from May, from July, or from 5 minutes ago? Which
it's a summary of his campaign speech in Nevada just now.
It's copy pasted.
It sounds like he's been saying this for a long time, but okay. Weird after hours. AppLovin, little recovery on that one, but still down pretty bad. Dave down 15, AppLovin down 16, Sandisk still down 6, Figma, I don't know what the hell they said, down 17, Fluence down 25, Zillow down 8, Symbotic down 5. I mean, the only thing that's up after hours is Oxy, Redwire, Melly's down 4, Dutch Bros down 12. All of these were up 7 to 8% at the initial reaction. Fastly went red. Chime, Soundhound, and Oxy were the ones that survived today. Axon also down 7.
I looked through Chime's quarter. It looks great. Accelerating growth. New customers coming online. It's essentially a... it's like a SoFi for non-affluent people. That's my polite way of saying it. And they're growing very well.
I assume Mercado Libre is down purely because margins are down because they're growing like crazy.
Correct. Yeah, growth was insane. Gross margin fell. Net income margins fell.
Okay, the usual.
The usual. And for anyone that doesn't know, the opportunity for them to juice margins is their call. The day that they want to increase margins would just be, okay, let's turn down the gas a bit, and their earnings would skyrocket. This company is doing very well. Mercado Libre.
Oh, Mercado Libre. Yeah, 100%. Yeah, a lot of these names are executing very well. It is August. We had 2 green days to start it. August tends to be a little weird. Would not surprise me if we rebound tomorrow, but also not surprise me if we just hit all-time highs. Market's like, all right, we need to give back some of the gains that we got. But it's
the moves have been
time.
The moves have been extremely, like a week ago, we were all down God knows how much on a lot of these names, and then a week later, everything's back up. We're near all-time highs, etc., etc. Leopold blew up a week ago, right? So
I'm sorry. Is Salesforce down just because HubSpot's down? Is that the reason why?
I think it's down because Figma, HubSpot, all the SaaS, ServiceNow, Palantir is getting literally everything in SaaS, and Semi is quite
like a direct CRM competitor, I think.
Wow, Hub's 21. We looked at it; it was down like 7. Yeah, that's probably why.
Now Salesforce is down 5, and the chart almost looks identical. Well, obviously, one's a little bit more
ServiceNow is also down 4 almost.
Yeah, that's got to be it.
Yeah, but then Nebius, CoreWeaver down because of sand. Like this is, the market's going back to like everything goes up, everything goes down together, not different sector. I mean, literally everything was up today, green. Semi, software, hyperscales, everything now down after hours because of Sandisk and the SaaS names getting hit.
Yeah, man.
Guys, today's I was just saying today's Wednesday, so there's no technical Tuesday. I remember Jason is traveling, so people really love their TA, bro. Everyone's like, no, it's male astrology, and everyone's like, where's technical Tuesday? Today's Wednesday, so we'll have it next week.
Yeah.
Fluence down 30%. Look, SaaS had a good week and a half. It's got to give some back. Someone said, why did Palantir not go down as much? Do they have a flawless quarter? I think the answer is yes. Like literally, you have to have a flawless quarter in this market to not have any. I guess Figma, Fastly, there's some flaw that the street found, which is why it flipped red. And that's why if you took an earnings gamble on Palantir, it really paid off because like a 30% move was a direct result of pure flawless execution. And not every company's doing that. But if SaaS starts to take a hit, then Palantir might take a hit as well.
AppLovin starting to climb back. We're still down 15, almost 16%, but I don't know what was said on the earnings call, but that one can be swayed during the earnings call. I've really noticed that. Adam's come out and talked about his predictions of the future, sort of given, you know, non-direct guidance. and Wall Street has definitely responded to that. We'll see where this opens up, but it could definitely be very different than where it's sitting at right now.
Someone said their Axon platform had a technical issue with distributing the ads, and that has been resolved. So that also could have been resolved. Also, while we were looking at numbers, we had the one guy talk that you kind of don't want talking, and I'm not talking about Trump here. It's this guy, and he ended up saying some stuff that, once again, the market might be a bit afraid of.
You recently told our former colleague Wilfred Frost in a podcast that you wouldn't be a buyer of treasuries, you wouldn't be a buyer of equities at these levels. Why is that?
The treasuries, I just said. I like already embedded in the marketplace, there are people's assumptions about inflation. My guess is that there's a higher odds for that than the other ones. Equities, I should have said it that way. There are always equities you can buy, but asset prices are high. So stock prices, however you measure them, in the top 5 or 10% of all-time measurement. But at any point in time, a stock could be a good buy. And that's true globally. So you look around the world. No, you shouldn't speak generically about stock prices. So.
A lot of people have criticized market structure right now, levered ETFs, positioning, and so forth. How concerned are you about the proliferation of levered ETFs on single stocks?
Well, leverage ETFs on their own are quite small. So I'd say not really. But there is what I call market leverage. Prime broker leverage, hedge fund leverage, ETFs leverage, treasury arbitrage leverage. I'm double counting some of that. So the market leverage is pretty high. Now, of course, we manage it client by client, and so you've seen disasters that, people lose a lot of money, nothing really happens, they just unwind it. But when you have that, you do have a higher chance that something will disrupt the market in a quick way and people get rattled over it. And so that is a little high. And I just saw the Fed today is going to be looking at private credit. Again, I'm not worried about that systemically, but there may be some issues that the Fed should be looking at.
Going back to the leverage that you're talking about, obviously a big high-profile example of that was situational awareness last week. JP Morgan was one of the bigger prime brokers to situational awareness, which was a now collapsed AI-focused hedge fund. How much more stress do you see out there?
It's still there, by the way. It's that they unwound all that.
Smaller form.
I think that market handled that very well. But when I talk about leverage, margin debt is the highest ever been. There's a lot of margin debt you don't see because it's not called margin debt, it's called other things. So it's that kind of leverage, some hidden, some public. We see a lot of it, and it's high. It's not, I'm not going to say it's systemic high, it's going to cause a disaster, but it's high. The worst thing is if you have actual losses in the marketplace, which would happen in 08. It wasn't the leverage, it was the amount of losses that were going to be realized on mortgages.
All right. So a diamond after hours talking about excess leverage in the system. I think we got a lot of it out in July, but there's probably still a decent chunk of it left in the market. Okay, I think that's it for us, folks. Tomorrow we still have a bunch of earnings as well. In the morning, Celsius, D-Wave, Oster, Datadog, Warner Brothers, Unity, Constellation, Peloton, Hertz. After hours, Airbnb, Trade Desk, Lyft, DraftKings, Red Cat, CleanSpark, Rocket, Texas Roadhouse, Dropbox, Instacart, Twilio. There's a lot of AAOI, tons of companies tomorrow. So
yeah,
we'll have a lot to discuss tomorrow as well.
Really excited to see what Datadog puts up, but no money on it. Just very interested for the software names.
I'm interested in Celsius. The amount of people that are saying Celsius is the buy here. One of my friends yesterday was saying, he's like, dude, this is free money at $29. I don't have a position, but I'm curious if they can reaccelerate growth. And the stock was $100 a year ago. So
Datadog is at all-time highs.
Datadog's at all-time highs. They position themselves very strongly in terms of the perception of them and software in general for AI infrastructure.
If you're a girl in your 20s or 30s, reach out to Celsius and they will send you cases for free constantly.
Did you try it out?
Yeah, well, not me. My girlfriend and her friends get sent cases of Celsius for free every month for God knows what reason. She doesn't even post about it. They and new like Alani new.
Yeah.
They just send girls cases of free drinks. So that's their
That's why the
marketing
stock is down, bro. They're losing margin on all these free drinks.
Yeah.
All right. That is it for
5
us. Thank you all
hours
for being
spinning.
here. Yo, Tanner, you did 5 hours straight. Being a champ, dude.
We're going full time now.
Amazing. All right, guys. Love you all. Thank you for being here. Again, little ugly price action with Sandisk. I really do think nothing in the call was bearish. It's just, once again, if things fall after hours, this one takes a hit. Super high beta. It was down 5% of the day. It could reverse 6% tomorrow. Memory is obviously undervalued. But just trying to analyze why the street's upset, it feels like, once again, this dynamic of cyclicality or not cyclicality will go on for a while until it's very obvious the cycle is going to last for a long time, which I feel like is obvious, but as of now, the street's not acting like that.
Thank you, guys.
Thank you, everyone. See you guys tomorrow.